All right, guys, here we go. I'm just going to check to make sure we are live on these different platforms. Test in the audio. Okay, it looks like our audio is not working on. Okay, it looks like. Oh, it is working. Let's go. All right. So I'm going to check YouTube real quick, and then we're just going to assume that we're good on Trovo, Kick, and the others, because can't leave you guys waiting too long here. So here's what we will do. Okay, it looks like. All right. I think it's working. All right, so guys, we got a massive stream ahead of us. Absolutely massive. And so before I even dive into the news, I'm going to walk you through what we got planned, okay? So the stream today, we're going to be covering breaking news around Trump's White House dinner, the rise of agentic AI. Some people are talking about downloadable employees, and then going to be talking about Samsung versus iPhone 17. So that is coming very, very soon, within the next 10 minutes. But what is more exciting than what you're about to see in the next 10 minutes is what comes after. So what comes after, we are going, I mean, this is startup world. If you're trying to build $1 billion company, there's a lot of things to do. Yesterday, we ran into a lot of great ideas. And some of those ideas we realized, hey, we need a little bit of help, need a helping hand. So live on stream, you saw me line up potential people to try and come and help out with the work that we're doing. But today, what is important for every company? Making money. And if you're trying to grow quickly, you got to raise money. So that is part of what we're doing today. We're going to go through that process of what it takes to raise money. On a previous stream, we built our pitch deck. Now we need to build the data room, basically like the citations, the supporting material for the pitch deck. And we're going to learn how to do it in the best way possible. I'm going to do the data room. I have 30 minutes built in right after the news, which I can guarantee you is not nearly enough time, but it's going to give us the foundation needed in order to do the rest of the work later on to finish the data room. So we're going to go through some data room modules, lay the foundation from an education point of view on what needs to get done. Then I'm talking with my co-founder on stream for a little bit. We're going to talk through some ideas for MyWorker. Basically, how do we take this company, level it up to the next level? Then there's a number of messages we got to get back to. Investors, customers, people on LinkedIn. We have a big backlog on LinkedIn. This is one of the reasons why we're trying to bring someone on to help get through these and stay on top of all these leads. So at the end of the day, until we get that person in and onboarded, I'm taking care of this. So I know a couple of angel investors that are waiting to get scheduled. So I will be getting back to them on stream. And then after that, we've got a call with someone who is the head of partnerships at DevRev. He used to be a venture capitalist. Now he's building out their tech ecosystem. And there are a number of different ways that we're looking to collaborate with them and with MyWorker, basically. And then, I mean, guys, at this point, it's only going to be 2 p.m. There's so much going on. Uh, I blew over this. This is another big piece of news. So I've actually got a board meeting for my last company, SAS Mining. Now that I do not believe I'll be able to fully put on stream, but during that board meeting, just so you guys feel like you're a part of it, because I don't want you guys feeling left out here, I will play a video that is a talk from one of the guys who I'm going to be in the board meeting with, and he's going to be talking about SAS mining. So even though it's not the full behind the curtain of the board meeting, you guys are going to be able to feel like you're a part of it, you know? listening to the CEO of SAS Mining talking at a conference. And it's actually a very interesting talk. Arguably, this might be even more interesting than the board meeting that I'm going to be sitting in on and a part of. So fast forward to 2 p.m. What are we doing by 2 p.m.? Well, at 2 p.m., we've got another customer call. And you might be thinking, okay, Will, how do you have so many customer calls lined up? And I'm telling you, because MyWorker is amazing. It's an amazing product. And to be completely real with you, I can't even keep up with all the customer calls that we could line up. And so that's why we're going to need to bring someone in, handle all this scheduling. But yeah, we got a customer call at 2 p.m. and then on to 2:30 to 5. This is where I think that we're going to really be able to dive into that deep work, try and knock out that data room. And that's going to put us in a good position to actually be able to follow up with all these investors that are so excited about such an amazing company, MyWorker AI. So that is the plan up until 5 p.m. Now, it's action-packed, as you can see. There's a lot going on. It's getting hot in here. I'm going to have to turn on my fan. But as you can see, there's so much going on that there's so much to do, even on top of what we got covered here up until 5 p.m. Had a busy morning before we even hopped on stream here. So with that said, we might go past 5 p.m. Who knows? Who knows? And there is a potential secret appearance later that is not on here, that depending on how the day goes, if we're feeling up for it, I'm going to drop it. And you know what? I'm going to tell you guys later in the stream. Once we're halfway through the stream, I will drop this additional nugget of information that is coming later. So you guys are in for an amazing, amazing stream. So let's dive into it. Let's dive right into it. And I actually did a little bit of research in here right beforehand. So we're going to go right into the news. Right into the news. So let's go with the facts here. I'm reading this for the first time, by the way. So you're going to get my raw reaction. Before opening these streams, I just have ChatGPT do the research. Then you get the raw reaction. So here we go. President Trump is hosting a high-profile dinner in the Rose Garden, newly renovated, for leading tech CEOs. Talking Tim Cook, Zuck, Gates, Sam Altman, CEO of Google. I always mispronounce his name. Musk. Okay, so politics meets product, guys. This isn't just a photo op. It signals a shift in tech government alignment and sets the tone for AI education and regulation. Okay, these are some talking points that it's given me. I agree with that though. So we'll pretend that was my talking point. The power of exclusion. Musk's absence. Oh, Musk was absent. He was not invited. Wow. This shows the relationship in tech as much as optics for influence. So guys, seems like there might be a little bit of beef still. I mean, Elon Musk, I think, love him or hate him, he's a pretty influential tech figure that you would think would be at a tech dinner. He was not invited. So that is very tough for him. So, I mean, guys, feel free to share your thoughts. What do you think? Do you think that, there's a lot to weigh in on. Does Musk's snub matter for the future of AI collaboration? Who knows? How does the conversation evolve in DC? I'm gonna turn on my fan real quick, and then we're gonna go to the next piece of news. Alrighty. All right, downloadable employees. This one, I once again, I have not read these pieces of news, but this one seems very eye-catching. So let's see. Agentic AI. Autonomous systems that act like downloadable employees is being called the workforce revolution of our era. In the UK, 78% of C-suite executives are already using them. Heathrow's AI. All right, is this a promo? What's going on here? All right, agentic AI. autonomous action. I've actually got a lot of thoughts on this, so I'm going to breeze through the talking points and share my thoughts here. But you could think about the questions. If you could download an AI teammate, what would you have them do? And are there particular skills that you don't think are going to be replaced by AI? So here's what we got. If you know me, you know that I'm extremely, I don't know what to call it, bullish, optimistic on tech in general. And I do think that you're going to have a completely rapidly changing workforce. And I think it's only going to pick up over time. It looks like it's starting to get covered in the news now. And I think that no matter what no matter what happens in the conversation, you do have raw facts. And the raw facts are you have billions of dollars going into the infrastructure that makes these models better. You've seen massive leaps in intelligence of the models when you just put more compute into them. And over the next 3 years, the hardware and the models are just going to be way better. So what you're going to be able to do from a business perspective, however different companies wrap that intelligence and utilize that intelligence to complete work in the workforce, that is somewhat unknown. I've got my own thesis on that, but you're going to see more and more automation coming. Whether that's a good thing or a bad thing is another question, another point of discussion, but I believe that it's happening. So we can either ignore it or we can be real about it and try and figure out, okay, what's the best path for you to take? What can we do? Okay. And now the final piece of news. We've blown through this news so quickly. And although it's sad that it's almost over, we have something very fun on the way next. So, final piece of news. All right, key facts. So Samsung preps AI-heavy Unpacked event before iPhone 17. Samsung's Galaxy Unpacked is set for September 4th. That's today, September 4th, just before Apple's iPhone 17 launch. Expect AI-powered Galaxy S25 triple camera tablets, Galaxy AI experience teasers. Okay, so timing is big here. This is a big one. AI is no longer a perk, guys. It's a competitive differentiator in mobile ecosystems. All right, this is a good question. Feel free to toss it in the chat. I'm curious. What AI feature would make you switch phones today? Is there an AI feature that would make you switch? If there is, I'd be curious to know. And then, I guess going off that, what would make a new phone stick? Is there an experience, a user experience that would get a new phone to stick? I don't know. All right. So we ran through all that very quickly. Oh, this was saying how we should have structured it. We just went through it. I guess we should have done it in the way that it recommended. But yeah, look, we're way ahead of schedule. Way ahead. So now we're going to actually have a little bit more room for our next segment. Okay? So this is going to be great. And for all you typing in the chat in different platforms, thank you for the engagement. This is good. All right. So while I pull up the next area we're diving into, and this is going to be the data room segment. So to give a quick preface before I pull this up, when you go and raise capital, there are a couple of different types of investors you can raise from. You might hear about angel investors, family offices, funds, venture firms, like venture capitalists. At the end of the day, you're speaking with an investor. Investor is there to make money. They're going to have different goals in terms of the type of investments they want to make. Maybe some person, I mean, if we take extreme examples, a real estate investor obviously looking at real estate. Someone who is an early stage tech investor who's trying to invest in a unicorn might be investing in AI, B2B pre-seed, right? So keep in mind, both of these investors are there to make money, but they're going to underwrite your investment in very different ways. The real estate investor might be looking for, they're not looking to 1000x at 1000x opportunities, 100 to 1000x opportunities. Whereas the venture capitalist that is going into early stage tech, they're looking at making big bets on companies that could return the size of the whole fund. They're looking for the Ubers, DoorDash, like, Facebook, think of any of those companies, they want to get in early. And they accept that you're going to make some wrong decisions. You're going to back a lot of companies that end up not making it, that end up going bankrupt. So all of that's relevant. All that's important. Now, who are we going after? What are we doing? How does all this tie in? So we're going after the venture capitalists and angel investors. These are investors. An angel investor is someone who they're also known as high net worth individuals, but it's someone who has a lot of money. You just think of it that way. Someone who's got a lot of money, and whether it's for fun, whether it's for access, whether it's for just trying to make good investments on their own time about something they're passionate about, they're going to go and invest in startup companies. Those are angel investors. Maybe they'll write 25K check, 10K check, 50K check, potentially 100K check. So that's an angel investor. A venture capital firm, they've got a slightly different structure. Although they're also looking at some of these early stage, we're going to be going after the ones that would invest in us as a company, that are looking for investments like us. The difference is where they get their money from. A high net worth individual, they've made their money in a whole host of ways. They own the money. They're the decision maker, the angel investor. With a venture capitalist, they got their money in a slightly different way. What they did was they started a venture firm, and they went and found investors to give them money. So the venture capitalist who is making these investments reached out to limited partners, but their investors, LPs, I'm gonna call them LPs, their investors, LPs, to give them money, and they made a deal with them, the venture capitalists. They made a deal with the LPs saying, hey, you give me this money, I'm going to invest this capital into startups, and then I'm going to take a fee on the total amount, like 1% to 2%. So, if they raise $100 million, take 1% to 2% for our operations. And then if we make money, then we're going to keep 20% of all the profit. So if we make $10 million on the 100 million, which isn't very good, then we're going to keep $2 million, so 20% of that. And so there's a different incentive mechanism. These VCs, they really need to find the big winners, and they're okay with hitting some duds. And VCs, they've got to run their diligence. That's why they're going to ask for your data room, which is what we are working on. They want to make sure that everything you're telling them, the story, the team, everything that you're presenting as a package for them to invest in, they want to make sure that that all checks out. And to be honest, I've made some data rooms, but right now on the stream, it's going to be the first time that I've been doing it with the guidance of like pros. So there's a top accelerator that we got into with MyWorker called Pegasus, and there's a number of different videos on how to best approach a data room. And previously I'd only approached it in my own way, but this is going to be super helpful being able to watch all this content. So I'm going to be learning as you guys are learning. We're going to learn together. It's like we're classmates. So this is going to be great. I'm fired up. So with that said, just so you guys aren't bored as I'm pulling this up, I'm going to leave the stream up. I'm going to play some royalty-free music so we don't get banned, because that has happened in the past. And now I'm going to pull up the videos. I always have trouble signing into this account. I'm not sure why. Also, guys, if you're enjoying the stream, comment, like, subscribe. Honestly, if you're not subscribed, then we gotta fix that. You could go your entire life not being subscribed. That would just be a travesty, especially when it's not going to cost you thousands of dollars to subscribe. It's actually going to cost you a lot less than that. It's going to cost you $0, $0.00 to subscribe. All right, guys. So we have one thing that we have to do and complete before we're allowed to access these other videos. So I'm going to do that real quick, but you guys can keep looking at the schedule. Please enjoy. And also, as we're going through this, let us know if there's anything that you want to see me work on in the future. All right, I'm gonna work with ChatGPT on this other screen real quick just to get some of this stuff done before we can access the module. All right, so we need to answer these questions, fill out these questions in the best way possible within the homework for Pegasus. So could you fill these out or ask me any questions that you need answered after you fill them out to make sure that we complete them properly. So guys, you guys might, I'll just pull this over so you guys can see. I'm not sure if you guys like school, but school can be very boring. And now you've got AI that can do all this for you. But anyway, we're working on filling out some of this information. We got to fill it out to move on to the next module. To be honest, I'm pretty far behind on the homework. It's really bad, but we're catching up, guys. We're catching up. We're about to do the homework together. And while these answers are loading, I'm going to set my alarms to make sure we don't miss any of these calls. So 11:30. Actually, you know what? I'm just realizing something. 11:30, I've got a customer call. And by customer call, I mean a call with someone from SAS Mining who's going to be part of implementing this in SAS Mining. So let's set these alarms. So 11:30, 12, 1, 1:30. All right, we got our alarm set. This looks great. As a quick heads up for some additional information, right now we're charging $199 for the first month of the product and then $499 every month after that. That comes with with 5 mailboxes. Our total costs all in to service a customer like this is about $100 to $150 depending on their usage. Our unit economics can come down over time as we build in some more data integration partners that are more cost competitive. Yeah. And then any other information, I'm not sure if you think we should include this, but we've been thinking about exploring a low-cost option as part of our PLG motion that would be $19 a month initially, but that would just give full access to the product, but not the ability to actually launch campaigns. So that's another option that we're thinking about doing, and the unit economics cost of that are very, very low. It would cost us like $5 to service them if we included a mailbox. But if we don't even include the mailbox for them, it would cost us like under $1 per user if we put them on that $19 month plan. So yeah, with all that additional information, feel free to come up with the best final answers for these questions, or ask me if there are any other things that we need to provide information on. All right, guys, we're just doing our homework right now. I'll actually explain how it works while this is going on. So these other questions I'm answering are about the unit economics of the business. So what are unit economics and why is it relevant to the business model? Well, this is the key driver of your business. At the end of the day, you got to understand how much you're making per unit sold, how much you're charging, and how much it costs you to service a customer per unit. So the unit economics, they need to work out. It needs to be, obviously it's not a viable business if you're selling something for $10 and it's costing you $50 to make and deliver. So this section that we're filling out now is related to unit economics, and the unit economics for MyWorker are good and they work, and this is going to be shown in these answers that we're having ChatGPT answer. Yes, I could probably go into more depth answering these questions, but the big reason why I'm trying to finish this homework right now is so we can actually unlock the next module that's needed for everything that we're going to do on the stream. So I'm just trying to get these answers done nice and quick. If you got any questions about any of this stuff, feel free to toss them into the chat. But overall, talking about the unit economics of MyWorker, in terms of delivering the service, like it's an AI sales team as a service, but all the technologies that we use to deliver that product, we're paying for data, we're paying for the large language model like GPT costs and Claude. We're also paying for the email inboxes for you. We're also paying to warm up those email inboxes. We're also paying to clean the leads after we buy the leads. We're paying for sequencing. So all of these different things that make our product possible, there are costs associated with it. So that's what this homework question is about. The question is, how expensive and how much are all these different building blocks and pieces that make up the cost to deliver your solution? And how much are you charging for the solution? So in this case, the pricing that we're looking at right now is the $199 for the first month, then $499 every month after that. And that leaves us a buffer with the pricing that the amount that it costs us to serve those customers. We also are looking at potentially having a much lower tier that lets people in the door. And yeah, that would be the $19 plan. I actually might have to double check that unit economics cost for the $19 PLG. Might be wrong, actually. I know that I'm on point with the... All right, guys, so this is why this is actually important. I'm going to have it do a little bit of research online. All right, thank you so much. This looks good. The one piece that I think we actually need to do a little bit of research into is how the breakdown looks in terms of the total cost to deliver the product for these different packages. So on the $1,000, or for the larger plan, that's $199 for the first month and $499 each month after that. That comes with 5 email inboxes. We purchase the email inboxes and we warm them up. And then we have to pay for all the data costs, all these other things associated with that, estimated at $100 to $150 a month. We clean the leads. We have a number of pieces built into the background, and we need to fully break that out in terms of the unit economics. And then in particular, I might have been wrong on the PLG unit economics in terms of the unit costs. The unit costs are basically the same as the big plan, except we're removing the inbox costs and the lead data costs. We're also removing that in large part because someone's not going to be able to send out 1,000 or pull 1,000, buy 1,000 leads on that plan. On that plan, we're likely going to keep it to somewhere in the ballpark of about 300 leads. And with those 300 leads, actually maybe a little less. Let's go with 100 leads. And with those 100 leads, like we're not buying the email inboxes, so they can't send out the emails. So with all that said, could you please dive into the different unit costs for delivering this and then break that all out, and then we can do a snapshot of the unit economics from there? All right, that seemed like a very messy prompt, to be honest with you, but I think it'll get what we're getting at. I'll turn the music back on for you guys. I just realized I was not recording the stream. All right, we're recording now, though. We're recording now. All right, we got there. So once again, what are we doing? We're finishing the unit economics of MyWorker's business model. We're going to submit that homework. Then we're going to unlock the full next module of courses that we're going to watch together. It's going to be amazing. These are phenomenal courses. So we are in for a treat. And then once again, just so you guys can take a look at the schedule, this doesn't include a call that I have at 11:30. So I'm speaking with one of the heads of sales at SAS Mining at 11:30. Then I'm speaking with my co-founder at noon. Then I'm speaking with, or actually then at 12:30, I have the board meeting. Let me see. Depending on how long my call with my co-founder takes, we're going to use that interim time to follow up with some angel investors and people on LinkedIn. Then I got the board meeting at 1 p.m. where you guys are going to be able to watch a keynote from our CEO while I'm in that board meeting. Then I'm hopping on a call with a previous VC who is now leading partnerships for the DevRev ecosystem. And then we have a customer call. And then we're going to dive back into the Pegasus homework, try and finish out our data room. And then ideally, we're going to be pretty much all set in order to go and begin approaching investors. And we do have some interest from investors. So the good news is we've got a good foundation, but there's these pieces that we got to finish up. And that's what we're doing right now. All right, let's see here. All right, let's see how this broke it down. $1 to $3. Take test. All right, so this is saying it gave us two options for our PLG plan. One is with 0 email infra, light, large language usage. I'm not sure if this is going to give much value for the $19, but okay. And then cost of goods sold is $132. PLG. All right, so our margins are at 42 to 68% basically. It's actually not all that great. Maybe we just start with the Explorer. All right. No usage. All right, this looks great. Let's go with finalizing those answers that we were working on before. For the PLG $19 a month plan, let's go with option number one, but let's build in up to 50 leads on the lead data polls. In terms of the $199 to $499 a month plan, let's assume that the usage on average is anywhere from 700 to 1,000. Let's assume the usage is anywhere from 500 to 1,000. And then we can do the calculations from there. So now I think that we have everything ready. Let's create the best final answers for these sections. Should we apply to YC today? Maybe we add that to the agenda for today. I think today's the last day for the late application. All right. Let me submit this. So 199, 5 mailbox. We got more questions we got to answer. Dang. Now let's answer these questions in the best way possible. Oh. All right, let's see what we got here. Oh my gosh, there's so many freaking questions. Unbelievable. All right, now let's answer these questions. Yeah, let's do these now in the best way possible. God, this homework is draining. So boring. I thought it was difficult to sit through school when you had the internet. I cannot imagine how frustrated kids must be now that they have ChatGPT and can answer any question. And you've got to take these tests with rote memorization. All right. How's it going, guys? All right, guys, as we wait, I'll give you guys a quick idea of what we're doing here. So the questions that we're now answering are: what is your lifetime value? Demonstrate how you calculated it. And are your metrics improving, declining, or remaining stagnant? So we're gonna have ChatGPT, and that's what it's doing right now. It's calculating all of this. And from there, we will see what it says.
This for the players out there. Check out this dope shit, man. Players another dollar, we getting paid. Another day, another dollar living in the bay. Hustling for my baby, trying to play in my escape. I ain't staying in the matrix where they trying to get my papers. Players another dollar, we getting paid. Another day, another dollar living in the bay. Hustling for my baby, trying to play in my escape. I ain't staying in the matrix where they trying to get my papers.
Okay, these are good. The one thing is I think that these answers are good. I do want to add a little bit of additional context that earlier on, our metrics were experiencing higher churn because our product was still improving and needed to get a lot of things right. Now our metrics are continuing to improve, our churn is declining, and yeah, things are improving overall. And then in terms of lifetime value, I think that the way that we're approaching it here is good. I think the lifetime value is a little high, though. I would assume a lifetime value that is, around 12 months, and then we're going to be targeting getting down to a monthly churn that's lower. Of course, we'd want to hire. I guess maybe the best way to approach this is the metrics just don't look quite as good as they are right now. I don't have the exact numbers, but in front of me. And just in the interest of time, I don't want to pull all those up right now. We can dive into it later in the data room, but just because we need to submit this in order to move on to this next phase, I would just say, in terms of customers we added in the past week, we've added 2 customers, not 3. And then we haven't yet launched our PLG $19 tier. And then, just the overall LTV metrics, I think we need to taper them back a little bit. But overall, I think the answers are good. Let's create the final version. All right, so ChatGPT's thinking. Let's see how we're doing on the schedule. All right, so we've been trying to, it's turned into a little bit of different homework. Instead of diving into the data room, we're working on unit economics, things like that, which is fine. This is important. And actually, in order to submit this module here, we got to fill this stuff out. So it's good that we're doing this, I guess is what I'm saying. Let's see. This seems really aggressive in terms of the fully loaded customer acquisition cost versus the feel like, I guess at the end of the day, because the company is still new, it's kind of hard to get the exact lifetime value. We're assuming 12 months. All right, we're just gonna toss this in. Can't let perfect be the enemy of good enough, you know? Thank you guys. Kiran, Vishnu. Appreciate you guys tuning in. So as a heads up, we're doing some homework for the accelerator right now. The company is called MyWorker AI, and we are in a top LA accelerator. And we're getting assigned homework. So we're doing the homework. All right, here are the next questions. Let's answer them in the best way possible. And then we're gonna go through and actually go through the answers. But yeah, just so you guys know the company we're working on. This is one of my companies. This is the one that we're filling out the homework for. It's basically an AI sales team as a service. Yep, so this is the product. All right, so let's read through. So this is the first question, or I guess the next question we're answering. What's your lifetime value and customer acquisition cost ratio? I feel like this is too high. Damn. I guess I already submitted the last. All right, I'm gonna say churn and LTV. All right, we're gonna change these answers a little bit. So let me read the answer I came up with for the second one. What specific actions can you take to enhance underperforming metrics? If churn and LTV, 7 days to first meetings. Deliverability, spam. If customer acquisition costs and payback slip, tighten ICP persona scoring. If gross margin is light, shift sourcing to amplify bulk discovery. Okay. All right, we're gonna improve these answers here. All right, I'm catching up on the chat, guys. Let's see. Yeah, guys. Also, for those of you guys joining, because we got some new people joining right now, I'm gonna give you guys a quick update. We've got an awesome stream ahead. So I'm just gonna pull this up real quick, and then we'll finish what we're working on. So you guys missed a little bit, but thankfully you're here now. So I'm gonna pause this music. This is like distracting me. All right, so I have a call with one of my sales guys from my last company, SAS Mining, which, you know what? I'm gonna pull up my other company too, so you guys get the full idea of what we're working on. So I started this company, SAS Mining, in January of 2018. So today, fast forward. So, okay. what does SaaS mining do? Let's start there. So just, you probably know Coinbase, crypto exchange. Just like how you can go onto Coinbase to buy Bitcoin, you could go onto SaaS mining and start mining Bitcoin. And you don't need a PhD in power. You don't need to have all these relationships with these top energy or these top mining companies. It's as easy as going through a checkout, and now your miners put in a facility with hydropower, super great, lean, efficient operations. And the Bitcoin that your machine generates, that your Bitcoin miner mines, is directly sent to your wallet address that you put into the platform. Let's say that you've mined for a while, you want to get out, you want to sell your miner. We help you sell your miner and get out of the position. So it, just like how Coinbase made it easy to buy Bitcoin, we've made it easy for you to start actually becoming a Bitcoin miner, all with renewable energy. We've got data centers, Bitcoin mining facilities in the US, Paraguay, Norway, and very soon we might be launching another one, sneak peek, out in Ethiopia. So we're a global Bitcoin mining organization, and that's relevant because in a little bit here, I'm actually going to be talking with one of the top sales guys at SaaS Mining. After that, we're going to be talking with my co-founder at MyWorker AI. And then after that, we've got a board meeting for SaaS Mining. We keep going between these tabs. So then we got a board meeting for SaaS Mining. Unfortunately, I won't be able to broadcast the board meeting. So during that, I'm going to play an amazing YouTube video of our CEO at SaaS Mining talking at a conference. So you guys are going to get, honestly, potentially even better than the board meeting. So it's an amazing, amazing talk. Lots of new ideas. Be great for you guys to watch. And then going back to the schedule here, after that, we're talking with head of partnerships at DevRev. This guy used to be a venture capitalist, and now he's head of their ecosystem there. There's a number of things we're talking with him about. We're moving the ball forward on. That's super exciting. And then we've got a customer call for MyWorker at 2 p.m. Someone who wants to get started potentially on the service, but once he knows what we do, he's going to want to get started. And then we're diving back into the work that we're trying to get to now. We're building the unit economics for MyWorker, submitting all this homework for the accelerator, but that is also, we can unlock the next module here. You know what? I'm going to pull it over just so you guys can see. Just so we can unlock this next module. This next module here is going to be term sheets, how VC works. Honestly, I know all this stuff. We can go through that quickly, but we need to get to this, the due diligence data room. This is important for raising capital because there are investors that are interested in hopping on the MyWorker rocket ship, and we need to get them a data room. So that is the plan for the stream today. Yeah. Okay. Let me look at the chat here. Okay. Kieran, an internship. Unfortunately, we do not have any internships open at the moment. Honestly, we're very busy with a number of things, but that said, you could follow along the journey here. And, you know, maybe at some point in the future, I don't know your background though, so that's the one thing. But it's good. You're clearly learning a lot if you're coming onto the stream, so that's a good sign. Any preview of the yes, Vishnu, you read my mind. That is a great question. We want to show you the UI of the product, and that's what we're going to be going through later. I believe at 2 p.m. Pacific time, we're going to be going through the UI of the product when we're going on with the customer call. We'll do a screen share, all of that good stuff. So, yeah. So we're going to finish this homework now. Finish this up. I'm going to play the music as I'm going through this. All right, so yeah, we gotta update our answers here. And yes, Vishnu, it is kind of, I appreciate you subscribing, first of all. Make sure you guys subscribe. Don't want to miss all the, you know, we're the only channel that does something like this, where we're building these companies in public, full transparency. But in regards to SaaS mining, it is kind of like virtual mining, except it's like way better. We pioneered this industry that we're calling Bitcoin mining as a service. And whereas other cloud mining or other companies that are different, you don't own the miner. With SaaS mining, you're purchasing a miner. You're the owner of that hardware. You've got title to that hardware, and we're taking care of running it at sub 5 cent power and electricity and labor. Unheard of. If you're in the US, I don't know where you're calling in from, but energy everywhere. We scour the globe for the best energy. Scour it all over the globe. And that's why we're global. And I mean, just in Paraguay alone, you're in the same facility as the largest publicly traded mining company. So we find you the best opportunities, and then it's like you've got a decision. Just like how you can decide when to buy Bitcoin or sell Bitcoin, now you got the decision. Okay, you can decide when to enter your mining equipment, how long you want to mine for, if you want to sell out of the position. It's a truly amazing company and product. You guys are going to get to see us building it. Oh, that's a good idea. Thank you for the heads up. I'm going to reduce the volume. Thank you, Vishnu. Thank you. Okay. So now we're gonna improve these answers. So you'll just hear my thoughts on these answers as we improve them. All right, thank you. These answers look like a solid start. For context, we already submitted the last response related to our LTV and customer acquisition costs, and so now we're still on question number 4. That said, while I'm looking at this, at our answer for this question and interpretation, it seems like the answers, it says that it's conservative, but I actually don't believe it's conservative. I believe that, especially because we're still an early stage company, that it's almost kind of aggressive, which is fine. But I think that just as we answer this question, we should recognize and, basically recognize that that we're going to need more data to fully dial in these metrics over time, and we're going to need to continue to track them over time. And this might actually be aggressive. Maybe we don't need to put that part in, but I think that that's important. And then on the other question, the question, what specific actions can you take to enhance underperforming metrics? I think that all of these make sense, but I think that it's a lot of information, and we really want to focus and dial in on the highest lever activities that we can take to actually improve the metrics, because this almost seems noisy and distracted on different areas. I think let's focus on the most important metrics and settings and things that we can do in answering this. So less is more here, but let's focus on the most important things and try and take almost think like a VC, almost like an investor, think like in the best way possible for our audience, basically. And Vishnu, the rest of the people watching, as you can see, when we use ChatGPT, the prompts aren't perfect. By no means are they perfect, but we're just talking into it, trying to lay out our thoughts, and then we let ChatGPT do its thing. All right, guys. And if you're watching, don't forget to subscribe here. We got some big things ahead. Maya, how's it going? Appreciate you tuning in. Appreciate all you guys subscribing. And guys, you're early. We recently started streaming, started diving in on creating content back on social media. So you guys are going to we want this content to be like nothing else that you can find. Nowhere else are you going to find someone who's built and is actively running companies where you're going to get this level of transparency and you're going to be able to see how we're working and building stuff. I mean, I'm pretty much bringing you guys into everything. I'm not bringing you into the board meeting because I don't have the full decision-making power to do that. I'm not the CEO there, but I am the CEO and founder at MyWorker. And so I am the main decision maker there, and I'm willing to share all of this. So you guys are getting the full look behind the curtain here, and we're going to stream it. We're going to clip it. We're going to post it. All right, let's see how these answers came out. All right, I think these answers are good enough, so we're going to toss these in. So unit economics. Paste that in. And then here, what specific actions are we taking? All right, yeah, great point. And that's the other thing. It's like we're working together. How many times would you have the opportunity to co-work with someone building companies like this? I mean, it's a very rare opportunity. Feel free to ask any questions. And look, I was never a big fan of school. I always thought that it was a waste of time. You're not learning real important skills, but this is actually valuable. You're going to get a lot of great knowledge, and ideally it'll be fun. It's almost like you're a part of it. It's almost like you're running the companies. You could throw an idea out there. If we like the idea, maybe we put it in there. So yeah, make sure you tune in. Turn on the notifications. Whenever we go live, it's like we're working together. There are a lot of people that would be awesome to co-work with, and almost none of them you actually do have the opportunity to. Here, we have the opportunity to. We're doing it. Even when we had all these calls going on. I'm going to be jumping from meeting to meeting. All right. So now we got some more questions here. We're almost done, guys. As you can see, we've got 2 more questions here to answer, 1 more here. Then we unlock the next module, which is actually very important for us because I need to get into these final pieces. And even here, just to kind of give you guys an idea, I mean, look at this. You're going to get to watch these videos. So this is what we're waiting for as a heads up. We're going to be doing this for term sheets, all of this.
Churn rate measures the percentage of customers who leave your business over a specific time period. For SaaS and subscription business, churn is one of the most important indicators.
So this is T, by the way.
And customer
She's awesome. She's one of the partners at the accelerator at Pegasus.
Customers aren't finding enough value to stay. For example, a monthly churn rate of 5% might seem small, but it means you're losing over half of your customers within a year. How to reduce churn? 1. Analyze behavior. Identify consumer behaviors or milestones of customers who churn and address gaps in their experience. 2. Improve onboarding. A smooth onboarding process ensures customers seize value quickly, reducing early churn. 3. Provide support. Use proactive outreach to engage customers who show signs of disengagement. Churn is expensive. Reducing it can significantly improve profitability and stability. We will dive deeper into retention in the following sections.
All right, guys. So that's one example of a video. We're going to be diving in because we got to unlock these final sections here, which are unfortunately not unlocked until we finish this homework here. So Here we go. Do that. And then got this question. You might think that it's kind of lazy that we're just copying and pasting these questions in and having it give the first answer. But in reality, there's so much work to be done and so many things we have to do that even just getting that first draft done, that's time that could be spent getting a new customer, getting an investor, et cetera, et cetera. So it's important we do this, but we can't be spending all of our time doing homework when there are companies to build, you know? All right, so we've got a couple more questions left. Could you please do some research and answer these questions in the best way possible with your superhuman intelligence in all relevant domains? Sometimes I add that little line on the end because it helps the model focus in on the relevant domains that are to the task we're doing. All right. Oh, Vishnu, totally understand, man. I hope you have a great night. And yeah, I'll see you next time I hop on live, and make sure you have those notifications turned on. Thank you, bro. Let's manifest it. Vishnu said, remember my words, you're going to have millions of viewers soon, and he'll be around. So he will be one of the early believers, one of the first believers. I appreciate that. Okay, and we actually have a call coming up very soon, so I am going to dial in. Oh, wait. Here we go. I thought that the call started at the 30-minute mark. Let's see here. My bad, I thought it started at the 30-minute mark. I just joined. Are you still free to hop on? Guys, for some reason, I thought the call started at 11:30. Started at 11:15. So I just messaged him. Hopefully he can still join. My bad. All right. Let's see here. I'm going to play some music while we wait. Some music while we wait. All right, here we go. All right, guys, one sec. All right, these answers are actually solid, so we're just going to toss these in. All right. All right, here's the final question that we need to answer. Let's do it. See. Okay. Let's improve the answer For example, the 12 mil ARR by year-end goal seems a little ambitious. Let's make it a 1 mil ARR goal. All right. So now we can actually move on to the modules. This is what we've been waiting for. Guys, big milestone. Let's go. Let's go. This took longer than expected, but we powered through. We made it happen. All right. We are going to turn off the music and learn. Hope you guys are ready to learn.
The first and most important document to understand in a venture financing is the certificate of incorporation. This is an amended version of the certificate you filed when you first incorporated the company. Now, that first version that you did was bare bones. It just authorized the initial shares, contained some other boilerplate, and that's it.
Why does this
The
guy
COI
look
that
red?
you're going to create and file with the state of Delaware that will
Is it just
become
me or
public
does this
record
guy look
in
red?
connection with your venture deal is totally different. It's much longer, it's much more sophisticated, and it's going to contain many of the protections in that bundle of rights that come with preferred stock that your investors are going to expect to receive. I'm going to cover just a couple of them here. The first special right that comes with holding preferred stock that's in the COI is called the liquidation preference. And very simply what this means is
No
when the
liquidation
company
preference.
liquidates, when it gets sold or when it folds,
I'm not
the
taking a deal with
investors
liquidation
who
preference.
hold preferred stock are going to be first in line to get paid out at least what they invested in your company. So let me repeat that. If you have a downside scenario and there's only a limited amount of money to distribute to everybody, and it's not possible to get everybody back everything that they invested in the company, your investors are going to take everything. They're going to take all the assets because there's not enough available to pay them back what they put in. Obviously, you and I both hope that nothing like that is going to happen for your venture. You're going to go to the moon. And in that scenario, the liquidation preference actually doesn't matter, because what's going to happen in an upside scenario is your investors who hold preferred stock are going to convert that stock to common stock in order to participate alongside you in the proceeds of that exit transaction. So again, the liquidation preference is a downside protection.
Oh, actually, I'm okay with liquidation preference. Not a 2x
that in a
liquidation
downside
preference.
scenario, investors have a chance to at least get back what they invested so that they can go and redeploy that money into something else. It's also possible that a liquidation preference could
How's it
provide
going,
the
Melissa?
investors entitled to more than what they invested. That would be what's called a 1.5x or 2x liquidation preference.
See, this is what we don't
That
like. No
is
multiple
less
liquidation
typical
preference.
provision or less typical economic concept than a 1x liquidation preference, your money back. But it can happen, particularly in scenarios where the company is desperate to raise money and can't get a better term sheet than that. Another key provision of the COI that you need to understand is called the protective provisions. These are a list of actions that the company cannot take without the consent of a specified group of the preferred stockholders. So for instance, if you want to dramatically change the line of business or enter a new line of business, if you want to do another venture capital financing in the future that's going to dilute not only you, but also these investors who are holding preferred stock who came in at your Series A or Series Seed, and a laundry list of other things that are included in these protective provisions, that's all going to require the investor's consent. which makes sense. They want to be able to exert some control over the direction of the business. And while they shouldn't be running the business day to day, nor will they want to, control over major decisions like these is appropriate and customary in a preferred stock financing. One other important concept in the COI that you need to understand is an anti-dilution provision. What that is really about is a downside protection for the investors in case the company's value drops after the round in which they invested. So let's say you sell Series A preferred stock at $1 per share, and then years down the line, the company has a downturn and you sell some other series of preferred stock at 50 cents a share. Well, what the anti-dilution provision says is that if your investor later converts their preferred stock into common stock, which I mentioned earlier they might do in an exit scenario, then the anti-dilution provision will recognize that the company's value dropped and account for that in converting the preferred to common. Instead of the preferred converting at a 1-to-1 ratio into common stock, the ratio will be adjusted to be more favorable to the investor, depending on what the COI says and depending on what the downturn in the company's value was. There are two different ways that this can be approached. The simplest and also the most burdensome for you as the founder would be to have a full ratchet anti-dilution provision, which says that instead of the preferred converting to common based on $1 per share as the purchase price, it's going to be based on 50 cents. It's going to get moved down to whatever that number was in that subsequent down round is what it's called when the valuation drops. That's a very significant protection for the investor and is something that we rarely see. Less than 5% of deals have a full ratchet anti-dilution provision. What is more commonplace is what's called a weighted average anti-dilution provision, which basically meets in the middle between $1 and 50 cents. These are all things that you should talk about with your attorney when you're going through the term sheet with your investor.
All right, guys, this was a good video. So I've actually spoken with him before. He's a good guy, but the idea behind this is there are certain terms that are going to be in these financing sheets. He talked about the liquidation preference. You don't want a multiple liquidation preference for the reasons why, like, pretty obvious. And if you have a bad liquidation preference, then you could end up building a company that makes money and still not get paid out. So that is a no. He talked about the protective provisions and then the ratchet. I don't even know, the full ratchet is not what you want, but weighted, what is it? Anti-ratchet dilution. Oh my gosh, I can't believe I'm forgetting all this stuff. But anyway, what matters is just knowing what it means. So you're going to want to negotiate, of course, against a full ratchet anti-dilution provision or anything like that. I guess weighted average anti-dilution is more common, but that also just kind of gets to the heart of it, that you don't want to raise at a valuation that's too high. Because let's say that you raise at a $10 million value, or let's say a $100 million valuation, and your next round's a $50 million valuation. Well, then that the dilution piece is going to come into play. And if you have a full ratchet anti-dilution, then all your existing shareholders are going to get screwed. So anyway, we'll move on to the next video. I guess the big takeaways are: don't raise at too high of a valuation that you won't be able to beat in your next round. Don't take a multiple like 2x or 1.5x liquidation preference. That gives a lot of risk. And then just understand the protective provisions that you're getting yourself into. Okay. Next video. Oh, here we go. Intellectual property. Riveting.
There are several different types of intellectual property, and it's important to understand the distinction between these different types. The ones that are going to be the most important to you, most likely, are going to be trademarks and copyrights. So what is a trademark? A trademark is a brand name. It's something that protects the unique brand features of your business as it grows and enters the marketplace. It's the name of your company. It's the names of your product offerings. It's your logo. It's a slogan or a tagline that you use extensively in your marketing. By registering this trademark with the federal government through the Patent and Trademark Office, you secure the exclusive right to use these brand identifying features in commerce in specified categories. So when you file your trademark, you're going to have to tell the Patent and Trademark Office what types of commerce you're engaged in under the brand features that you're registering. And you have to work with a qualified IP lawyer in order to make that determination correctly. Copyrights are different from trademarks, and people often get the two things confused. So let's be extra clear. A trademark is a brand name or a logo. A copyright is not that. A copyright is a creative work or an original work that is in what's called a fixed medium. It means something that you've written. It can mean a graphic or an audio-visual element. So, something that you would display on your website, the content of your marketing materials, the written content, not the brand name or the logo, but the actual description of what you have to sell could be something copyrightable. Source code can be copyrightable. There are all different types of copyrights, and they impact not only software companies, but also entertainment ventures, because there are copyrights in every piece of film or television or music out there in the world. It's unusual for a startup to extensively register copyrights with the Copyright Office for, say, a software product. But you're going to want to talk with an IP lawyer about whether there's anything you can do to protect the copyright in any original works that your company is commercializing in the course of its life cycle. The other major category of intellectual property is a patent. So a patent is something that protects an invention, something that is new and not obvious from products that are already in the market, an innovative process or method that is not already in the marketplace. Patents are the strongest type of intellectual property that you can hold in terms of the strength of the rights that you have as the holder of the patent. They're also the most difficult type of intellectual property to obtain, because unlike trademarks and copyrights, which exist in the world regardless of whether you file them with the federal government, a patent does not exist unless the US Patent and Trademark Office gives it to you, and you have to file with them in order to obtain a patent right. If you are doing something in the biotech space, if you are doing something that is not strictly a software product, because software patents can be very difficult to obtain, it's probably worth a conversation with a patent lawyer to understand whether you should be pursuing that process. Overall, though, the company needs to own its IP so that it can maintain control of its brand, its products, and its creations. And that needs to happen from the beginning of the venture. And so, as part of the package of documents that the founders are going to sign at the incorporation of the business, one of those documents is going to be an intellectual property assignment agreement. Every founder should be signing a contract that substantially says the company owns whatever the founder creates for the company while working on the venture. And that's something that any lawyer that you're working with should be providing to you as part of your initial incorporation process. If you have intellectual property that you've developed in your life, copyrights, trademarks, patents that you have from other projects, from other businesses, prior to this venture, unrelated to this venture, that contract will give you an opportunity to announce that to the company and agree right up front that that property is not going to be transferred and assigned to the company. It's very important to get all those issues out in the open right at the outset. It's much more painful, much more difficult, much more expensive to fix them later if this is not done correctly. It's also important to understand that your investors are going to be taking a look at these contracts. Your investors are going to want to understand what the company does and does not own. And the more that you can be proactive about getting these things buttoned up at the outset, the easier it's going to be for you to get through a due diligence process when you're looking to take money from a venture capital fund. Before you take your product or your service to market, you're also going to want to identify any risks that already exist in the marketplace of other companies that might claim that you're infringing on their intellectual property. And so when you're pursuing, for instance, a trademark filing, you're going to want to have a trademark lawyer conduct something called a knockout search, which is a complex, comprehensive search of the entire internet and the trademark database that's maintained by the government to understand whether there are other brands out there that are confusingly similar to yours. That might sound like something that you could do on your own with a Google search. And sure, you can do that as a first step and as a starting point when you're starting to think about what brand names you might want to develop. But the purpose of trademark law is to prevent consumers from being confused when there are two companies that are distinct from each other but offering something that looks very similar. Consumers need to know what the source of a product is, the source of a software service. It needs to be clearly identifiable with a specific company and not something that's too vague or generic. And so in creating your brand, you're going to want to make sure that what you create is distinct and original enough that you're not going to be threatened by these third parties, and that you're going to clear that trademark filing process when you do approach the government to try to get a registration.
All right. Good stuff. Good stuff. We're going to watch one more video. I'll be right back. And then, yeah, from there, I'll hop on a call with my co-founder.
So in a previous video, we talked about how important it is for founders to assign their IP rights to the company through an IP assignment agreement. That's also applicable to anybody else that you might hire to come along and join you in this venture down the road. We call these people service providers, and when I say that, I mean any employees or contractors who you might hire, particularly after you've raised money and have the means to pay these people, to come and work at your company full-time or part-time. Every time you hire one of these service providers, you have to make sure that they sign an IP assignment agreement just like the one that you signed. But you need to go further than that. It's important to understand what goes into an employment agreement, what goes into a contractor agreement. The first thing that you should know is that the law has been trending pretty dramatically in the direction of encouraging people to hire service providers as employees and not as contractors. California and some 24 other states in the US have adopted what is called the ABC test to determine whether somebody is appropriately classified as an employee versus a contractor. The gist of the test is that if somebody is performing a function that is essential to the main purpose of your venture, the main purpose of your business, they are almost certainly going to be viewed as an employee in the eyes of the state level tax authorities. And so if you misclassify them as a contractor, you are taking the risk that if they leave the company on bad terms and they hire an aggressive employment lawyer, you are going to have a lawsuit on your hands. You're going to owe penalties to the state, and you may have to negotiate a settlement with the employee. That is all avoidable by making them an employee from the first instance and avoiding using a contractor agreement. Startups typically don't like to do that though, because employees are more expensive to hire. You have to pay payroll taxes and conduct appropriate withholdings in order to comply with federal law. You have to provide them workplace benefits and protections that are not necessarily applicable to an independent contractor. So in building out your team, you have to weigh the risks and rewards of classifying your workers as employees or contractors, and that's something that a corporate attorney or an employment attorney will be able to help you with. If you decide to hire somebody as an employee, you're going to want them to sign what's called an offer letter or an employment agreement. Because employment is the default by law, an offer letter doesn't have to be that detailed in order to be legally effective, but it would be a good idea for it to include some basic information. You want to give the person a job title and a start date. You want to be clear about a salary or an hourly rate that they're going to be paid, which has to meet the legal minimum. There's a legal minimum wage, but many people also don't know there's a legal minimum salary. And if you fail to pay somebody the minimum salary, if you try to give them a salary that's lower than the legal minimum, you are out of compliance with the law and you may not even realize it. The amount of the minimum wage, the minimum salary, are going to depend on the jurisdiction where the person is located, the service provider, not you, not the headquarters of the company, certainly not Delaware or wherever the company is incorporated, but the jurisdiction, both the state and the locality. There could be city rules where the person is located. This can be a problem for companies that are fully remote, who have teams that are spread out all over the country. If you choose to go that route, which is understandable, you just have to know that you're going to be responsible for complying with the employment contractor laws of all of those jurisdictions where you choose to hire people. If you go with a contractor, notwithstanding everything that I just told you about the law favoring employment, then you need to make sure that your contractor agreement is detailed so that it does not get seen by the tax authorities as an employment agreement. You're going to want it to be very clear what the person's scope of work is, what the payment terms are, what the duration of the contract is. But most critically, you're also going to want the agreement to state clearly that they are being classified as an independent contractor and that they have independence in how they perform their work, that they use their own computer, their own tools to perform the work, they set their own hours, make them look as much like a contractor as you possibly can. And again, an attorney can help guide you through those criteria in more detail. You're also going to want your contractor agreement to be clear about how it can be terminated. It's not quite the same thing as an employee where most employees are considered to be working for you at will, which
what's
means
up?
they can leave at any time and you can fire them at any time with or without a reason. With a contractor, it's really all about what the document says.
All right, how's it going? Joshy, good to see you, man. So as a heads up, call with my co-founder is starting in a sec. So I'm gonna hop on there and just yeah. Joshy, I would love to. I would love to play some chess, but I do have a pretty packed schedule working right now. Oh, he's in the meeting room. So I'm about to take this call on stream. You guys are going to get to hear it. Yo, yo.
Yo, hello.
How's it going?
Good, and you?
Doing great, man. Yeah, been a busy morning.
I understand.
Yeah. How's your day been?
Good. As always, busy.
Yeah. What time is it over there right now?
9 p.m.
Okay. Cool. Very nice. Well, I'm not sure if you can hear it in my voice, but I'm a little stuffy at the moment. I didn't get much sleep this past weekend.
I hope you spend it actively and interesting.
Yeah. Well, I think last time we spoke was right before I had hopped on the plane out to Albany.
Yep. And
Yes.
how was your trip?
It was good. My friend has well, his family has a really nice piece of property out there. They have over 1,000 acres, which is just crazy to
Wow.
think about. And so they've got a lot of different houses on the property, and a lot of the different, so all the different family members, they all go there and hang out together. So the family has a number of houses, and all the families will hang out when they're back. But his great grandfather was I guess they've owned this property since the 1800s.
1800. Sounds like Yellowstone.
What? Sorry, what was that?
It sounds like Yellowstone. Did you watch this TV show?
Oh, I've heard a lot about Yellowstone, but I've never actually watched it.
You should, because this is about the family who own the property for 2 centuries, and they protect their property in different way, and there is huge amount of territories. So sounds like about these guys.
Yeah. I mean, I think it might be a little bit a little bit like that. They've had it for a long time, and they used to actually have 3,000 acres, but then they sold a bit over half of it.
Did they have cows and cowboys? Cowboys on the territory?
I didn't see the closest looking guy to a cowboy was my buddy because he had one of those hats, but I didn't see any real cowboys. They did have some yeah, I mean it was nice that they had there were just a lot of activities, a lot of different activities to do.
Cool. Did you watch the movie Saga from Kevin Costner about the first Americans, first Europeans came to America? How basically America started its way, like the early days of America. Did you watch this movie? Like 3 hours movie. Really interesting, complicated, hard, but interesting movie.
Interesting. No, I just looked it up online, but I haven't I don't think I've seen it.
Kevin Costner calls Saga like American Time or something, like beginning of America, something like this. Mhm.
Interesting. Is it on Netflix?
Yes, it should be because it's like 1 or 2 years already, this movie.
Okay.
Saga.
Very cool.
I think I watched more about America than you.
It's possible.
It's called Horizon. It's called Horizon. American Saga. Yes, Horizon American Saga.
Horizon American Saga.
It should be on Netflix for sure. It's about Indian guys and first Americans. It's like dirty but really honest. Dirty and honest.
Hmm. Okay, I'll have to check. Yeah, with Kevin Costner. Yeah, I'll have to add this to my watch list. Maybe Paige and I can have a movie night or something.
For movie night, it's better to watch Yellowstone for sure. Yellowstone is more like fruitful picture. This is more like dirty reality. This American Saga, dirty reality, and Yellowstone is more like TV show, like helicopters, cowboys, beautiful views, mountains, nice actors. Like
I
so.
see.
Mhm.
Okay. Cool, man. Well, I guess there's a lot that we can go over. Where do you want to start? Do you want to start with some of the ideas that we were talking through last week, that you mentioned right before we hopped on the flight, or do you want to talk through some of the MyWorker specific stuff, like I guess the more operational pieces, like I was sending over Slack?
I already reported to you, so this 199 we will do. I forgot about to do, but next week we will do with Igor. For accounting, it's not clear. You should clarify what it means. And for $19, well, I don't know. We can discuss what exactly do you want to do with $19.
Yeah. Okay. Um, yeah, that's a good point. Let's start there. So maybe I can just talk a little bit about the idea and you can let me know like if you think it makes sense or if it's even feasible and we can take it from there.
Sure, shoot it. Let's go.
Okay, cool. So here's the idea. So uh, that right now, I based on the feedback I've gotten, that 199 and 499 seems like a good sweet spot where we're going to be able to continue to get customers. We've got a solid margin per customer, and we're providing enough value that I think we can keep the customers. So I think that idea that we chatted about last time is good. Now on the $19 a month option, the idea behind it is uh, putting a paywall somewhere that has like uh, a minimal level of commitment that someone's interested. But so for example, let's say that you're a potential customer of MyWorker. You hop on, you would hop into a subscription maybe for like $49, 39, 29, 20, but going on with a 199 subscription seems pretty heavy. And you might not end up booking a call, might not end up moving forward. But simultaneously, we've got the ability to offer some cool things that might give them a taste. And so the taste for the product like growth would be, what if you could, for $19, go into the product, be able to um, go into the new campaign section. So when you first go in, you can go into all these other sections, but you can't go into the new campaign. And then when you go into the new campaign section, you have the ability to launch a campaign with drafts. So you can basically see, you can still pull leads, you can see the output, you can have a little bit more functionality. We wouldn't yet acquire a domain for you to start sending, but with the $19, you have the ability to see the output, get a taste of if this system might work for you. And then the big signal on our end is when we see someone coming in for $19, then we know to reach out to them and they're worth us investing the time for a call. So that was just at a high level the initial seed of the idea, which is, hey, there's a big jump from nothing to 199. What if there's a way for us to find an intent signal with someone who's got a minimum commitment of willing to put down $20? And what's that value proposition that we could give that is more than just allowing them into a free account? So I'll pause there and yeah. would love to hear your thoughts on that.
I don't know. Should think of it. Don't have thoughts right now. I understand the idea. Just to be able to step by step involve the guy in the process, but I don't have idea of what exactly can be done for $19.
Yeah. Yeah, I guess that's the secret question, which is like, and I laid out only one scenario. There are a couple others that have come to mind as well. One is just as simply as just not letting them like fully get into the free account or having just a block somewhere in the process in the paywall. And then the other idea was, hey, just like gatekeeping the product. So after they go through the onboarding, like right after the email account creation piece, like before they get into the full product, maybe put a paywall there. So I guess there's like two options. One is right after the onboarding before they're fully into the product. The other option is they can get fully into the product after the onboarding and they can go into their company details and all these things. But you could put a paywall in front of the new campaign button and in front of like something else somewhere else. So those are the ideas that come to mind just based off of the conversations I've been having with customers and my general sense of where there might be an
19,
opportunity.
$19, you can basically create by domain, by email, and generate 1 email per day or 2 emails per day.
Yeah, that's another possible idea. So there are two options. I think you touched on it. Option number one is, hey, we have the free account, not include purchasing a domain quite yet, but we give them the ability to do the draft emails. Or option two is, in that minimum $20 a month plan, we give them access to one domain. And we actually purchase and set up that domain.
Yes.
The other question is from a development perspective and implementation perspective, like what do these different paths look like? Because if there's one that's easier, maybe we like that's easier to test. Maybe we try testing that because right now we've got none of that. We've got no like small package option. And the one other thing that I will mention is sometimes I'll like be in a conversation with someone and before moving forward, they want to see like draft emails and all these things. And maybe this could be an easy stepping stone saying, look, I know that you want to see a test. That's part of our like $20 a month plan or something. So it's like, yeah, we could go for, I think it would make sense for us to go straight to the $199 a month for the first month. But if you really want to do that level of diligence on the platform, then you can just pay for the $19 a month plan and then make the decision later on whether to upgrade.
I don't have answer right now. Don't have answer. The easiest way will be to create a new subscription plan for $19 or another discount from $5.99 to $19 discount plan, and connect this plan to amount of emails per day inside database. So not more than 1 or 2 or 3 emails per day. That will not be hard. It will be just another option, another plan for users with some limitations on this plan. If you want, it won't change the flow. It will change just parameters of the flow. For this user will be 50 emails per day. For this will be 1 email per day, and that's it. If all other options, create firewall or something, block this part, open that part, that will change the flow a little bit of the product, the flow, how it goes, onboarding and everything, and that will reduce complexity. If this guy bought full subscription, he should see this. This guy bought that, he should see this. This guy bought that, but didn't finish this, and so. It will introduce a lot of different variations that had to be tested, verified, and so on, and it will be like development.
Yeah. I'm just thinking right now. I like your idea. What about going off of your thought process, just so we don't have to make any part of the product like different and keep it simple, or keep it. This sounds like it would be simple. I'm not sure. You can tell me if I'm missing the mark. What if we have the plan where, just so it's the same product, they get one domain instead of 5, and with that one domain, we just charge, you know, maybe $49 a month or something like that. So that way it comes with one domain, and like it's a lower option plan, but then it also comes with pretty much the full functionality. It's not as low of a barrier to entry as the 19, but with the 19, I was thinking we wouldn't give them option to sending, but maybe we do just give them an option to the full product, and then we charge a little bit more, like around 49. Do you think that would be easy to implement?
Yes, basically it will automatically decrease revenue because everybody will use 49. No one will go to 199. That's for sure. But it's possible. Yes, so Andrew can check what the plan is and to activate just one domain, not whatever they want, but just one. That's something that Andrew can control. No need development here. You just require additional discount, additional price changes, but it shouldn't be that complicated. Just on the price page, create another option, maybe in drop down, and based on that tariff, based on the price, based on that user's tariff, check like number of emails that you can generate per day. Maybe a couple of changes, maybe like up to like 5, 6, 7 hours of work per year. Yeah, it's all together for testing, checking, verification, deployment testing, and so on.
Okay. Yeah, so yeah, that sounds like a good plan. So just one final piece on it. What are your thoughts on that pricing? Because you did bring up a good point that maybe that'll get people not wanting to do the bigger package, the 199. So maybe we need to make that package a little bit less, I don't know, less appealing. I don't know. You do bring up a good point that might take away from our 199 package.
That question, don't have answer. I have to think of it.
Yeah. Well, I guess a follow-up question would be, how expensive would it be, or how difficult would it be for us to, let's say that we wanted to first start with $49, or let's say like we start with $79, so that way it anchors it a little higher. If we started with something like that, would it be easy to change the price on that after? Like, I know that there's development stuff, but changing the price on that, would it be difficult if we just kept the same type of format, but we just changed the price on it?
With pricing, it's very easy. I mean, there's a bunch of options from the Stripe. What to do? Like first month discount like this, second month discount like this, next 6 months discount like this, and so on. It's very not that hard to change this and set up these pricing options, and then to change in the system, maybe a couple of rows to change the system and upload and update. Not a problem. So the flexibility of structure of price, like first month $19, second month is $100, third month is $125, fourth month is $299 and so on. Flexibility of these steps and the things for not a problem. Not a big problem. Not a big deal.
Okay. Sounds good. Well, in that case, I like the plan then. We might as well give that a shot and see if we can use that to activate more customers, especially now that we're starting to get more views across all platforms, and there's going to be a lot of people that could potentially be in this lower purchasing category that we could service. Seems like the timing might be right.
So what's the final decision? To have one plan, but with multi-step increasing pricing?
I think that we can keep the plan that we had previously with the 199 and then 500 a month, and then with this new plan, we'll have like another intro offer where they can have one domain for the first month, and that would cost $49.
One domain and how many emails per day?
Yeah, one domain, and then the number of emails per day, put it at, I need to do the math real quick. I just don't want to give you the wrong number. Would that be like 5 emails a day? Or 6 emails a day?
5 minutes a day. Okay. Okay.
Or six a day would be 180 a month, so I'm probably 6 a day.
Okay. 6 emails per day. One domain. Okay. I will write down the requirements. And this 49, it will stay forever 49 without any increasing.
Yeah, let's test out 49 just flat, because then if we want to change the price, we can do that, right?
Right now, when we create the 49, we will have to handle like how to switch from one plan to another and all things like that. So introducing a second plan, not a big problem, but requires some work. It's all like 5, 6, 7 hours. Create a second plan, switching from plan A to plan B, test it on dev, create these plans in production, deploy, test, and so on. Not a big deal, but it will take some time. Yes, and once we have 2 plans introduced, we can change 49, 59, or wherever it is. Yes, that will be easy.
Okay, so yeah, we'll have the 49 plan. That one also doesn't come with like white glove support. We could make that as another differentiator, because at the end of the day, we want the bigger plans, but this is just going to clean up with some of the smaller ones. Yeah, so we'll go with the 49, 6 emails a day. It doesn't come with like full service support in terms of like the white glove support that the 199 to 500 plan goes for. And yeah, the smallest plans made is just like the barrier to entry to get in.
Okay, I will talk to Igor and he will estimate and come back.
Okay. And then let's see here.
It's been a long time since you were gone.
Okay, so I think that covers everything on the pricing side, right? Or is there anything else that you want to cover on that?
No, nothing.
Okay,
I'm fine.
sweet. Do you want to talk about the other idea in terms of um,
Yeah,
the other
but
AI improving package line thing?
yeah, but are you streaming our conversation right now? No,
I am. If you want, I can put on a video and mute myself.
I don't want this conversation to be on the stream.
Okay. Yeah, so
This
give me one
discussion,
second.
conversation, and so on. Yes.
Yeah, so how about I do this? Let me pull up a video on for the stream, and then I'll call you on WhatsApp.
Yeah, please. Sure.
All right.
See
Yeah,
you
give
soon.
me 1 second and I'll do that. Oh, the one other thing too, if we want, today's the last day that we can do a late application to YC. Let me see here. Actually, let's focus on this other idea first. I might not actually have the ability to finish this in time. Okay, I'm gonna toss this video on and then I'll call you in a second here. 1 second. Very important part of running successful. All right, I'm just gonna toss this on. There. Full outreach campaigns is all right. So, all right, guys, I'm gonna play this video. I'm gonna mute myself and finish this conversation. Andre, I'll call you on. I'm gonna call you on WhatsApp right now. Having your customers see your email. So this video right here is actually gonna be dedicated to how we can get more email inboxes for your account. So the way we have it set up is you can have one email inbox attached to any active campaign at a time. And the reason for that is simple. If you have it attached to multiple campaigns and you push it too hard, your email domain will be burned, and we don't want that. And we'll have to go through the whole process to buy a new one. It's going to cost time, money, and it's bad for everyone. So here, this is a very important screen. I kind of glossed over it. On the left-hand side, you go to senders. Once you click on senders, it takes you to this page. This is where you can see all of your email inboxes and the status of your email inboxes. So we're going to add some more email inboxes. This is going to allow us to run multiple campaigns at a time, do A/B testing, all of that good stuff that we need to in order to get more customers on calls. So how do we get more customers on calls with more emails? Top right, click on New Sender. Once you click on New Sender, you're going to see this page here. It looks like a lot going on, but very, very simple and super easy. So the first piece is the order domain. As you can see, it's very similar to our main domain, which was SAS Mining. You're going to select one of these domains, and then you're going to put the email associated with it. So in this case, we're going to make it Will, because my name is Will. But if your name is Joe, then maybe you put Joe. And maybe your name's Katie, and then you would put Katie. So whatever your name is, put your first name. Then you would put your full name. So if your name is Katie, let's say it's Katie Parker, then you would put Katie Parker. And then finally, the role. This one's a big one. Let's not leave it as sales representative. You want something authoritative, where when people get an email from you, they think, dang, the CEO just emailed me, the managing director, the head of business development, whatever that is that you can put. If you're using the system, ideally you've got an authoritative title, put that, even owner, you get an email from someone, this guy owns this thing. We'll use owner potentially. So you put whatever you want to do, and then at the end of that, you click save. So boom, now you got 2 email inboxes. Once this is ready, the status is going to say active. Now let's say that you were doing this and you said, oh crap, I actually misspelled my name. It's not Katie, it's Mark. Or actually not Katie, it's Kate. I go by Kate. Mark is a very different name. In that case, we're going to change it to Kate, and you click save, and you can edit that. The one thing that you actually can't edit, so you got to be very careful, is you can't edit the domain after it's been acquired, because at that point, our system, we're buying it, we're doing it. This is the amazing thing about our system. We cover all these costs for you. To deliver an AI sales team for you at this price is unbelievable. The price is going to be raised. By the time you see this, the price is probably already higher than it was here, but you need to get in now because the amount of arbitrage opportunity with AI is actually unbelievable right now. Like the output, if you think about what is being gained from this software as a whole, it's unbelievable. And we're giving it right now pretty much at the cost of our delivery of it. So yeah, get some more emails, have them connected to your account, and it's going to allow you to do more campaigns, way more outreach, and get a lot more customers. So that is how you get into our email inboxes. Make sure you click new sender, get some more on your account, and get some more campaigns live and scale that business. Close to getting your customers on calls. This is phenomenal. This is amazing. Let's go. So what are we doing here? What's on screen? We got a couple of things. The first thing is this autopilot button. Very, very important button. This button is going to let you know whether your messages are going to be sent out automatically without you needing to lift a finger, or if you want a little bit more human in the loop. So if you turn off autopilot mode, what's going to happen is all of the emails that are being created, instead of them being sent out, they're going to be put into your inbox here. And so you're going to be able to send them out individually, one at a time afterwards. So if you want to do that, you can turn autopilot off. I highly recommend just keeping autopilot on. Then what's this? Daily email quota. So this is going to control how many emails your AI sales team is doing per day. Let's say you want to go big, right? If you go to 50 a day, you got to remember that you're going to have to tone that down quickly because that will burn the email inbox. We need to make sure that the prospects are seeing the emails. What I recommend for people is, hey, let's toss this on 10 to 15 a day, and then over time, let it cook. Let it cook, and it's going to get good emails sent out, and you're going to get responses, and you're going to get people on the phone with you. So that is the daily email quota. Then you choose the email delivery schedule. So how many emails are being sent out are you going to hit them on weekends? Are you going to not? The choice is yours. Right now we have them being emailed days of the week. Now you might notice there's only a start time. There's not an end time. You might be thinking, Will, why is there only a start time for when you send out these emails? It's because these spam filters are sneaky. They see, oh, this guy sends out an email every 5 minutes. This seems like it could be spam. We're not that easy to fool. We're going at random times. We're not going to be caught by these spam filters. This is why we have the best deliverability. So choose a start time, a time zone, and then at that point, you're almost done. We give you the choice. Do you want to track your email opens or not? If you try and track them as a heads up, it will slightly hurt the deliverability, but we take a lot of steps to make sure that you still get your emails delivered properly so your target customers are seeing them. And then same thing with the unsubscribe sequence, except you should have the unsubscribe sequence, so you should keep that on. But overall, that is the final step. Then all you got to do is click launch campaign, activate now, obviously subscribe now, because what is this? I mean, are you going to go forever without leads, not being able to scale your business? Or are you going to go and pay hundreds of thousands of dollars for a whole sales team? Or are you going to go and learn 5 different AI tools just to do what we just ran through in a couple minutes with MyWorker? Or are you going to be the champion? Are you going to be the person who adopts AI? Are you going to be the guy who bought Bitcoin in 2011, got in early, and made a killing? I mean, the choice is yours, but at this point, you would click the subscribe button, and then you would get rolling. There would be a 2-week warm-up process. We buy the domains the same day and begin the warm-up process. There's so much we're doing behind the scenes that we haven't even shared in any of these videos yet. But yeah, we take care of all that, and then you will get put in touch with me or someone from our team, and we will help you craft your go-to-market strategy and get more customers. So that was the final step of the campaign launch, and I'm going to end the video there. Peace. Close. So this step is a very easy step, very important step as well. As you can see, these emails, you have a full auto-generated email on. You should keep this on. This is going to do all the work. It's like the secret sauce of MyWorker. So all these emails are going to be fully AI generated. At this point, you can add follow-ups or remove follow-ups. So right now, I'm removing some follow-ups. So now we're down to one follow-up. If you want to add another follow-up, you go to this bottom button down here on the left, add follow-up. Click that. You can also maybe want to hit your targets in different days. You got your own strategy. You're a mastermind. You want to get them on calls. So in order to do that, you can choose the number of days that each of these follow-ups are sent. Maybe you want to wait 5 days and then bang, bang, you want to hit them 2 days after that. However you want to do it, the system gives you the ability to do that. And so at this point, you've got these personalized messages. They're ready to go. You can hit them in the same thread, or you can take this off and it'll hit them with fresh messages each time. The choice is yours. That is all you really need for this page. So you are all set and ready to go to the next one. Finished building our amazing list. Instead of that taking forever, we got it done really quickly. Now we need your target customers to see your messages. So what is this? Sender section. Step 4, sender section. This is just selecting the email inboxes that are going to be used to send out your emails. So this page, simply put, right now, this account has the one email that we have when we went through the onboarding, and the status is shown as inactive. That means that the email hasn't been fully bought and warmed up and attached to the MyWorker account yet. When it is warmed up, it's going to say active here, and then you're going to be able to go and connect it to sending campaigns. But anyway, this is just where you select the emails that are associated and attached to your account. And as soon as you select them, in this case, we have this one selected, you click next. Very easy step here. We are almost done reaching out to, in this case, thousands of people with this campaign. Very, very important page. One of the most important pages in the entire campaign creation process. So what is the goal of this page? Well, the goal here is we want to get you in touch with those target customer profiles that we went through on the previous page. In this case, just to reiterate, we're going after this investor, target customer, environmentally conscious investor. So there are a couple of options. Option number 1 is to go smart lead search. What the smart lead search is going to do is it's going to look at who your target customer profile looks like and all of the specifics that were filled out. And it's going to go online and into different paid databases that MyWorker is connected to and look for intent signals. So highly targeted, highly curated list of people for you to reach out to. The other option, if you want to turn this off, is go the more traditional route. And the more traditional route is something like Apollo or these other filter types of approaches. And in this case, the system, based on your target customer, found over 15,000 leads here for us to reach out to. You can go and, of course, edit any of these fields, try and make it more specific. And really, this is meant to be, hey, you've got the intent signal approach, AI forward, AI native filtering. But then not only do we have what Apollo has in terms of data, Apollo's data is integrated into MyWorker, but you also have a bunch of other different kinds of data sources being piped into MyWorker's product. You're looking at LinkedIn lead data and others. So this is like Apollo or traditional sales tools on steroids, all within MyWorker system, because of course there's all these other data pieces that are needed to give you success. So we're going to get you leads. We're going to get you in touch with your customers. And this page is a very important page to do it. A couple of little tricks that I'll leave you with. Sometimes, you want to make it a little more specific, or your target customer profile could have been more specific. You can go in and play around with the revenue bands and try and make it a little bit tighter so you can get it down to maybe 500 or 1,000 people in a campaign. And then finally, this button down here is just going to make sure that if you already are in touch with someone, they're in your CRM, you click that button, and then the system won't reach out to those people because you're already in touch with them. So that is this page. It's the lead filter search page, and this is where you are going to get your target customers that need your product. Let's move on to the next one. All right, now that we just finished up with step number 1, let's get you more customers and finish step number 2 here. So we are on the persona page. This one is actually going to be one of the shortest videos because this drop down here is the only thing we have to fill out because all of your lead personas have been filled out previously before the campaign. So this is just you choosing whichever lead persona you're going after. In this campaign, we're going after the environmentally conscious investor. And then that's it. You just click next to take you to the next page. Just to show you where you can add more, I will click save and exit and go to left-hand side lead personas. This is where your personas are. You can edit them with this button, the pencil, or you could add a new one on the top right. If you click new persona, And this is where you can fill in all of that information. All of this information is going to be useful for when you're running the campaign to that person. There is also an interesting button that I just clicked. So at the bottom here, there's a fill with AI button. So let's say that you're a little bit at a roadblock and you want to come up with a new ICP. Look, boom, it just created a new target customer profile for you based on what is currently in your profile. So we'll save that and go back to the campaign. If you want to get back into your campaign, you click on the home button and you can click on the edit button to get back into it. So that is the end of this video. Show you what is happening on this first step of the campaign creation process. So this is the first step in getting you more customers. What I like to do in this name section is you want to put whoever you're going after. So in this case, let's say you are in your lead personas and you're going after the environmentally conscious investor. You go to your campaign and you might paste it and then put V1. If you're going to do A/B tests, this might be helpful. So V1 going after this target persona. Now the goal section is one of the most unique features in the entire world of AI sales. Just this one feature alone. So this allows you to get very specific in terms of how you want to get your AI sales team to work. For example, the goal could be book a call, but the goal could also give much more additional details. We've had customers get very creative with this section. Some customers have even said, hey, call me at, and then they put their phone number. I'm not going to put my real phone number. I'm just putting random numbers, but you get the idea. This will take those instructions, like when you prompt GPT, as well as all of the data from who you're actually going after, and then craft hyper-specific personalized messages that convert better than the best human copywriters out there. So with all that said, this section, feel free to get creative, maybe offer a free consultation, assign a dollar value to it, whatever it might be. You understand your target customer better than anyone else. So do whatever you think would be best and test different campaigns. Sometimes you might see one type of goal is just nailing it. You're seeing 10% higher open rates, 20% higher interest rates. This was going to be a testing process for sure. And then in terms of email tone of voice, there's different tones of voice that you can have, very similar to the last piece. Maybe there's going to be one that resonates better with your target customer. So there's going to be different types of campaigns you can run here. And then finally, your meeting booking link. If you've got a Calendly link or any calendar link, it doesn't have to be Calendly, then feel free to toss that in there. And that's just going to be in the back of the system in case your AI agent, AI sales team ever needs to reference your calendar link. So that's all of the details on step one of creating a MyWorker campaign. Hope this was helpful. Thanks. So now, before we launch the first campaign, we just need to do a couple of things. The first thing is just to recap. You want to do one final review on your company overview and your lead personas and your email inbox. The email inbox, this is the one thing that might take a little bit of time. Once you activate premium, at that point, this inbox will begin to warm. There's a lot of work that you can do to get your campaigns ready, but as soon as you go to plans and billings and click subscribe, that is when you're going to have the ability to go and get your account, your emails started. So before you launch, you got your integrations page. This is a very important page because you can link your CRM. Make sure that if you're already in touch with someone, maybe you don't want MyWorker system reaching out to them. It's also integrated with Zapier. That can take care of any more custom types of workflows you need. But one that customers really love is this enter email section. So let's say that your main email is joe@gmail.com. We can go and acquire a bunch of email inboxes for you. And MyWorker system will scan all of those email inboxes and then make sure that the interested ones also get forwarded to your main email. And so finally, the onboarding pretty much took care of everything. You're ready to rock and roll here. So let's say you're in lead personas and you want to go after the eco-conscious passive investor and ICP target customer that we went after, right? Eco-conscious passive investor. So all of this information is going to go into your campaign persona. So we're going to go after this person. Now, let's say goal. The goal could be book a call, but you can get very interesting and creative here. So let's say that instead of book a call, let's say offer a free consultation, $500 value. We want to put some value on it for their portfolio. Now, this is just one example. You can literally do whatever you want to do. It's like a custom ChatGPT instruction. You can assess the tone of voice. Boom. Already on the next step. We're so close to having hundreds, potentially thousands of personal emails sent out. So we're going to choose this target customer that we're going after. So we selected. And now this is a very interesting page. So this page is where you're going to select who you're going after. And there are multiple different methods we can take. This will just be more similar to Clay based on news, data enrichment, leads, people's activity online. So hyper-personalized. And then the other option is generate AI filters. So for SAS mining, it's looking at the target customer persona that we selected, and it filled this out, found 3.2 thousand leads. If you don't want them in your CRM or to reach out to people who are already in your CRM, you click this. Then you just choose the emails that you want to connect to the campaign. This is the one that we set up initially. You're going to have multiple once your account's all ready. And then here you build your sequence. I mean, this is an amazing screen. We've got the best personalization on the market at the moment. Let's say you want to wait 5 days. We hit them with an initial email, one follow-up. Then you go click next at the bottom. You can add more follow-ups here if you want. And now you just choose the number of emails that you want to be sent per day. I always keep autopilot on, so it automatically sends, but you could turn it off if you want to read the emails first and then manually send it from your inbox. And then you just select the days of the week and launch. Boom, just like that. We're reaching out to 3.2 thousand people. And that was under 5 minutes, so it's pretty good. If you haven't heard of MyWorker AI before, I am welcoming you to MyWorker. So we're going to go through an overview. What is MyWorker? How does it work? How's it going to get you more customers? So this page right now that you're looking at is the login page. So right when you log in, you're prompted to put in your website. After you put in your website, what's MyWorker doing? Well, it's doing everything that a top level sales team would do, which is learning about your company, learning about what products you guys sell, what makes you different from your competitors, who are your competitors. All of this background information is what MyWorker AI system is doing right now as we speak. What's very interesting is right now we're using a company, SAS Mining. This would traditionally be very, very difficult to find expertise on because you need someone who has expertise in Bitcoin and Bitcoin mining. For those of you who don't know, feel free to pause on the screen, but SAS Mining is a Bitcoin mining as a service firm. So anyone who might go and buy Bitcoin on Coinbase can now go and start mining Bitcoin through SAS Mining service. So very niche. And as you can see, the system did an amazing job pulling everything together. And all of this information, when you're going through your own onboarding, is editable. So you can go, just like you would prompt ChatGPT, and put in your information here. And this is going to be in the brains of your AI sales team at MyWorker. So then after you go through, and this is all editable later, so you can go through the onboarding and then later on edit all this information. You click next at the bottom here. And so what's this page? Well, this is what a top level sales team would do next is they figure out who are the best people for you to reach out to and who are your target customers. And so right now, right off the bat, you see 3 different target customer profiles that MyWorker just generated for SAS Mining. And in here, it's not just a description high level. It went deep. It's figuring out what are the, not just industry, but the pain points of that person. What are the solutions that you can provide? And why might they say no to buying? And a top level sales team would know why they might say no and then get them to say yes or overcome those objections. And so this is one of the secret sauce areas of MyWorker because it takes it deeper to make sure that your AI is operating at a top level sales objection handling capacity. Now here, you might be thinking, okay, what's this page? What's ad sender? This is actually a very important page. So you're trying to reach out to people. You want to make sure that your messages get seen. So on this page, this is going to allow you to set up all of your email inboxes. So this just starts you off with one. The name in my email is Joe Schmo. That's why that's put there. You're going to want to put whatever your role is. And then you can choose an email domain that you like. And then rather than you needing to go and set up a whole Google workspace and doing all this stuff, all you got to do is put what you want is your email and then your name, role, and then click finish. And just like that, you have been onboarding onto MyWorker. You are one step closer to having your AI sales team as a service ready at your fingertips and getting ready to scale your sales. Why this senders page is so important. And this is what is going to make a huge difference in your outreach campaign, or one of the reasons why you've heard a lot of people say, oh, email hasn't worked for me, but it will work. And the big difference comes down to the email accounts, the deliverability, making sure that your customer is seeing your email. And so what are the challenges and why hasn't it been working for many people? Well, these providers have gotten really good at catching, people trying to spam. We don't want to spam. We want to do highly curated, find the target customers of people who need your product, and then show how you can help them. So that's what the software does. But in order to do that, we need multiple domains that will go through the spam filters that one of these providers might do to block a potential customer from seeing your email. And so we do this in a number of ways. The first one is with this page, acquiring your email inbox, right? So let's say that you acquired one, easy. Like that's step number one, but that only goes so far. We go further where we go and have a warm-up service that is built into our product, pay for this third-party warm-up that is going to send real emails in and out of that account that simulate real active emails and raise your deliverability score inside of the eyes of the providers. So we're getting you a new email. We're warming it up to make sure that you have high deliverability. And then we do other little things like spacing out the timing of when the outreach is being sent and cleaning the leads. If you go to another provider, you get the data for the leads, but you've probably seen, hey, you have a lot of bounce backs. With our service, we buy those leads and then we pay for a secondary service that will clean and make sure, hey, is John still at XYZ company? Oh no, John left. Thank God we didn't send him an email because it would have bounced back and then it would have hurt our email domain. So these are all little things that are invisible to the eye when you use this software. You don't see it, but we've taken the care and the time to do all of this to make this as easy as possible. There's so much happening with this product, but our whole goal was how do we remove all of the complexity and just have it work and feel easy to use. And this is one of the reasons why with these other services, it's like you need to be like a PhD level in their one thing, and it only covers a small part of the whole AI sales process. And so I thought it was important to just record this quick little video to talk a little bit more about the email domain aspect side of things and explain how that works. And if you have any questions, as always, feel free to drop by. And I'm streaming daily live at 11 a.m. So if you ever want to talk with me personally, feel free to hop on. That is the crash course on email deliverability and how you can get success with your cold outreach campaigns. Why this senders page is so important. And this is what is going to make a huge difference in your outreach campaign, or one of the reasons why you've heard a lot of people say, oh, email hasn't worked for me, but it will work. And the big difference comes down to the email accounts, the deliverability, making sure that your customer is seeing your email. And so what are the challenges? And if you haven't heard of MyWorker AI before, I am welcoming you to MyWorker. So we're going to go through an overview. What is MyWorker? How does it work? How's it going to get you more customers? So this page right now that you're looking at is the login page. So right when you log in, you're prompted to put in your website. After you put in your website, what's MyWorker doing? Well, it's doing everything that a top level sales team would do, which is learning about your company.
And if the document doesn't say anything about how it can be terminated, you might have a fight on your hands if things don't work out the way that you hope with the contractor. You can get out in front of that by including a proper termination provision in advance. Another thing that's important to include in your agreements with both employees and contractors, with all types of service providers, is a confidentiality provision and set of restrictive covenants. So those include, most commonly, a non-solicitation provision and a non-competition provision. A non-solicitation provision says that if the service provider leaves the company, or even while they're working at the company, they're not going to do anything that's intended to take business or team members away from the company. And usually that restriction applies only for a certain period of time after they leave. It's usually a year or two at the most. That's because states have taken action to significantly limit the effectiveness of these provisions on the theory that they're not fair to the service providers, who should have the freedom to go and work in other places and pursue other ventures. This is even more the case with respect to non-competition provisions, non-competes, because those more broadly say the service provider cannot go out and start a business that is competitive with yours. It's a little different from their commitment that they will not solicit business away from you. Non-competes have been declared unenforceable in California in the context of an employment agreement, so definitely don't include them in your employment or contractor agreements with anyone in California. Unfortunately for startups, non-solicitation provisions are also being regulated out of existence in California. So once again, it's very, very important to understand the situation in the state where the service provider is located, because that will determine how strong your contract can be, how much it can protect the company. Another important task for your IP lawyer is going to be developing the terms of service and privacy policy for your website and your products and services. In the terms of service, you're going to want to cover what constitutes a permissible use of your website and your platform, what kinds of uses are not permitted, under what circumstances can you turn off somebody's access to the service or to the website. You're going to want to cover various liability issues. You're going to want to disclaim liabilities that your company doesn't want to be responsible for and use the terms of service as a way to close off or mitigate risks that your investors might care about down the road. You're going to want to include language around user-generated content. You're going to want to maximize the company's ownership of feedback and ideas and comments that may come from your users. These are all things that a qualified IP lawyer will include in your terms of service. And also, you're going to want the terms of service to address how disputes are going to get resolved if a user ever brings a lawsuit, brings a claim against your company based on those terms of service. You might want to put an arbitration provision in there, or at least settle on which state's law you want to apply, whether it's California law or Delaware law or the law of whatever state you may be conducting business in. It does not have to be Delaware law just because you incorporated there. The privacy policy is a more complex task that is subject to laws that are in constant flux. Privacy law in the United States is primarily driven by state law. There is no comprehensive federal privacy law in the United States as of the time of this video. That is different from the environment in the European Union, which has adopted a comprehensive framework called the GDPR that governs privacy law. And you do need to understand how to comply with the GDPR if you intend for anybody in the European Union to be using or engaging with your products and services. But here in the United States, the privacy laws that are applicable to your business depend on the state where you are conducting business and where your users are located. That could be a problem because many websites, many products and services, many software applications have users all over the country and all over the world. And so for that reason, in general, what most startup founders tend to do is look at the laws of the most restrictive states, the states that have the most onerous privacy requirements, of which California is one, and determine their privacy scheme, their approach to privacy compliance based on the rules of that state. So as an example, California has a law called the California Consumer Privacy Act that imposes numerous requirements that are similar to the requirements of the GDPR. You're going to want to work with an expert privacy lawyer to craft a privacy policy that complies with these regulatory regimes, the GDPR, the CCPA. You're going to want to cover issues like disclosing to your users what kind of data you collect and how you use that data, where you're sending that data. And most important in the GDPR context in particular is you have to give your users a right to opt out of the collection of their data or to request that you delete their data and respect their privacy rights under those laws. Overall, this is not an issue where you can take a boilerplate privacy policy that you found on Google and copy and paste it into your website. You should work with an expert privacy attorney who is monitoring developments in these areas that are constantly in flux on a day-to-day basis. If you take this approach, it mitigates any risk that comes with being in an uncertain regulatory environment, and it creates confidence in your investors who might be looking at your privacy compliance approach, that you're not going to have to spend their money to take additional steps to comply that you could have taken at an earlier stage with a compliant privacy policy.
All right, let's talk about bootstrapping, self-financing. So bootstrapping is the way that a lot of companies end up getting started. Basically, the founder has additional capital that they end up putting into the company. Most founders will end up putting money into the company because we want, from an investor standpoint, we want you to have a little skin in the game. But bootstrapping is basically, from the startup's perspective, is that you either have money or you're doing something like hybrid entrepreneurship, where you're able to bring in capital into the actual company, and from there you can either pick up clients and you continue to get more money from them and you start driving revenue that way, and you don't need the venture capital to accelerate growth yet. There are definitely a lot of instances where, if you look at some of the companies that are out there, they bootstrapped for a very long time and then they're like, hey, we've kind of hit our threshold on what we needed to do, and so for us to reach those next stages, we'll end up raising a significantly larger check size and round, and they still might end up calling it a seed round. And so bootstrapping can be effective. All right, let's talk about free money or non-dilutive funding. So this is some of the best money that you can get because it doesn't change the company at all. A lot of the time when you're starting out, this is one of the best routes to end up going, because without something tangible and without being a multi-time founder, you won't be able to go to venture capitalists. And so the way to launch a venture or get something off the ground, there are a couple different ways, and there's no silver bullet here. But one of the great ways is to be able to get free money. And so when I say free money, I'm talking about going out and picking up a grant for a couple $100,000 for doing a study and picking up a technology, whether it's in medical or something else, or going through and doing contests. So winning pitch competitions, which can bring 5, 10, 20, 50K check into the actual company for really getting those initial kind of pieces off of the ground. It's not just great for the company on actually getting money, but you start building more credibility as you go in and raise from investors. And so when an investor looks at an actual pitch deck, it's like, hey, we won 10 pitch competitions and we raised 500K from these 10 pitch competitions. Like, that's a great indicator for us on the type of founder that you actually are. So when I'm looking at it, I'm like, oh, good, they went out and they did all of this extra work, and that's how they were able to launch this. It tells a much better story for the investors and then for the founder, because you didn't give away a ton of equity at the beginning. So free money is definitely something that you want to end up looking at, and something that absolutely should be pursued. So the friends and family round is, it's not great from a nomenclature standpoint, but it's that very kind of initial round where you're getting people that you either know or family members to be able to contribute a certain amount of capital. This can be very kind of similar, where you can either get a grant or the free money that we talked about in kind of the beginning. You can be going through an equity-free incubator. But the friends and family round is typically you're getting 0 to kind of 50K from a bunch of different sources. Whether you have access to the capital or you actually don't, there are different ways to go about it. But the friends and family round is typically that first stage of, hey, this is what we raised, to kind of get us off the ground and get a little bit of traction so we can take those next steps through our actual venture capital raising journey. Startups raising capital. Let's talk about angel investors. So angel investors, honestly, they can span from investing at the very early stage, from call it $3 million all the way up to a Series B. They can fall anywhere kind of in between. Now, my perfect round to me is call it a $2 million seed round. I have 3 VCs in there for $500,000 each, and then a bunch of strategic angels that cover the other 500. Angel investors can add a lot of value to your actual venture. Generally, they're experienced executives. They might not be as familiar with investing as you might want, and their process might be a little bit slower than a typical VC. But having those people on your cat table can be of significant value because of the connections that they can actually make for you.
All right, guys, how's it going? So I am about to hop into this board meeting. My call with my with Andre ran a little long. So yeah, anyway, here's what we're gonna do. We are going to play.
Party time. All right, guys, gals.
Oh, I think it's a color thing on my screen. All right, anyway.
If you're wondering why I'm still...
All right, here we go. I'm going to play this video, and I'm going to mute myself and hop into this board meeting.
talking and not inviting the next panelist is because the stage is being rebuilt. However, I can talk a bit about the next presentation. It's going to be about mining, and I really enjoyed what this person wrote recently on Twitter. Most people, so I'm going to quote him, most people miss the real story behind Bitcoin mining. It's not all machines and megawatts. It's men and women showing up every day, solving real problems and rebuilding pride in forgotten communities. Beautiful. I think with this, I will invite Kent Halliburton on the stage. He's the CEO and co-founder of SAS Mining, and he's going to talk about, or at least the name of his conversation is going to be about Bitcoiners must mine. That's a statement. Please.
Thank you.
Thank you.
Yeah. Not that we should mine, or maybe we can mine, but we must mine. That's what I'm here to talk about. Before I do, I just want to say how grateful I am to be here. It was about 6 years ago. I was living in Portugal. My wife's Portuguese, and so lived there for 6-7 years. And I used to go to this place called The Block and work with this guy. And he'd just come back from the Baltic honey badger, and the passion and excitement that I could see from having been here always put a little note in my mind of like, okay, someday I'll get to be here. And it's wild to me that I get to not just be here, but get to talk to people that have inspired me on my journey. So grateful for that experience. But why Bitcoiners must mine? I'm going to get into that. But before I do, I want to first address a point that I don't think I've heard many people talk about, but Bitcoin is a 0-to-1 innovation. We've heard that a lot. What I haven't heard very much is that it's actually 2 0-to-1 innovations. And the first one, we know and love and appreciate the fact that we can send value anywhere on the planet in an uncensorable way because of the decentralized ledger, the blockchain. The second, though, is when we created the first block, we also created the ability for anybody to participate in money printing, right? We decentralized the money printer. So as long as you obeyed the rules of the Bitcoin network, you could generate and create your own Bitcoin. And that simple fact is actually quite profound. So when I say Bitcoiners must mine, I think it's first important to define what a Bitcoiner is because I've not actually heard a definition for this. So this is what I'm going to use throughout the presentation, although it may not be agreed upon. But what I see is Bitcoiners are people that have chosen to save Bitcoin instead of fiat to build a better future. And I think the key distinction there is that word save, because something seems to happen psychologically to people when they start to save in Bitcoin. And that's the point at which they cross the Rubicon and start to see the world differently. And the reason for this, I believe, is because having lived outside the US for about 11 years in 3 different countries and traveled fairly extensively, I've seen that people use savings for the same thing over and over again. And what are these things? The big life events, right? And a lot of this is driven by biological needs and urges, but the first one is just that buffer that allows us to handle situations of emergency, right? And I won't touch much on that because that's just kind of the first step in savings, in my opinion. The bigger ones are actually things like housing, marriages, our retirement, education. All of these events, what they have in common is the fact that they actually help propel us forward in our lives and in our future and help to build out the future generations. And these happen regardless of the cultural civilization. These seem to be fairly common. So savings is fundamental, and hard savings gives us something truly important to stand on. So I try to think of the moment in time when I was saving dollars, right? Coming from the US, that was the focus. I was saving dollars, and it just felt like instead of having this hard ground to stand on, it felt like I was in a hamster wheel, right? And spinning around, trying to keep up with it all. But having chosen to save in Bitcoin, it feels like I'm standing on this firm foundation, and that firm foundation gives hope. And I think that's super important. You know, hope.com is something Michael Saylor purchased. You hear that word come up a lot in Bitcoin, and it's because it orients us towards the future. And there's something really important about being oriented towards the future, and it's because it's extending our time horizons. And when we extend our time horizons, you know, most of us believe that we're more than our 5 senses, and that aspect of ourselves that's more than our 5 senses, it's timeless. And so the more we extend our time horizons, the more we align with that aspect of ourselves, and that puts us in our best behavior, I believe, not only as individuals, but also as societies and civilization, right? And so we start to protect the future generations when we think in this way. So there's a prototypical journey that most Bitcoiners go on, and I think we've all, well, most people I talk to have been on this journey, where you buy a few sats on an exchange, you see it go up in value, you buy a little bit more, that was a good thing, and then pretty soon you start thinking, wow, this is maybe too much to keep here, maybe I want to store it myself, so you get a hard wallet, and then maybe after having a hard wallet, you start to feel a little better, and now I'm going to get a node because now I want to be able to transact and not be censored, and then pretty soon you start to think, well, maybe I should get a multi-sig setup so I can be really secure, and then the last stage in the journey, I think, is mining, and arguably, it historically has been the first stage in that journey. What am I talking about? Little known Bitcoin acquisition history. So I rarely hear this point talked about, but if you meet an OG, and an OG I define as somebody from the 2009 through 2012, early 2013 time period, if you meet somebody there, you see that they have a fondness for mining, and it's because you couldn't run Bitcoin at that time without mining. And so that was the primary way that people during that time period acquired their Bitcoin. As something fundamental shifted around 2013, and I personally believe, although I'd love to talk to a Bitcoin historian about this, but I personally believe that it was Coinbase. Coinbase opened up and made it an easy to use user experience for people to buy Bitcoin. And suddenly the timeline shifted. We had a split. Now most people started to acquire their Bitcoin by buying it instead of mining it. All well and good, but there's been some unintentional consequences. And these unintended consequences are, it's divided buyers and miners. Now, I will ask you, just quick show of hands, how many people are miners here in this room? That's more than I typically see. A few. How many people are buyers? Most of us, right? So you go to any Bitcoin-only conference, and what you'll notice is there's not many miners. If you go to a mining conference, there's not many Bitcoiners. Our community is divided. And I think that that's led to some unintentional buyer amnesia. And what I mean by that is mining has sort of become this odd thing that's kind of left off in the corner, and because it's unknown, it seems like some people in our community sort of almost have a fear of it in an odd way. And this misalignment, because we as a Bitcoin community aren't mining, I would argue is part of the reason why downstream of this, we have more mining centralization. So before going into the mining centralization, I do want to talk for a minute on why this happened, because I think it's fundamental if we want to actually move forward and try to address it. So the first one I've already mentioned, which is convenience. The second one, so these are a little out of order, but the second one I'm going to address is supply and demand. There is a fundamental driver if you want to buy a big amount of Bitcoin to go buy it rather than mine it, because when you mine, it's a bit at a time, right? You're spreading it's like a DCA process, so you can't buy in bulk in the same way. Now, I personally think that the mining community has also let down the buying community, because we've not actually delivered a platform to make it as easy to mine as it is to buy. And the reason for that is just self-interest. People have said, hey, cool, it's better if I mine for myself than try to help others. You know, the picks and shovels hasn't gotten so far in our industry. And the last point is a bit subtle, but you know, exchanges, their primary revenue stream is making money off of the exchange from Bitcoin to fiat, right? They take a cut of that. And so they don't have a lot of interest in driving people to mine either. So they're totally happy taking that revenue stream, and frankly, mining is a competition for Bitcoin acquisition. So let's talk about mining centralization, because this concerns a lot of people, including me. And I would argue that we have actually allowed the mining centralization to happen. And the reason for that is because we as a community have been buying instead of mining to acquire our Bitcoin. Had we been mining, we would not have allowed the mining centralization issues to happen, because we would have felt the network threatened and we would have worked to try to avoid it. Now that's a counterfactual I can't prove, But I am going to make a couple points about mining centralization that I think are pertinent to that thesis. So miners are primarily chasing fiat on the Bitcoin network. Now that may sound odd, but if you're a publicly traded company, you have a fiduciary responsibility to return dollars, not Bitcoin. So by definition, you're using Bitcoin as a proxy to get more dollars. And that's a lot of the hash rate on the network. And you can see that there's other centralizing forces that have happened. So this was as of just a couple weeks ago, but about 47% of the hash rate on the network was aggregated in 2 mining pools, Ant Pool and Foundry. That's just two necks to choke to be able to double spend a Bitcoin transaction, shaking the whole faith and confidence in the entire network. That's not much. That's worrisome. Now, there are solutions in place, Ocean mining pool. There's other Stratum V2 mining pools spinning up to try to separate this a bit better. But the other one is the hardware. The supply chain right now for mining rigs is 65% dominated by Bitmain. Again, single throat to choke there. So the solution is we must mine. There's no way around it. And I think there's actually 3, instead of just sitting here and finger wagging at everybody, I actually think that there's 3 reasons. 1 is economic, 2 is moral, which I've done a lot of moralizing already, but 3 is strategic. And I'm gonna go through each of these. So the first one is the daily cost to mine a Bitcoin. So we've got a nice calculator on our website that portrays this, but this very simple fundamental fact of how many sats you're getting for the energy you consume, turning that into a price point is something that I display this to many people and they're kind of surprised. They're surprised to see that for $40,000 less, you can be dollar cost averaging through electricity into a Bitcoin position. And I think the reason why is because a lot of people have conflated dollar acquisition for Bitcoin acquisition. So when you get into mining, you have to make a decision. What is my money? What am I trying to get? And unfortunately, people have analyzed this and tried to put together Bitcoin acquisition and dollar acquisition, trying to trade cycles, and it's really confused people. That's the fault of the mining industry. But if you're a Bitcoiner, you want more Bitcoin. So if you want more Bitcoin, how should you be looking at this? Well, easy. Am I getting more sats by buying or by mining? That's it. And so from that standpoint, it actually doesn't make a lot of sense to talk about ROI. I mean, you've got a 0 to 1 innovation here. It's the only way to generate new Bitcoin. And I will say that again, because it took me about 2 years being in mining to make that realization. It's stupid simple, but Bitcoin mining is the only way to generate new Bitcoin. So why would we put dollars into something and then evaluate how long it takes for dollars to come out? You want to see what is the price of the Bitcoin that I receive. So trying to get people away from an ROI mindset and instead a comparison to the exchange price mindset is part of the journey here. The second one that I actually think is more important right now, as the walls of the surveillance state have been closing in on us, is the wild sats, right? I don't like to talk about them being KYC free too much because of the regulatory eye of Sauron that might come down on us. But the reality is this is a hardware-based experience. You're converting electricity through hardware into Bitcoin. And as a result, it's not in the banking sector. You know, it's not subject to those regulatory walls. And if you're able to get more sats for your dollar, well, it's a shorter time frame to fiat independence, right? Which I think is what most of us are working towards for ourselves and our families. So the moral case, alignment matters. And I've touched on much of this already, but you know, having our social layer here all participate in mining, that's going to put skin in the game for our social layer in a way that right now, just by being part of the ledger, we don't have that same skin in the game. And that makes our network less reliant on corporate profits, you know, the quarterly cycle. I've worked for a publicly traded company. Believe me, these publicly traded mining companies are making decisions that are not always in the best interest of the network when they're deciding when and where to deploy hash rate. Our network becomes more decentralized as the ownership spreads out, so that's helpful. And our community becomes more united. Things like the op return debate that flared up earlier this year would be much less likely to happen. So the strategic case to mine is probably the most controversial of the three ideas I'll throw out there, but I believe our behavior right now is being driven by Gresham's law. What do I mean by that? I mean that we are driven to get rid of our bad money and hoard the good money. And you can see this right now, I believe, because the liquidity profile for this cycle is fundamentally different than any of the other previous cycles. Regardless about what the actual number is on exchanges, and the best data I see is about 2.4 million, the balance has been drawing down for the first time this cycle as price has been going up. That's different. And I believe that that's a function of Gresham's law. And if you look at just this isn't Bitcoin's total addressable market, but it's global M2. This is the liquid money that's sloshing around the globe right now. It's 95 trillion. If you tried to price all of the Bitcoin right now and move it through that global M2, it's 360,000 times as much, right? So it would be trivial for all that Bitcoin to disappear, be locked up, turned into collateral for loans. It just seems obvious to me that that will wind up happening at some point, and that'll move us to an earn phase from a buy phase. So getting involved with mining sooner than later is a strategic angle. So Bitcoin is a ledger and a legacy. I love this picture. And at some point in my life, I'll probably make a trip to go see this particular cathedral. But I love this picture not because of the cathedral itself. This is the Milan Cathedral, but because of how much time it took to build it. This cathedral took 589 years to build. And I cannot imagine any project that humanity would set out on today with the time frame of 589 years to completion. Here's the thing though. That's the time frame of our project, Bitcoin. If we don't have that mindset, if we don't align with that sort of a time horizon, we're not going to be successful. We're not going to be successful in separating money from state. And we're not going to be successful in securing the next generations. So I see this as not just a strategy to mine, but fundamental responsibility. So how you mine honestly doesn't really matter to me. I just want to see more of us doing it for all of the reasons that I've listed. Whether you're going to go get a BitAxe, a hash rate heater in your home, whether your buddy down the street is hosting a few mining rigs and you want to throw in with them. But what we've created at SAS Mining is mining as a service. And it's a fundamentally different approach, and it's fundamentally different because when I came into this industry, coming from the rooftop solar industry, we're building hundreds of rooftop solar systems all over the US each month, and I realized that nobody had come in and optimized for the one thing that you have to optimize for if you're going to deliver mining, which is trust. There's no way for me to have possession of somebody else's equipment without that being a trust-based relationship. There isn't. So thought long and hard about how to do it and said, look, I could make money selling hardware. I could make money selling electricity, but if I take a portion of the block reward now and build my entire business based only on that, now I'm not feeding myself unless I'm delivering for my customers. So that's how we built the business model. And we do that, so no markups on electricity or hardware, carbon-free power in all the locations we are, Paraguay, Norway, the US, and I actually fly to Ethiopia in 2 days to go check out our next opportunity. But our customers own the mining rigs, they own the serial numbers, it's their Bitcoin all the way through, we never touch it, we just have the mining pool split off a portion of it to us as our revenue stream, and so we only earn when our customers do. So that's us at SAS Mining. And Bitcoin is hope. Jeff Booth's book, The Price of Tomorrow, was probably the most important thing to move me from a rooftop solar career into Bitcoin mining, having that energy background. But, there's a sort of an old saying from the 60s that we're riffing off of here, but, plug in, turn on, and stack yourself out of the fiat system. Thanks so much.
All right. How many people are on their way running to mine at the moment? Wow, this is more hands than before when Kent asked about the miners. So that's good. Anyhow, we are...
Good morning. Yeah. All right. Welcome, everyone, here at this incredible mining facility in Georgia, and everyone tuning in with Bitcoin Magazine to the very first glimpse at Proto. My name is Max Guys. I lead product managers and chip designers working on Proto and other Bitcoin initiatives at Block, and I'm going to be your host for this morning. To kick things off, I'd like to introduce Thomas Templeton, who leads Block's hardware organization, as well as a number of Bitcoin initiatives. Thomas has played a key role in virtually every hardware product Block has ever shipped, starting with the earliest Square readers, to Square Register and Terminal, to BitKey, and of course, now Proto. Prior to Block, Thomas worked on the iPhone engineering team and held roles at leading semiconductor companies. Please join me in welcoming Thomas.
Right, thanks, Max. Welcome, everyone. Before we get started, I want to give a special thank you to Core Scientific for letting us use this facility today. For the last several years, mining hardware has become an area of increasing centralization for a network that requires decentralization to work. And that's why what we're here to share today is so important. I'm super excited to introduce Proto. Proto is a new part of Block focused on Bitcoin mining products aimed at decentralizing mining hardware and providing access to more tools for more builders, with the ultimate goal to help increase the resiliency of the network. Since 2009, the team behind Proto has shipped tens of millions of devices for Square and Cash App and BitKey. Our team of in-house chip designers, hardware engineers, software engineers, and operation folks bring combined decades of experience building category-defining products. And prior to Block, the team played flagship role. It's
party time. All right, guys, gals, everybody, I'm super grateful.
All right, guys, as a heads up, I am on the board meeting right now and had a couple of other calls come up. So what I'm going to keep doing is I'm going to keep playing some background stuff on SAS mining. So as you know, this is my other company. It's the one that I'm on the board meeting for. There's this very good keynote that was given about why Bitcoiners must mine from our CEO. So I'm going to play this for you guys. I think you guys are really going to enjoy it.
Grateful to be here today, talking to all of you. You know, there's moments in life where personal and professional meet, and Bitcoin Alaska feels like that for me. So I grew up on the Oregon coast. I'm the CEO and co-founder of SAS Mining now, and I spent about a decade living outside the US, and these days I find myself living in the rainforest of South America. So getting to come back home to the rainforest of North America is quite a treat and pleasure, and I've been appreciating the wilderness here. Feels like a touch of home, a bit more extreme than the Oregon coast, of course, but I've really enjoyed it, and I'm grateful to To be here today, talking to all of you. It's party time. All right, guys, gals, everybody. I'm super grateful to be here today, talking to all of you. There's moments in life where personal and professional meet, and Bitcoin Alaska feels like that for me. So I grew up on the Oregon coast. I'm the CEO and co-founder of SAS Mining now, and I spent about a decade living outside the US, and these days I find myself living in the rainforest of South America. So getting to come back home to the rainforest of North America is quite a treat and pleasure, and I've been appreciating the wilderness here. It feels like a touch of home, a bit more extreme than the Oregon coast, of course, but I've really enjoyed it, and I'm grateful to Wade, Ashlyn, Rick. I know there's countless other organizers that have helped put this event on, and as I look out and see all the empty seats this year, I'm absolutely convinced that next year they will all be full based on what happens here this weekend. And so thank you for coming, being the first time. Somebody was saying this the other day about how if you know who Andreas Antonopoulos is, you can see him, one of the classic clips is he's talking in front of this like empty crowd, and 10 years on, everybody's like, yeah, what you're saying is absolutely right, and I can't believe I wasn't there and part of that. That feels like what we're experiencing here in Bitcoin Alaska today. But that's not why I'm here to talk to you. I'm here to talk to you about the importance of stacking sats for our liberty and why we must mine, not I want to mine, but really we need to. I'm going to go through the reasons for that. But before I do, I was reflecting on how this was occurring on Independence Day weekend, right? July 4th, as we like to call it, Independence Day. And I'm convinced, you may not be, and that's totally fine. We can agree to disagree, but I'm convinced that Bitcoin was drafted and Satoshi Nakamoto came from the US as an American. The reason why I think that is because there's a unique set of cultural values that Americans have and that were granted when we declared our independence from the tyranny of the British. And those unique cultural values combined with the frontiersman mentality that you can find still present here in Juneau led to what I believe is the right context for which somebody could think and dream up Bitcoin, because we know that people had tried for about 20 years before to craft Bitcoin and were unable to. They didn't call it Bitcoin, but there's many attempts to create a digitally native form of cash. And I think July 4th is important because that was a predecessor event that was a necessary precondition for Bitcoin. So I'm appreciative that this is occurring on Independence Day and just wanted to point that out. Secondly, when Satoshi dropped the white paper in October of 2008, that was the first time. So the US, July 4th was the Declaration of Independence from UK tyranny. I see October 31st as the declaration that Bitcoin is post the tyranny of money. We have uncensorable transactions now, right? So building off of that, and we think of that as a 0 to 1 innovation, absolutely is, but what's often not recognized is when we mined the first block, there was a second 0 to 1 innovation that occurred because now democratizing the creation of money was available and accessible to all. That means any person in this room that decides to follow the rules of the network and mine has the ability to create money. So it's the decentralization of the money printer, in essence, is what Bitcoin offers, Bitcoin mining offers. And I think that's lost on a lot of us. And there's reasons for that. I'm going to go into it. But I said Bitcoiners must mine. And I think when I say that, there's a common question that comes up for many of us is, what is a Bitcoiner? I'm going to give you my definition. And I don't think it's the definition that is commonly held, and that's okay. We don't all have to agree on it. There's lack of consensus on this one. But I see it as a person who voluntarily decides to save Bitcoin instead of fiat. And that is an important distinction, the voluntary I've highlighted there, because you have to choose it on your own. Right? You have to go through the work necessary to get there. In the earlier years, it was much harder to get to the point of realizing, oh my gosh, if I save Bitcoin, it's less likely to erode and fritter away, the melting ice cube analogy, than if I save fiat, which is inflation is going to erode the power of that purchasing power of my savings over time. But we now have greater educational materials, and it's easier to make that leap, but you still need to voluntarily accept that Bitcoin is a better form of savings than fiat. And when you do, there's some shifts that happen. I'm going to talk about those in a moment. But I think it's important to talk about why we save, because cross-culturally, again, I've lived outside the US for a decade now, and I can.
All right, guys. I hope that this is very interesting. I'm trying to get this talk out there because, I think it brings together a lot of very great ideas, building on the past of Bitcoin mining. And I'm literally on a call with Kent right now, and it's amazing to be able to work directly with him on trying to come up with some of these ideas, how to improve things. But yeah, with all that said, I'm going to keep this playing. Once again, this is for the other my other company, SAS Mining. I know we do a lot of work with MyWorker on the channel, but want to cover SAS Mining a little bit here.
I can say this from lived experience. The reasons why we save are almost universal across cultures, and these are for the big life events. So we think of emergencies as the first reason why we need to save, and I know that's number 5 on that list, but the reason why I have it number 5 is because I think it's the least important of the life experiences. That's like step 1 in the game of life, right? We need to have something set aside so if something unexpected comes up, we have the ability to cover it. But more importantly is the savings unlock specific biological events for us. So one is we raise our families and our kids need to have shelter. And so our savings as parents help us or our kids, maybe they go off and they rent for a little while and build their own savings to put shelter over their head. But you gotta have a shelter in this world. And so we save to be able to provide that for ourselves. We save so that we can help our children get educated, because that education helps them have the economic opportunity to save for their future. Marriages, right? So that's where the community comes together and recognizes 2 people are going to put themselves together to build a family for the future. And those are costly events that require savings. And then retirement, right? So if we're lucky, we've lived a great life, kids, grandkids, all of those things, and we're sailing off into the sunset, and we have some way to pay for our care and not be a burden on our kids, and that requires savings. So those are the reasons why we save. But there's some specific things that hard savings does psychologically, and I think these are super important to acknowledge. And I say hard savings, we talk about hard money, so I'm borrowing some language when I talk about hard savings. But we know, again, that ice cube isn't melting when we save in Bitcoin, right? The money printer, the US Federal Reserve, isn't debasing our savings. And as a result, we get a sense of safety and security, that we've got that optionality for our future and that our savings provides. And that optionality gives us hope. We're not stuck. And that's important that we have hope, because it keeps us forward looking and it extends our time horizon. So if you are thinking about savings and what you're going to do with savings, you're naturally thinking about the future. And if we think about the future, I'm convinced that aligns us with our higher selves. What do I mean by that? Almost everybody in this room that I know will readily acknowledge that we are more than our 5 senses. So whatever you want to call that aspect of ourselves, I see it as timeless. And the more that our time horizons extend out, the more we align with that timeless aspect of ourselves. And that's super important, because when we're aligned with our higher selves, we operate at our best. You can look back in human history and see that the times in which we thought with the longest time horizons were the times that we behaved the best as a civilization. It's a civilizing force. Okay, so that's all going to lead to freedom. That's all precursor to mining. Now, I wanted to establish what a Bitcoiner is, because that has actually changed. Well, that hasn't changed, but how we get Bitcoin has changed over time. And this is a bit of Bitcoin history that I think we need to know more of and spend time thinking about, because there's been a fork in the timeline of Bitcoin, and it started somewhere around 2012. So from 2009 to 2012, if you were running the Bitcoin software, you were mining. There was no separation. The software helped you mine, and that's how most of the early Bitcoiners got their Bitcoin, is they were mining it. somewhere around 2012, and I would argue, though I wasn't around for this part of Bitcoin's history, that it was about the time that Coinbase opened doors and gave us an easy way through a customer experience to buy Bitcoin, that we shifted from mining to acquire our Bitcoin to buying our Bitcoin. And when we made that shift, there were some unintended consequences. And those unintended consequences, I believe, are just now being played out in a way that's becoming really observable. So what are those? Well, first of all, when we separated and decided to go buy instead of mine our Bitcoin, we divided the community. And you can see this. We have users and devs on one side, and we have mining community. If you go to a mining conference, you'll find very few Bitcoiners there, just as you will find very few miners at a Bitcoin conference. And that is natural. It's sort of obvious in hindsight that that would happen, but if you separate mining as the main source of acquisition from how the masses are acquiring their Bitcoin, of course there's going to be a natural separation in those two communities. So the natural consequence of that is the user and dev community has a bit of mining amnesia from my perspective. Just don't understand the complications and specifics of mining and bring their priors to the table on what they think mining is without having that direct experience. So, you know, the classic Mike Tyson quote is, everybody's got a plan until they get punched in the mouth. You know, I like that quote a lot for mining because everybody likes mining on a spreadsheet, but then you go get out in the real world and you go move physical space around and deal with electricity, and boy, that's a lot different than a spreadsheet. So there's a bit of mining amnesia, and then that has led, in my opinion, to mining centralization problems. All these problems that we're quite worried about, and I'm going to touch on this in a minute, are downstream of the fact that we are acquiring the majority of our Bitcoin by buying it instead of mining it. So why? Why did this happen to us? So I would like to have a deeper conversation with Bitcoin historians to see exactly why, but I came up with a few reasons why I think this happened. One, convenience, right? It's just easier to buy than mine. I mean, let's be honest with ourselves, and we're human. We do like convenience, so it's normal that sometimes we don't take the hardest route in life. So out of convenience, we've gone to exchanges to buy. Two, I think there's a mining community failure. And I say that because most people, including when I was starting SaaS mining, I had a lot of people saying, why don't you just mine it for yourself? And I think that attitude of, I want to mine just for myself, while it's a great to be self-interested, I think that there was a failure in the mining community for anybody to develop an accessible way for the masses to mine. And that's made it difficult to compete with exchange-based acquisition. Third, supply and demand. If you were in a hurry and you want to get a lot of Bitcoin, it's much easier to buy it than mine it, right? You're going to get Bitcoin over time when you mine, but if you want a big block, you kind of need to buy it. So there's a supply and demand issue there. And fourth, there is a misalignment of incentives between exchanges and mining, right? At their core, the exchanges make money they take a cut of the fiat to Bitcoin transaction. That's how they make their profits. That's how they drive their businesses. That is not in alignment with pushing your people to mine, right? So there is a disincentive from the exchange from the exchange businesses to push people into mining, right? And I think that's a very subtle point. I'm not sure if it's even conscious, but there is a core misalignment there. So let's talk about the mining centralization problems, just to address the elephant in the room. And this is the area, now that I've given the context, on which we see a lot of our community focused, right? The major issue is, again, back to acquisition. The intention for most of the hash rate on the network, hash rate being the computational power that secures the decentralized ledger that we call Bitcoin, is there to acquire fiat, not Bitcoin. And it's using Bitcoin as a proxy to do so. Now, I say that with full faith and confidence because I know if you are a publicly traded Bitcoin mining company, you have a fiduciary responsibility to return dollars to your investors. By definition, you are there to mine Bitcoin, but ultimately return dollars to your investors. You have a legal obligation to that. And that's a good chunk, if not the majority, of the hash rate on the network. And I can tell you from going to many Bitcoin mining conferences, the majority of people in that room are also there. Hello. Okay, we're back. So let me put a couple of data points to drive this home. if you look at, and I took these numbers just 2 days ago, if you look at the combination of hash rate that is being aggregated by Foundry and Antpool, you will see that it's 47%. So the theoretical limit at which you can attack the Bitcoin network is 51%. This is a scary number, folks. This suggests that if Foundry and Antpool were to come together, they could very likely force a double spend and erode faith and confidence in the Bitcoin blockchain. This is a problem that we need to address. The second one is 65% of all the Bitcoin mining hardware is being manufactured by Bitmain. Bitmain is a, thank you. Bitmain is a Chinese-based corporation. That means if the CCP wanted to come along, they have one throat to choke to be able to bend the hardware manufacturer to their will. Do they want to? I have no idea. But the fact that this even exists as an incentive means we've got a problem. Now, to be fair, there are solutions on the horizon to both of these. Ocean demand is not in the market yet, but there's 2 mining pools that are working to decentralize the hash rate, which is super important. There are manufacturers coming online right now, and Bitmain's share of the market has dropped from 82% to 65%. So these problems are being worked on. So it's not all, dire consequences here. But the real solution to this is Bitcoiners must mine. Quite simply, we've ceded the network to fiat hashers, and we need to take it back. There's only one way to do that, and that's to get involved. And I'm going to give 3 compelling reasons why we should be doing it. First, I'm going to scratch your self-interest and say it's more economic to mine than buy. 2, I'm going to talk to you about the moral obligation, which actually I've spent a good chunk of time already kind of infusing throughout the conversation here. And third, I believe there's a market-driven reason why you're going to get to mine. So here's the economic case. The economic case, and I'm stripping everything away and making this as simple as possible, which is how much does it cost to run my mining rig and how many sats does it produce? You divide those 2 numbers and you get a price per Bitcoin at which you're acquiring your Bitcoin. That's the daily cost to mine a Bitcoin. To be fair, I have not included the mining rig in this calculation, and that's intentional. The reason why that's intentional is because it confuses the heck out of most of us. And the reason why it confuses the heck out of most of us is the price of your mining rig really depends on the timing of the cycle that we're in, and it becomes horribly complicated very quick. So you need to buy a mining rig to get started. At the end of your mining journey, you can sell your mining rig. The price point at which you get on the ride and off the ride vary wildly depending on your timing in the market. So it's a complex part of the equation, and that's why I'm just making it simple, because what I've discovered is talking to many Bitcoiners, they're not aware of this. They're simply not aware that the daily cost to mine a Bitcoin, and this is the opportunity with SAS Mining right now in Paraguay for an air-cooled mining rig, is 50% off what it would cost them to go to an exchange and buy it. So there's the market-based reason. And I want to talk a little bit more about it, because there's a super simple idea that I am ashamed to admit I didn't recognize until about a year ago. And this is going to sound silly, but Bitcoin mining is the only way to make new Bitcoin. Let me say that again. Bitcoin mining is the only way to make new Bitcoin. Why is that important? Well, it's important because it breaks the paradigm as a Bitcoiner of how we evaluate investments. So again, 0 to 1 innovation. We put dollars into an investment, we expect dollars out. The problem is if you're a Bitcoiner, that's not what you're saving in. You're saving in Bitcoin. So it makes 0 sense to think of it in terms of ROI, a mining investment. It makes all the sense in the world to say, am I getting more sats for my dollar? Which means you need to be comparing to the price on an exchange. Am I getting those sats cheaper by mining than buying? That's the real question we should be asking ourselves as Bitcoiners focused on saving Bitcoin for our futures. 2, there's another advantage, and this is actually the one that gets most of us more excited these days, given what we see in the world. But you get wild sats when you mine. These are Bitcoin that are generated directly off the network. You're going around the entire surveillance state banking system. I don't know, just quick show of hands, who's walked into a room, not noticed a camera was sitting over there, and then as soon as they noticed that there was a camera observing them, they suddenly kind of froze up? Does that happen to anybody? All right, I'm seeing heads nod, if not hands coming up. So yeah, that's what happens to our sats, guys. Our sats, when we buy them off of an exchange, and I see this because I see how my customers are using their sats. When you buy your sats from an exchange, I like to call them surveillance sats, because they sit in your wallet and there's just this psychological friction of, can I really use this? Do I want to send 20 bucks to my buddy in Australia to help him and his wife out and for a baby gift or something? Or I don't know, there's a taxable event there and all sorts of stuff, right? So there's just that friction. And so I see wild sats as being important to help us with the circular economy. Finally, and I think, again, this is something that are we good? I'm still here. All right. Thumbs up. So if you get more sats for your dollar, you're able to shorten the time at which you break away from fiat dependency. And I think that that's super important. So I think you got an economic and moral obligation to your families to get more sats. So this is the economic case, and I guess I threw in a little morality there at the end. But the moral case, there is no more active Bitcoiner than a Bitcoiner acquiring their Bitcoin through mining. You become skin in the game social layer. That is very different than buying Bitcoin on an exchange and holding it and lacking that participation. When you're a miner, you start watching things like hash rate, network difficulty, block times, all these things just naturally happen. You come viscerally in contact with the network. And that's important because with that comes a focus on decentralization issues, and we will naturally purge those out of the ecosystem by aligning our incentives. Thirdly, you may have heard of the op return debate. The op return debate sort of has fired up the community. We now see Bitcoin Core has lost a lot of support, and there's been some reputational damage. We've seen the uptick of knots as the primary implementation. You know, I'm not going to get into that argument, but I will point out the entire argument comes from mining centralization issues. The fear at core was that mining and how the push through of op return was justified was around mining centralization fears. That's how it was justified. So had we been acquiring our Bitcoin through mining, those fears would not have come to pass because they wouldn't have existed, because we wouldn't have allowed the centralizing forces to come into play in the first place. So we're going to reunify the community by taking back the network. Now the market case, this is an interesting one. We're seeing something observably different this cycle. This is my third cycle, and that's that exchange-based liquidity is going down while price is going up. This is the first cycle that this has occurred in. Now, there's a lot of argument as to how much Bitcoin is on exchanges, and frankly, I don't want to get into that argument, but I will say the trend is very clear that it's going down. And it makes all the sense in the world because of Gresham's law. So as human beings, we are governed by Gresham's law when it comes to money. We want to spend the bad money and we want to hoard the good money. Classic example of this is going back to Roman times and the denarii, when the merchants on the street started to hoard the denarii, the silver denarii that was not debased by the Roman government. As it was debased, all the good money suddenly disappeared and the bad money was what was left in circulation. It's my belief that you see that occurring right now with Bitcoin. And to put some numbers on it, there's about 2.4 million Bitcoin on exchanges. If you look at global M2, this is the total liquid money that is in the world economy, it's 95 trillion. That represents 360,000 times the current value at today's price for Bitcoin that's on exchanges. It seems absolutely obvious to me that all of that fiat at some point is going to try to get Bitcoin.
How's it going?
And there's enough fiat wealth floating around.
As a heads up, I'm in a board meeting right now. So we're playing a video from our CEO
and when that happens,
talking at a conference.
We're going to move from the buy phase to the earn phase. And what I mean by that is you're going to have two choices in the earn phase. You're either going to have to sell goods and services, or you're going to have to earn your Bitcoin by mining it. So I think the market is going to compel us to be miners. And so the sooner that you get started mining, the sooner that you're going to understand mining and have a leg up in that game. So this picture in the lower left, lower right, excuse me, is the Cathedral of Milan. Does anybody have an idea of how long it took to build this?
20 years?
589. 589. I put this here because human beings are capable of having a very long time horizon. However, can you imagine, or do you know of any project ongoing right now in the US that is expected to be completed 589 years from now?
High-speed rail.
Correct. Thank you, Tone. It's an absurd question because our time horizons as a culture are extremely shrunk at this point. However, if we are going to be successful in our pursuit of making Bitcoin money, these are the time horizons that we need to think in. And we're not going to be able to think in those time horizons unless we truly take accountability and
How's it going, guys? The board meeting's still going on. I have a customer call that I just pushed back 15 minutes because it was supposed to start in 4 minutes. There's a lot coming up here on the stream. Sorry, I'm trying to listen to both things at once. But basically, a lot's about to go on. We're doing great. It's been a nice, busy day. And we're going to watch a little bit more of this from our CEO. I'm going to finish up my call with him and the rest of the board. And then we're going to bring on a potential customer for MyWorker.
ownership of the network and come to, in my opinion, dominate it for our source of Bitcoin acquisition. So we have an obligation to take back the network. Now, there's a lot of different choices for how you get into mining. There's Bitaxes, there's hash heaters for your home, there are various hosting companies out there, and then there's SaaS mining. And this is not a pitch for SaaS mining. I don't care how you get involved with mining, I just want you to get involved with mining. If you choose SaaS mining, though, just to talk a little bit about who we are, we're the first mining as a service company. That means we've built software specifically to compete with Coinbase for your business to acquire Bitcoin as easy as possible. I saw this as the fundamental issue, keeping people away from acquiring their Bitcoin through mining, and so we focus on UX almost exclusively and spent a long time building it. We're quite proud of what we've built, and we have a promise to our customers. The first is to focus on that world-class customer experience, and it's improving day by day with our engineering team. The second is to have total transparency with our clients and aligned incentives. So you've got three levers in this type of a business model on which you can make money. You can mark up your hardware, you can mark up your electricity, or you can figure out a way to take a share of the Bitcoin to pay for your goods and services when you provide this type of a business. We focus on the last. So we are cost pass-through. We don't try to make money selling you hardware. We don't try to make money selling you electricity. We take a percentage of the Bitcoin, just 15% to be specific. And why we do that is to align incentives with our clients. That means if I can't make your property work appropriately, I'm also not earning any revenue. And I, again, as Bitcoiners, we're quite good at aligning or thinking in terms of incentives, and this is purposeful with our business. Lastly, carbon-free power is what we focus on. So we're 100% carbon-free power. All of our data centers are powered by hydro at this point. That may change in the future, but we want to always keep ourselves 20% better than the network. So that's SaaS mining. I've given you guys all the reasons why in the world to get involved, but please mind your sats, stay humble, be free. Thank you. Do I have time for questions?
Yeah.
Okay.
Any questions?
I got two questions, kind of. The first one is, do you think there's something psychological about people wanting to trade their fiat money for Bitcoin? And second is, like, larger companies, when all the Bitcoin is mined, how will they thrive? Will they have to pivot or not?
So I'll take the second question first. All the Bitcoin will not be mined until 2140, and even then, at 2140, the security of the blockchain will come from transactions. So it's expected that transaction fees will still be a source of revenue for the mining industry. So I don't see mining ever going away. Your first question, is there something psychological about selling fiat for Bitcoin? Yes, I think that's Gresham's law. You want to get rid of the bad money and hoard the good. I think that's a natural human instinct, but it doesn't happen until you're educated on what Bitcoin is and realize it's a better form of savings. You, sir.
Regarding the 51% attack, if you combine the hash rate of the two mining pools, what is the theoretical advantage there? If people lose faith in the network and they change something into their favor, I just don't see it.
Well, yeah, exactly. You hope that there is an economic decentive, like, you know, Foundry and Antpool colluded. It would ultimately degrade their own businesses, so that it would be killing the golden goose, so to speak. So yes, there's an economic decentive there, but the fact that it's possible then makes it a risk vector for the entire network, a security risk. And so who would possibly take advantage of that? Well, I can think of a couple state actors that might not like their money printer being decentralized, that might try to take advantage of that effect, even though there's not an economic opportunity for either Antpool or Foundry to get together and do that.
And yeah, while we're waiting for this, I can give you guys a little bit more info. So SAS Mining, it's a Bitcoin mining company. We are focused on Bitcoin mining with renewable energy. I'll actually pull this over while it's generating. So just like how you can go onto Coinbase to buy Bitcoin, I started the company back in 2018. Today, there are mining facilities on 3 different continents. Got very... Hey guys, the board meeting's running a little long, so I'm going to play this one last video and then let them know that I'm going to have to jump because we got a customer coming on. But anyway, I'm going to play this one video. It also looks like I need to get my screen visuals checked because this is displaying really weird. It's been all the videos displaying really weird. But anyway, yeah, I'm going to play this video. Exciting news that I really want to share right now, but I cannot share because we haven't gone public with it. But just know that right now we're on 3 continents, and there is potentially another continent that we are going to hit, another mining facility that we're going to be doing that I'm super pumped about. So this is SAS Mining, but the way that it works is like you can go onto Coinbase to buy Bitcoin, which is great. I think people should buy and own Bitcoin. But if you want to actually take it one level further and start mining Bitcoin, what our business model does is it allows anyone to become a Bitcoin miner. So even if you don't have access to the power, the energy, or the technical know-how to run a Bitcoin mining facility, we take care of all of that. So we make it, we actually say we make it easier for you to start mining Bitcoin than it is to actually buy Bitcoin on an exchange like Coinbase. And so, yep, the website sasmining.com. This is one of the companies that you're going to be hearing quite a bit about behind the scenes on. And then the other one, big news from yesterday, actually, breaking news, in case you guys haven't heard of it. I'm not sure if you guys have heard of Square, but yesterday we became the first Bitcoin mining company to integrate Square for payments. So Square was started by Jack Dorsey. Jack Dorsey is a big Bitcoin bull. And oh my gosh, the stories that I have, we don't have to dive into it all now, but the stories I have, especially around building a Bitcoin company, particularly a Bitcoin mining company, and seeing the evolution from 2018 to today. Long story short, this is a big win for the company because payment processors don't want to get near Bitcoin and crypto with a 10-foot pole. There's so many that rejected us so much, that so many issues we ran into over the years. But this is a big win, integrating with Square. They've got a great team. Very big news here. The first to integrate Square. Breaking news. But real quick, I'll get back to that. Let's check this out. Okay, so this is for YouTube. honestly, we can't let perfect be the enemy of the good. And so I think that this is good enough. I am going to update our banner image right now with this on YouTube. Settings. All right, actually, rather than me trying to figure this out, I'm going to say, awesome, this looks great. I'm going to update it right now. Could you give me the exact step-by-step instructions on where to go within the channel features on YouTube in order to update this? Thank you. I'm like clicking around all in YouTube, but it's a lot more helpful if it just tells me where exactly to go. And I would have this on screen, but don't want to get doxxed. So I'm going to do this off screen. Yeah, so that's SaaS mining. If you guys have any questions on SaaS mining, feel free to let me know. But it has been quite an amazing journey. The mission of SaaS mining is to improve humanity's relationship with money and energy. I think that there's a very big, a lot to unpack in the mission statement. But I think Bitcoin mining, you have it fit perfectly within that. I think Bitcoin at its core improves the way that value can be stored over time. I do think it improves humanity's relationship with money. And then on the energy side, many people don't know this, but Bitcoin mining is one of the most powerful levers that you have to incentivizing the development of renewable energy and the reduction of wasted energy. Because Bitcoin miners are incentivized to go after the cheapest forms of energy. It's like, do you want to pay, 20 cents per kilowatt hour for energy, or do you want to pay much less? And because of that, it allows these, let's say you're a renewable energy developer and you had to abandon a project because the economics didn't work for your renewable energy site. All of a sudden, Bitcoin miners come in, make the economics work, and spurs more renewable energy development. This is just one story. This is a whole separate large basket of worms of how this all relates. But over time, we'll talk more about SaaS mining. We'll dive into all this stuff, and I'm happy to talk about anything, any questions you guys have. All right, YouTube Studio. Go to the left, branding. Okay, so I'm in the studio. Okay, there we go. Customization. Okay, see, I wouldn't have gotten this. Got to go to the magic wand customization. Okay, okay. Here we go. We found it. Oh, it did two versions. I actually think this one's more visually appealing because of the colors, but this one is easier to read. So I'm just going to take this one. See if I can just drag this over. Okay, I have to save this. We're going to call this YouTube banner image. Okay. Okay, let's see what we got here. Ooh. So this is what's going to be viewable on all devices. I feel like this, okay, viewable on TV, viewable on desktop. It doesn't fit perfectly. I think this is a bit of an issue. So here's what we're going to do. We're going to take a screenshot and just show ChatGPT how that's looking. And we'll say, this is how it is displaying on the banner image for YouTube. And it looks like a lot of the important information is actually being cut off on different devices. So now that you kind of see how the spacing and everything looks, let's reapproach recreating the design in the best way possible that is going to make it super easy for people viewing on all different devices to understand that we're streaming Monday through Friday at 11 a.m. Pacific. And then ideally we can get a lot of this other important information about our handles in. But yeah, just, you know, the full context, you see how it looks. Let's create the final banner image for YouTube in the best way possible. Okay, let's see what we got here. Oh, and guys, we might have a surprise guest coming on. I got a call at 12:30. I actually do not know how I got put in touch with this person, but it looks like a customer call. So hopefully we can take a customer call live in 30 minutes. Might be a little embarrassing because I don't know how I got put in touch with him, but I'll first ask him if he's okay being on stream, of course. And also, wherever you're watching, make sure you, if you want, you remember to follow and stay up to date with what we're doing here and what we're building.
So the topic about which I've been asked to speak tonight is the making of an investment banker. And I would start by saying investment banking is hard. It's also extraordinarily rewarding.
A while back, well, it's not that long back, but Perplexity got valued at, I think it was $18 billion. So a lot of people are thinking, how does an $18 billion company go and put in a $34.5 billion bid to buy Chrome? And why would they want to do that? These are some of the things that we're about to dive into. All right, so the TLDR. And for those of you guys who don't know what Comet is, well, I guess it says it right here, but it's Perplexity's browser, agentic browser. So it can go, the crazy thing is, I have friends who've been using it. I am on the pro plan for ChatGPT, but I have not used Comet. I've seen some videos, so maybe while we're live, I'll just go buy Comet so we can try it out. But here we go. So they launched it. Early access began July 9th. Perplexity made an unsolicited $34.5 billion offer to buy Chrome amid the DOJ remedies. Kind of genius, even if they don't have the funds to do it, just because it gets everyone, it puts it in people's minds. You know, Perplexity, maybe Perplexity is going to buy them, you know. Sale is unlikely. Valuation context. Rival analysts have floated a 50 bill plus as Chrome's potential value. So Perplexity intentionally bid below that. Okay, so let's see. This is actually interesting because since I haven't used Comet, we're going to see what ChatGPT is calling Comet. Actually, you know what? I'm just going to, as you guys can see here before I went live, I was trying to go live on TikTok. Yesterday we went live for the first time. For some reason, we don't have access anymore. This is one of the things that I was very surprised by, how easy it is to just get your access to live streaming taken away. No idea what I did. No answer. No clarity on that, but it's okay. It's their prerogative, what they want to do with their company. But we are streaming on a number of different platforms right now. I think we're streaming to 4. We're also not allowed to stream on YouTube right now. But we're going to be allowed to stream on YouTube again in, I think, 2 days. So we're almost there. Okay, guys, I'm getting Comet, actively purchasing Comet in the other browser here, just so you can see. I have it on the other screen just, you know, for personal so I don't get doxxed. But yeah, we're gonna get comment right now. But while I'm purchasing this, you guys should read about comment on the screen. I'll be right back. All right, so this is also going to be interesting, but I can actually drag it over for the time being, just so we can all see the same thing here. Let's see the different plans that... All right, guys, we are going to hop in with this customer real quick. Yo, how's it going, man?
How's it going? How are you?
Good. The board meeting's running a little long. Let me just... I'll be back in 2 minutes. I'm just going to tell him that I got to run.
Okay, cool. Otherwise, we can reschedule if you need to. Like, I don't mind doing it tomorrow if you want.
Oh, no, I think it'd be good to run through it now. I'll let him know. Today's been pretty crazy.
All right, no problem.
All right. 1 second. All right, I am back.
Okay, cool.
All right, dude. Well, how
How's it
have you
going? How are
been?
you?
Also, is it cool that if I put your video on stream?
All right, sure.
Okay. We don't have to, but I'll just
My
so people kind of know who I'm
co-founder is
talking to.
coming in like 2 minutes. Do you want to just check with him and then?
Yeah. I'll leave. I'll take you off screen for the time being, and when he joins, we could check it out.
All right, perfect. Yeah, I just texted him.
Cool, man. Yeah. How
How's it been?
have you been?
Pretty good, man. Pretty good, thanks. Not bad traveling all over, but yeah, quite good.
Nice.
Nice.
Yeah.
And yourself?
I'm currently getting over a little bit of a sickness right now. I didn't sleep much this past weekend.
Oh, shame.
And yeah, but I'm getting better and excited to be getting back on stream, which is nice.
Nice. That's amazing, man.
Yeah.
How's the streaming been going?
It's been fun. Yeah, I've been so at the end of last week I stopped for a couple of days because I had to get new internet. Spectrum's top internet plan was not enough for the stream. So now you might be able to see it. But there's like a little cord because I'm plugging directly into the PC. And dude, I got the 5 gig plan, the max of the max plan. So I got some speedy internet right now.
And how many viewers are you averaging?
Well, so there's the live videos or the live viewers, and then there's like the distribution across different platforms. I pay most attention to the YouTube, but in total, like on average, we're getting about like 20 live viewers, and across the different platforms, I think on YouTube, we've got like 30K views in the past month.
Nice.
Let me see. Let me pull it up. 28.2K views. So
nice, man. That's good.
Yeah. And then we're also getting, I think we get a bit more on my Instagram and some other platforms. But
I saw those LinkedIn campaigns you were putting out, the ones where you were doing those AI ads. They were pretty cool.
Yeah,
I saw the New York billboard one. I was like, at first I was like, no ways, what? And then I realized you.
Yeah. Dude, I got a bunch more billboards, guerrilla marketing stuff in my back pocket just in case.
Nice.
Yeah. Are you back in SF right now?
No, I'm not. I am in New Jersey at the moment.
Oh, okay.
Yeah.
What are you doing out there?
Just chilling for a couple of days and then going to New York for the next like 2 weeks.
Sweet.
That's work and everything, and then I'll be back in SF around the 20th.
Okay. Are you going to be there during Tech Week?
I will, yes. Are you coming?
I'm going to have to. That'll be my next trip out there. I've got a lot of friends out in SF that I've been wanting to see, and keep asking, and I think SF Tech Week is going to be the week.
It's definitely, it brings a lot of good people there, yeah. And then I'm going to try to do LA after as well.
Dude, hit me up. Yeah, you should definitely come. That'll
For
be
sure,
fun.
yeah. Because yeah, I've heard LA Tech Week's a little bit more like, I wouldn't say less serious, but it's more fun. Do you know what I mean? There's a lot more stuff going on.
Yeah, I would say that you're accurate.
And between
That's on
you
point.
and a couple of the other guys who I know there and everyone, I think it'll be a good time as well.
Yeah, for sure, man. Cool. Well,
I told
actually,
you
while we're
about-
waiting for your co-founder, should I pull up your company? I can
For sure, yeah.
check it out.
100%, you can, yeah.
All right. What's it called again?
Nexus. Nexus.lat.
Nexus.lat. All right. Oh, dude. This is literally the perfect time for us to be chatting too, because I'm legitimately looking for a VA. I was just talking to Eli about it, and I'm actively. I started the hunt yesterday on stream, so
Nice. We can probably help you out with that as well. Yeah.
yeah. Well, it's it's a whole separate discussion, but I think it's something where I use AI to automate as much as I can, but there are just some processes that I don't want to have to like be the owner of. You know, it would be nice to just have someone to come and take ownership of like running X, Y, and Z. You know.
Yeah. What are you using to automate at the moment? Are you using like N8N and Make and stuff like that, or?
Well, that's the thing is I know that there's different processes that I can build out and like fully set up and automate, but rather than me go and do it all at once, I started that yesterday and I just realized, you know what, I should just from the start bring someone on and like who's building it and doing it with me, and we iterate it, improve it over time.
Yeah.
So yeah, because there are just certain things. I was even testing out the agentic browsers, and it was more limiting than I personally hoped or anticipated, which is fine. But yeah, that's kind of where I'm at with it. So I'm gonna try and find a good VA to help out.
For sure, yeah, that'd be good. Okay, cool. Yeah, we can chat, as I say, we can chat about that at another time. But you know what? Let's get started. I'm sure Santiago will hop in soon. I don't know where he is. Maybe he's in a call as well. But yeah, we can start with just like going through everything.
Okay, sweet. Yeah, let's do it. Well, remind me, did we end up creating or getting started with the MyWorker setup and onboarding?
We did, yes. We created me an account, and I've got the account and the username and everything. I can pull that up, and then MyWorker AI, right?
Yeah. And once you go to the website, if you click on the top right, on the login, it'll take you to the login page. And also, if you could toss up screen share, that would actually probably
for sure. Yeah.
All right.
He said he's joining now.
Yeah. All right. There he is. How's it going, Santiago?
Hello. How are you doing?
Doing good, man.
Nice to meet you.
Nice to meet you. Right before you turned your camera on, I saw your little picture. That's pretty cool. How did you make that? The little avatar pic?
No, it was made like a couple of months ago. Well, maybe a year or 2 years ago. It's because I'm also working on the crypto industry.
Oh, okay.
It's very used in the crypto industry to have like a character like that.
Yeah, no, I like it, man. I've been playing around with Sora, and I made one of my own. I'm not sure what you used to make yours.
No, this is pre AI, Open AI.
Oh,
back then.
So you created this one like the old fashioned way.
Yeah, old fashioned way. Yeah.
Okay, very cool. Pre Sora, nice. Also, I'm not sure, Santiago, if it was mentioned to you, but I am on stream right now. Just want to double check and make sure that that's cool with you.
Yeah, no problem. Yeah.
All right, sweet.
Right.
Yeah, so I can see your screen.
Okay, cool. Wait, hold on. I need to switch because when you say login, it changes it.
Yeah.
Give me a second. We want to see this, right? Well, not that, but this.
Yeah. let's see here. All right, sweet. Yeah, so I guess before diving in, maybe we just talk a little bit about the company, just so I kind of get a better understanding, and also like maybe going into the call you wanted to cover most, and then we can just take it from there.
For sure, yeah. So right now, just basic overview of the company is where we are. What we do is we help connect remote professionals of all kinds to companies in the US of all kinds. So we are like a sector agnostic hiring agency that helps companies outsource to South America.
Okay.
And
yeah,
so
this seems like it could be useful. Yeah, I'm actually also just asking personally, selfishly, because I'm like actively trying to find the VA. So
of course.
Yeah.
No. So yeah, so that's in a nutshell what we do. We deal with everything from like very low cost roles like VAs and basic things which are like cold callers, email marketers, video editors, stuff like that, all the way up to really technical roles like back-end developers, front-end developers, and even lawyers. And so companies in the US come to us when they're looking to hire at a much lower rate compared to what they would get in the US. And we help them do that by hiring in South America, which has same time zone. People have good English. You have a better cultural fit than other outsourcing hubs in the world. And overall, we've had a really good response rate in terms of how people have taken to professionals in South America.
Okay, sweet. And in terms of how you guys source those candidates, is there like a particular method that you like to share? Or I guess in terms of talking about differentiation points, what's the key things that come to mind?
So I would say Santiago, sorry, I saw you unmuted.
No. I'm Argentina. I'm based in Argentina, and I'm really well connected to the technology sector here in Argentina. I've worked in a lot of startups here. So we have like a network of recruiters that we are also partners with some colleges here in Argentina, and opening up some partnerships with other colleges in other countries in Latam. We source from Argentina. We can do for the rest of Latam. The majority of our candidates come from Argentina. However, for example, we've got some clients that wanted someone from Colombia because it was San Francisco time, and the time zone was closer to Colombia. But our differentiator here in Argentina is that I'm based here. I was born and raised here. I worked in the startup industry for the last 10 years, more or less. So I'm very well connected here to colleges and to the startup sector here.
Awesome, man.
We built like a recruiting team that is very specialized on this.
So how did you guys meet? Like if you're out in Argentina?
We actually met at Draper University in Silicon Valley.
Oh, I think you might have mentioned that actually when you were out here. Very cool.
Very cool. He was my roommate.
Yeah. And then also just to add on to what Santiago was saying, just in terms of like our process and everything, what we aim for is we're aiming for people who are looking for long-term contracts with people where they're looking to hire someone full-time and looking to keep them on their company. We're not trying to be a competitor to Upwork or to Fiverr or any of those where people just want a small job done at a lower cost. We are really trying to fulfill, full-time contracts where the person is going to be sticking with the company for the long run. And so with that also, what I would say is a differentiator, but also like an add-on to what most companies would do, is we look for very strong like personality profile fit more than just like, does this person check ABC on their CV, or do they have a degree in this, and then that's it.
Yeah, no, that totally makes sense. And in terms of and I'm very personally curious about this, but with the evolution of AI and how these tools have evolved, like what type of I guess from that type of aspect, is there like a particular I guess like vetting process around like the technical capabilities, or like if I was gonna use it for like like let's say I wanted to use it for a workflow, like I wanted to give them access to my social accounts and like engage on social media with certain accounts, things like that. Are they like familiar with HubSpot and all of those types of tools?
Definitely. So what we do is we are, I would say, we work in a more like personalized manner with companies where we internally automate as much as we can, but our relationship with our clients is still very personal, in which we are having chats with our clients, making sure that we understand exactly what they're looking for, and we work to specification. So a client will come to us and say, we're looking for a back-end developer, or let's take a VA, for example, like what you need. I'm looking for a VA within this price range. If you have a price range, some people do, some people don't. And then they need to have 5+ years of experience. They need to be skilled in X, Y, Z. They need to know how to make PowerPoints. They need to know how to engage on social media, this and that. And we take all of that information, which you've specified to us, and then go out and find the right people who fit that specifically.
Okay.
So we work in a sort of like boutique way in which we're dealing with our clients on a very personal basis to make sure that we're hitting every single target they want.
Okay, awesome. So I guess in terms of filling out the account here, I guess we haven't gone through filling out, and all the information that you just shared, I think is going to be really helpful. But if you click on the Your Company button on the screen share, it opened this up. All right, sweet. So did you fill this out, or was this what was filled out by the system?
This is the system that did most of this. I answered a couple of questions on here, but most of this was just the system.
Okay. I'm just skimming through it right now.
Let me do that as well, because I read this a while ago last.
Yeah, we'll take a second. It seems pretty spot on for my first 5 seconds of skimming.
Yeah.
Okay, cool. So I guess we haven't covered this yet, but once a candidate's selected, we choose whether to handle the documentation and salary, or you guys can do it. So either way works. Or how does that process work? Is my mic working, or maybe you're frozen?
I think Sean is frozen.
Okay, I was going to say, Santiago, you seem to be moving. He seems deep in thought.
Sorry, what was your question again?
Yeah, I was just asking about the how it works section. So is that correct? Once a candidate's selected, the company would choose to handle the documentation, or I guess he's probably going to rejoin.
I was reading and I stopped.
All good.
I mean, the process is we've got a first call with the client. They tell us the specifications. We've got all these requirements, the must-have, the nice-to-have, as Sean mentioned before. We present them like an example candidate, so that they can, like in the very first meeting, maybe we because before that first meeting, they should have filled a form with certain information. So with that information, we go with a CV, particular CV. We show that CV to the client so that we can have feedback to better. It's an example CV, so that we can have feedback on that CV so that they can point out which are the qualifications they must have, they need to have, or it would be a nice to have. After that, we start recruiting, and we give them from 3 to 5 candidates, like top quality candidates. We don't want them to waste a lot of time, so that's why we're not giving them 10 or 20 candidates. We filter a lot, and based on their recommendations over those 3 or 5 candidates, we continue the search, or maybe they can have their first interview with those candidates, and hopefully they can hire one of them. And we have two business models. One is the staffing one, and that's the what we call the placement one. So in the staffing one, we help hiring in the hiring process, but on a monthly basis, we also help with the payroll and with all the documentation to hire people as a contractor, but outsourcing on our end. And on the placement business model, we just only help them in the hiring process. And once they hire them, is the responsibility of the monthly payroll and the relationship between each other is for the company.
Okay.
That's more
Sorry
or less
about
it.
that. I'm in the car right now, and I'm connected to the car Wi-Fi, and the car switched off.
Oh, that's so funny. Your car has Wi-Fi?
Yeah, the car is Wi-Fi.
What is this, like a Starlink car? What do you
Not
got going
even-
on there?
It's a Buick.
A Buick?
Yeah.
Dang. Buick's really leaving a lot of marketing potential on the table. I've never heard of a Wi-Fi car like a Buick.
That's what I was saying. I was like, since when do these things have Wi-Fi?
Okay.
Anyway,
very cool.
regardless, apologies for that. Let me share my screen again, and we can get back to it.
Yeah. Well, I guess just to understand like the timing and everything, do you guys have a hard stop at any point? I have until the top of the hour. So I've got 25 minutes.
I think
max.
that should be good.
Okay.
We don't have a hard stop in between.
Yeah. Okay, cool. And so the goal, just so we're aligned with getting through the call, is there anything in particular you wanted to cover, or is it mainly just getting the subscription started with the domains being purchased and warmed up so you can start launching campaigns?
I think that's probably the main thing, and then just a couple of questions just about how the process works and everything, and in terms of the info that's gathered, through the process, and what we'd have access to and what we wouldn't.
Absolutely. Yeah. Well, I can start there, and then this is kind of related. I guess I kind of just jumped in, but the way that the whole process works is you're going to get 5 email domains. All of those are going to be similar to your main domain. We're going to purchase those, set those up, and warm them up so you can start running outbound email. And then simultaneously, to actually get your campaigns live, we're going to build out part of your go-to-market, build out different target lead personas, understand your differentiation in more depth, and fill out all the background information in your profile to make sure that the messaging and landing of the AI sales team workflow is optimized, basically. So the big steps and goals would be getting the email domains set up and connected to the account, and then getting all the background knowledge base ready to go for your campaigns to go live. And that entire process, the way that it works on an ongoing basis is after those are set up and the warm-up started, in that week, we're going to go through a deep dive session where we finalize like the go-to-market target customers and the campaigns and get them ready. And then as soon as your domains are ready, we're going to launch those campaigns, and the responses are going to go into your MyWorker inbox. So all of those domains are in there.
And how long does that process usually take for everything to get warmed up?
So we'll have the infrastructure set by the end of this call. But in terms of the domains ready to send, you could start after 1 week. But if you want to wait for them to be fully warmed up and then go heavier on the outreach, it would be about 2 weeks. But that 2-week period we're going to use to work together to plan your go-to-market and the different like target customers that you're going to reach out to.
Got you.
Yeah. So, yeah, outside of that, are there any other questions or things that you wanted us to cover before we kind of dive into getting the account foundation set up?
With regards to like the data scraping and obviously everything that goes on in the background when these leads are generated and that, do you guys have access to, I may have asked you this before, I can't remember. Do you guys have access to phone numbers of the different, like if you're using Apollo or whatever you use in the background really to like scrape data and everything, do you guys get access to the phone numbers of the people that we're reaching out to?
So we purchase data from a couple different places, including Apollo. Some of them have phone numbers and some of them don't. So the one thing I will mention is that within here, it's not automatically porting in the phone numbers, But what
Okay.
we do is what some of our customers, partners have done is they'll put in their phone number into the outreach sequence and then say, hey, call me. And that's actually been working pretty well with just including your phone number. So some of your outreach campaigns give people the ability to just call you really, really quickly.
Okay. Yeah, that's pretty good. And if we would it be possible by any chance for us, to get those phone numbers, whichever ones you do get? Is that possible at all? Because right now we're looking at also starting some sort of like cold outreach by phone, and if we could do that within the same sort of well, not necessarily workflow, but within the same process, or at least get the initial number, then that could also be quite useful.
Yeah, in full transparency, we have gotten this request before, and last time, granted the product was earlier, we were focused on other things. We weren't able to say, hey, we're going to build something separate to get you all the phone numbers. But what I can do is I'll talk with my co-founder after this and see what type of solution we might be able to get for you. But yeah, I know that at the very least, what I can do is if we can't personally have something built out to give you all the phone numbers for all the contacts, we'll point you in a direction where you can get phone numbers.
Okay, that would be great. Yeah, thank you.
Yeah, for sure, man.
Other than that, I think it was all pretty clear to me, at least.
Okay, cool. Well, to start then, how about we go to the sender section on the left-hand side and we can start going through some of the domain setup piece. So if you click on the top right, this is how you add a new email. And then what's going to end up happening, just as a heads up, or actually if you click out of here real quick, I just want to, we're going to have to select the domain. Click on your company. I just want to see that section. Okay. Yeah. So you see where it says Nexus Lat? The first thing is we're going to find similar domains to this. And so one little trick before we go and request domains is if there is like a URL that you want us to acquire that's similar, like maybe it's just like Nexus, something similar to like nexus.com or something. I don't know, or nexus.lat also works, but whatever you put in there, we're going to find similar email domains for you. So I just wanted to double check here and see if that looked good or if there's a different domain that you want us to get.
No, I think this would be good because the other Nexus is a common name, to be fair, and like Nexus.com would go for like hundreds of thousands of dollars and that. So I think we're good with Nexus.lat. Makes sense because it's Latin America. I think we're good with that.
Okay, cool. Yeah, and also just for your background knowledge, if you ever want to acquire other domains similar, you would just go and change it in here and then go to the bottom and click save. Just make sure you don't click scan if you change that up, because then it'll rescan it. All right, so yeah, you can go to senders and then new sender. And so on the top where it says order domains, if you click that drop down, Nexus link could be one of them.
Okay.
Okay, so I found 3 similar domains that we can use. So yeah, I would just change the role to CEO.
Okay. Why is it not capitalizing? There we go. Okay.
Sweet. And then you would just click save.
Okay, save.
Sweet. And now we would go new sender. We'll do another one.
Okay. Next, and then choose another one. Yeah. Okay, got you.
And then we'll make CEO. And it looks like we might actually have to go in and after we acquire these 3 domains, just change up the main reference domain a little bit, and then it'll scrape for more options.
Got you. Okay. So we need 5, right?
Mm-hmm.
Okay.
Yeah, I'm actually super excited to dive in more to your product when we go through like the go to market, because
sure,
could be a way for us to work with you guys. Yeah. So here.
So now we go and change the
Yeah, it looks like we're gonna have to. I was guessing when I saw nexus.lat that sometimes, yeah, so maybe like just try nexus dot try nexus.com and just see if it finds other ones that are similar. Scroll down to the bottom and click save. Yeah. So it's currently searching for available domains similar to your main one. You guys got any fun plans for the weekend?
Oh, right now for me, no, this weekend's probably going to be chill. The past 2 weekends have been quite active.
I feel you.
Yeah, I'm going to the river to have an asado. Do you know what's an asado, William? Have you ever been to Argentina?
No, I would actually love to learn more or go to Argentina at some point.
Yeah, it's amazing. An asado is kind of a typical barbecue.
I see.
We're having an asado. Do you remember, Sean, when we went to the river to Santiago's house?
Yes.
Last year.
Oh, nice. So you're going there again?
So yeah, we're going on a boat to an island and having an asado over there.
Damn, that sounds fun.
Yeah.
Nice, man.
It's pretty fun.
Yeah, I would love to. You know, now I'm in the mood for some barbecue. I might get some barbecue later tonight. You might have just changed my night plans.
Yeah. Well, tonight in Argentina, we are very big fans of football. You guys know football and soccer.
Yeah.
We say football. Tonight is our national team playing, so we gather all together to watch the match as well.
Who are they playing today?
Sorry?
Who are they playing?
You know, I don't remember, but the Messi's last match, Venezuela against Venezuela. But it's for the qualifiers for the World Cup that next year.
Messi's last match?
Messi's last match in Argentinian territory, yeah.
Oh, wow.
Wow. Okay.
Yeah,
sounds like a big game.
Yeah. Now it's kind of easy because Venezuela is not as strong. It's not as strong as Argentina.
Yeah.
And we are already qualified to the World Cup that's being held in the US next year.
Yeah.
But no, it's Messi's last match, so it's important for us.
Yeah.
Oh, you got to remember to tell you something about World Cup Santiago after.
Okay. I'm gonna be there next year.
We might have a box in Philadelphia.
Nice. What?
Okay,
Dude, I'm gonna have to get in on these plans.
Come on, more than welcome. We are stuck here. Okay, so it's not giving me another one here.
Yeah, so what we might have to do is either change the name again.
Okay.
And just do like Nexus Pro or something, just like something a little different.
Let's say Nexus Talent.
Oh, I like that. Yeah, there we go. Nexus Talent. There we go. So I'm not sure if you guys have heard of this game. I played it yesterday for the first time because Andres and Leo told me to get it. Have you guys heard of the game High on Life?
No.
Dude, it is a crazy game.
Yeah?
Yeah, I mean, it's a very odd game, I will say, but it's, I don't even know how to describe it. I'll send you guys a clip later today so you guys can check it out, but yeah.
Quickly, do you think this is okay, Deepa? NexusTalentGrowth.com.
Yeah.
Yeah, I think
It looks good.
Okay. Right.
All right, sweet. So you got the 5. So my team is going to go and set up these entire Google workspaces, get those set up, hooked it up to the account. So that was probably the most important thing that we needed to get done on this call, outside of going to the plans and billing side and taking care of that. And then I can also, let's see here. It'll be $199 for the first month. We haven't updated this page. Yeah.
Oh, it's his first 3 months. You got to lock us in for that now.
Actually, you know what? It's $199 and then $499 a month. If you guys that I actually messed up here. I will put that on the table if you guys need to. I feel bad.
No.
Don't want the false advertising. All right. So yeah, I'll let you. I'll take you off screen, and then you can. I just took you off screen, so you guys can take care of that, and then we can go to the senders or the integration section after. And while you're doing that, I'm actually going to go and explore your website here. Oh, so you have this in Why Hire in LATAM section on your website, actually. Very cool.
Careful, Sean, don't put the information in because we are streaming.
Oh, I took you guys off the stream
Yeah.
page.
Okay, so
yeah.
Are we doing this with our bank, right, Deepa? With Relay?
Yeah, or the bank is this, or the card is the same.
Okay, do you have the card? Because I don't on me right now.
Not right now. I have to go inside the. Now I send it to you to WhatsApp.
Okay, perfect. Thank you. Sorry, I don't have it on me. I've got, as I say, I'm in the car.
Dude, that happens to me all the time, especially because with my last card, I don't know how this happened. I feel like there's been a lot of like theft and hacking recently. I think like people have gotten better with it, and someone like stole my last card number. So I had to get a new card, and now every time I'm like, oh my gosh, what's this new card number? Because I memorized the old one.
As well. Someone last year or something, I was sitting in Zimbabwe and Santiago was in Argentina, and someone made a purchase using one of our cards like in New York City. And we were both like, but how does that happen? Because I was holding the card which they said was purchased, or which they said was used to make a purchase, in my hand.
That's crazy. Yeah. I've been deciding, and I'm not sure if I'm going to do it, but I'm thinking about turning on notifications for all my cards whenever a payment's made. I'm not sure if you guys have that, but I feel like it could be good just to, you know, prevent overcharging and stuff like that.
Yeah. I'm just putting this in now.
I already sent the details.
Okay. What's the zip code on this?
Zip code.
Yeah.
I don't know. One second.
What do you guys use for your website?
We had a custom build one.
Very cool.
Yeah. Because obviously we've got the talent.
Yeah. That makes sense.
I sent you the zip code.
Perfect, thank you. Okay, should be good.
Oh, this is cool. So yeah, you've got the chief of staff, account manager, graphic designer, all these that are linked to in yeah, on the website. It's pretty cool.
Perfect. All right, let me share this up again.
All right. Yeah, let me know whenever you're ready and I'll open the tab on screen.
Okay, cool. Yeah.
All right, sweet. All right, so I'll drag you guys back over. All right, so now, right after this call, I'll message the team. They also got a notification. And then, yeah, what we'll do is let's get another call scheduled where we can go through and finalize the go-to-market, the different personas, and we'll build the campaigns together. How does same day next week, like next Thursday?
That should be good for me.
Okay.
Yes. Yes.
Perfect. We can confirm it like early next week just to make sure that it's still all right, but should be fine for now.
Okay,
That's the way
sweet.
it is in calendar.
Yeah, and you can book through the booking link that you got.
Okay.
And yeah, man, I'm pumped to dive in. I might ping you ahead of time on WhatsApp, question about your services.
Awesome. Yeah, for sure. Anything.
Yeah, so that'll be good.
Okay. Cool. So it should be like 1 to 2 weeks to get everything like warmed up and that, and then we start sending from there.
Yeah, my team right now is going to get on it. So we'll start buying, setting up the workspaces, getting the warm up started. Next week, they'll still be warmed up. If you want, at the end of next week's call, we can launch one campaign and just like have the inboxes going slightly light on the outreach. But yeah, after our next call, I think that we'll be good to go. And you'll be, by that point, have a good understanding of how to use the platform and run it, do the outreach, all of that good stuff.
Sounds good. Okay, perfect. And then you guys don't have like a lock-in period or anything with this, right?
It's just the or actually no, it's $199 and then $499 a month. So there's no like initial lock-in. It would be if you did the 500 for 3 months.
Okay.
Yeah.
Cool. All right. Well, I'm looking forward to this. I think this is definitely what we need right now, and yeah, hopefully everything goes well.
Yeah. And also, I mean, this is kind of maybe getting ahead of ourselves, but I could see other partnership opportunities as well later down the line. That's one thing that is one of our focuses at the moment is setting up strategic partnerships. And so, yeah, we can talk about that later on though, after the call next week.
Same for us at the moment. Yeah. So definitely looking forward to talking about that.
All right. Hell yeah.
Is there anything else we should look at right now inside of this, or just wait for the domains to get set up?
I think that honestly, there's nothing else we need to do, but on the next call, just to kind of give you a high level, we're gonna go through and really like I've got a set of prompts that I run through to help with like the go-to-market planning, filling out all of these different personas, and then running the campaigns. So all you really need to do is just show up to that call, and I'll ask the questions, and we'll build it together. But if there are certain ICPs or groups that you want to target, you can let me know on that call, or even ping me ahead of time if you want me to build anything ahead of the call.
Okay, perfect.
Perfect.
Yeah.
Awesome.
Thank you so
This will be
much.
fun. Yeah.
All right. Looking forward to it.
Thank you guys. I'll catch you later.
All right. Cheers.
Peace.
Bye-bye.
All right. I don't know why, but I feel like I'm getting more and more stuffy as the day's going on. I'm going to get a tissue. I'll leave this playing here. That Perplexity has one of the fastest growing companies in the world. Let's see. This is their billing page. Okay. Let's see. So you can go free forever. Okay. So you get the basics. I mean, kind of like GPT. Okay. For $20 a month, you get 10 times as many citations in your answers. You get Perplexity Labs. Actually, I want to try that out. Unlimited file and photo uploads. So I guess that's limited on the basic plan. Extended access to Perplexity research. Extended access to image generation. And then a one-time subscription for all the latest AI models. Okay, so if we want Comet, it looks like we're paying $200 a month. All right. If we want Comet. So we got we're gonna buy. Oh, we've got another call starting right now. So because obviously we can't do this without. Yeah, we got another call starting right now. So gonna have to hop on that. Oh, he pushed it back 15 minutes. Okay, that's cool. I'm fine with that. Gives me a second to breathe here. All righty. Actually, while it's fresh, I'm going to have a message written out to my teammate. All right. Say, all right, new message. We are going to follow up with our team and let them know that we just made a new sale to Sean from Nexus, and we requested the 5 domains, and yeah, just let the team know. I'm going to also call up my buddy while we got these 15 minutes. Calling him back.
Yo, what's up, Zach?
Hey, how's it going, man? I just saw your text. I'm still on stream.
Oh, let's go. Am I gonna get clipped?
Potentially, dude. You might get clipped.
Let's go.
How do you feel about that?
I'm ready. I'm ready for my voice to be on the big screen.
Dude, I love it. I love it. Yeah, how's school, man?
It's going well. It was nice being able to pick my classes this year. Last year, it's just like they throw you into all the 1L doctrinal stuff, and you don't get to select like anything that you're interested in, really. But I'm taking a sports law class. That's going really well. Taking evidence, taking an income tax course. It's going to be pretty beneficial to know in the future, I feel like.
Yeah, you got to understand the taxes, you know?
Yeah.
Yeah.
Yeah, for sure.
Don't want to have to overpay in that department.
No, not at all. Not a dollar. Not a cent.
Not a cent. Yeah. Well, I just got back from Albany, so I'm back in LA. Yeah, when do you finish up with school?
I'm in my 2L year right now, so I got another year after this. I feel like it could be completed in 2 years, and then, but yeah, I'm here for another, basically 2 years.
Okay, sweet. And your game plans to like go into law after, or like become a lawyer?
That's a game plan right now, but it's some different avenues I've been exploring too, like just like having the legal education and everything. I think will be very beneficial for me down the line, even if I'm not working at a law firm or something super adjacent to that.
Yeah. Very cool, man. Well, we got to get you out to LA.
Yeah, for sure. Yeah, I got to get it back out there. We got to get the golds.
Yeah. Did you end up going to Golds when you were here?
Yeah, me and Xanda went. It was sick, actually. It was like, that was like a bucket list, like dream come true from like watching all the old Arnold videos and stuff. Like, it was awesome. I went off on the merch shop. I think I spent like $250.
Yeah, I mean, honestly, you got to. You got to get the Gold's Gym merch while you're there.
$50 for the day pass, but you could use it as many times as you want in 24 hours. So got a couple lifts in there. Did a push day, pull day, everything.
Yeah. Dude, I mean, did you see any, I mean, you probably saw some pro bodybuilders, but anyone that you recognized?
There wasn't anybody I recognized, but I was like, looking at like a lot of the girls there, I was like, these are probably like porn stars, like OnlyFans girls. Like, it's like, there's no way that they're not.
Dude, I mean, that gym is crazy. You've got some of the biggest, I mean, I felt like tiny there. That the average person there is like a pro bodybuilder.
Yeah, it was pretty impressive. These guys are jacked out of their minds. I wonder what they're taking in the locker rooms.
Yeah. Oh, that's funny, man. Well, do you have any plans to come back out here later this year?
Yeah, I would definitely like to. I was thinking maybe making either another trip around this same time, mid-August, or before school starts again, or maybe even do I got like 3 or 4 weeks during winter break, and then I get a spring break. I was thinking about maybe coming out for one of those times as well.
Okay. Sweet, man. Yeah, hit me up. Hit me up next time you're thinking about coming out. We'll have to hit a workout or something.
100%. Yeah, definitely. Yeah, I've got a couple interviews with firms out in San Diego, LA as well for potential internships for next summer.
Okay, very cool. Yeah, so are they like internships on the legal side, like
Yes.
legal assistant or something, or what? I don't really know the track that well.
So the track that it really goes is your 2L going into 3L, your second year going into your third year summers. If you perform well that summer, they're going to send you an offer to come back and work full time there. But the internship itself is, I guess it varies depending on the size of the law firm that you're going to be at. But yeah, it's kind of like your associate internship, like really just not doing like a whole, I mean, you're doing like a lot of legal stuff, but it's kind of like getting a mentor and like trying to learn the ins and outs of that firm.
Yeah, no, that makes sense. Dude, Mr. Boyle, gonna become a big shot lawyer.
That's the goal.
What kind of law are you doing?
Last summer, I clerked at clerked for a judge at a criminal courthouse in right by where I live in Philly. It was really pretty interesting, actually. Got to see some dude escape from the transport van he was supposed to be in our courthouse, and he made a run for it. He was gone for like 2.5 hours.
And then he got caught?
Then he got caught.
I feel like they always get caught. You're never going to run and not get caught.
He's like full like prison garment as well. So he's like running around in orange pants. I could send you a pic of it. This guy's got really good form, actually.
Oh, really? He had a good stride?
Yeah, he was definitely a track star in high school.
Oh, okay. That makes a little bit more sense, because sometimes I wonder what's going through your head trying to run. But if you got that speed, then maybe you think that you might be able to get away.
Yeah, seriously.
Yeah.
Apparently he was facing like a bigger charge in Philadelphia, and this was like a county outside of Philadelphia. So he was like, all right, this is now or never. I'm going away for a while. Like, better just try.
Yeah. No, that makes sense. So this was his big shot, and he made it for 3 hours.
Yeah. Could have done a little better.
Yeah.
It's a little impressive in itself.
Yeah. I mean, yeah, definitely send me that pic. I want to see this guy's form.
Yeah, definitely. How's everything going on your end?
It's good, man. Yeah, today I've been on stream for almost 4.5 hours, and yeah, I'm probably gonna go for a couple more hours, get some more work done. We've been grinding, man. We're getting a lot done.
Yeah, building in public. That's cool.
Yeah, I think honestly everything's going in the right direction in terms of like getting more customers, getting better infrastructure, growing. The next big milestone for us is I got to raise this next venture round. So I'm trying to finish our pitch deck and data room, and then I think after that we're gonna be off to the races. At least off to the races compared to where we are now. I think we'll become a much more serious player after we get some venture financing behind us.
I'm unfamiliar with like how that whole process works with receiving funding from a venture firm. Like you're just basically going in, telling them your idea. If they like it, then they'll fund you. Or is it much more to that?
I wish it was that easy. There's a lot more to it. What we do is the way that a venture capital firm works. The venture capitalists are basically investors that raised money from other investors. So they've got their own shareholders or people that gave them money that are the limited partners, and they're based on whatever your thesis is as a venture capitalist, you're focused on investing in certain things. So I'm going after venture capitalists that invest in AI, early stage, pre-seed, seed companies. And I'm pitching them and saying, look, this is what we're building. This is why we're different. This is why we can become a huge 10 billion plus company. And the VCs are looking for these big bets because they just need to pick winners. So they need to think that there's a realistic chance that this company could become a huge market leader, like a next Uber or whatever. And so it's a different type of investment profile than you might get if you're investing in real estate or you're investing in a different industry, like a fund, like an S&P. Like it's more of a, hey, we're trying to find the big potential winners that can become massive companies. And it's like you're trying to find them at a very early stage. So I'm going in and I need them to believe that that we could become a massive market leader in whatever we're trying to build. And it's really hard because it's super competitive. But I think that so far, just because I've got a track record and we've got initial traction and we've got all these good signs, I think that I'm going to be able to raise the money. I just need to get all of the background info, our data room, all this other shit ready.
But when you're going to have those meetings with the venture capitalist firms, or is that kind of up in the air right now as well?
I actually have had some reach out with interest. So I think that I'm going to be able to get these meetings, and I'm basically trying to get all the material ready right now before I begin the outreach. But I have spoken with some that have shown some interest.
Cool. Awesome.
Yeah. So hopefully I'll have some big news in the near future.
Yeah, that'll be the most viewed clip.
Dude, yeah. The clips are picking up, you know, they're slowly but surely. We are up to, let's see how many subs we have on YouTube. We don't have that many, to be honest. We're still on that road to 1,000 subscribers on YouTube.
How long have you been streaming for at this point?
About a month, bit over a month.
Sweet.
We're
That definitely takes some time.
Yeah, we're at 176 subscribers on YouTube.
Let's go. I'll subscribe after this.
Dude, let's go. William_Samasegi.
Word.
Yeah.
Yeah, fine.
Nice, man. Well, I got a call here in 2 minutes that I got to run to, but it was great catching up, bro. Hit me up next time you're thinking about coming out.
Yeah, definitely. If there's anything where you see something where my skill set could be beneficial to you or your company, like please reach out to me as well. As I said, I'd much rather be working with my boys building something than working for a big company with 500 lawyers.
Yeah, I mean, honestly, there's a lot of different things that I'm working on and doing. So if you have any ideas related to, like, I don't know, the stream or just anything else, like the big thing that I'm focused on right now is I'm going live on stream every day, but I'm trying to get some processes ironed out related to like influencer partnerships and like new sales outreach and lining up the podcast that I'm going to start doing where I'm bringing guests onto stream. So like those areas are probably the big areas that I'm trying to get dialed in on. So if you think that there's any overlap there, then yeah, hit me up.
Yeah, definitely. Yep.
All right. Sweet, bro. Well, I will catch you later. Have a great day.
Good. Same with you, Sam. It's good talking with you.
For sure. Peace. All right. Let's see here. Alrighty. I'm gonna mute my mic here and actually let's do this. Hey, how's it going, man? Dude, all good. Yeah, I've been all over the place today. Yeah, actually, it was my first time like taking like a vacation in a while. But even while I was on vacation, I can never like fully shut off. So I was still doing a little bit remotely, taking some calls, but it was good. It was very fun, so I didn't sleep too much. Yeah. So I'm not sure if you can hear it, but I'm a little stuffy at the moment. Yeah. Yeah, yeah. Yeah, no, I mean, yesterday, because so I'll kind of abbreviate the whole story, but yesterday I was like, I need to go on stream because I haven't been on. I was getting Wi-Fi done, so I finally hopped back on yesterday, and the entire time I was just like so sniffly, blowing my nose the whole time, just so clearly very, very sick. Uh, but thankfully, I'm feeling a lot better today. Just little stuffy, and you know when you're kind of, it's almost like run down. That's kind of the feeling. It's not like a full on fever, but I just feel kind of like almost like I've got like a not a in between a cold and a fever almost. Yeah. Yes, yeah. So the quick context there was my current co-founder. We just realized that, and it's like totally understandable. Like building a company is a grind. It's a ton of hours, and we just realized, hey, uh, he would be best in the advisor role, and if we opened up that role for someone who can really just like grind those crazy, crazy hours. Yeah, yeah. But I did have a great call with him earlier today, so he's still fully involved, but it's just not like that level of just what founder psycho crazy hours requires. Yeah. 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 Yeah, it's interesting because you're spot on. It's one of those things where a lot of people like until you've like fully lived it, it's one of those things where it's almost surprising when it doesn't happen, you know, because I mean it's just such a big thing that I mean going in it's a big time commitment. And I recognize that I am pretty crazy. I just like love it. And you know, those sometimes it's like not that like everything else comes like fifth and startup life is like one, two, three, four, you know? Yeah. Yeah. I feel like there needs to be like one in between, you know, like the 0 to 1. It's like the 0.5 to 1. Yeah. Okay. Very cool. Yeah, absolutely. So, I think on in terms of the, uh, I guess just taking it in order. First off, really, really appreciate just like the the offer of support and everything with like the CTO search, everything else, and it's great, you know, be having great people in the network to be able to just like chat about these things. Most people, if you chat with them, they don't understand it, but it's great that you've been through it. So that is awesome. And in terms of the marketing side, I mean, yeah, I'm really flexible. I know I sent over just like some high level stuff. Uh, I'm doing two things right now is speaking with people on the, I guess, the content side of, hey, we can get the sponsorship DevRev out to all of the listeners. And I've got high level stats on all of the platforms just so you understand kind of the reach of it. Uh, Also, can create clips and everything so you can have clips related to whatever you might want to push, marketing collateral. Also, planning an event right now where I've got one sponsor on board, and then if you want to be part of that, it's a similar type of it's a similar type of approach where they're an early stage venture bank and they have the same ICP, like early stage founders with early traction, maybe raised a little bit of funding, so they're interested in participating in that, and you know that could also be another thing. So uh, I'm flexible. That one's an in-person event, but we also have yeah both options as well. Yeah, and initially I was thinking that we might try and swing it for Tech Week, but it's too late for that. I feel like so. We're planning, and I'm coordinating with them on like an exact date, just getting everything set up there. But if that's of interest to you, I could shoot you over all the information on it that we've got gathered. Yeah, cool. Well, on your side, I guess what would be the things that, from your perspective, you'd want to like have us collaborate on first? I know the definitely connecting with your team at DevRev and seeing like the alignment there, but in terms of the sponsorship side, what like are you more interested in doing both? Is there one angle that you're more interested in? What's your thought process there? Mhm. Oh, actually, sorry to jump in. As you're going through this too, I'm like, this is so captivating. I was thinking this would actually be so good on stream if this was clipped up. Like exactly what you just outlined. I was like, damn, I really. So I joined from my phone and on the stream, like I kind of just like paused everything, muted my mic so like they can't hear or see any of this. But damn, like what you just laid out and this conversation up until now, that would I could just visualize that being such a good like short segment, like the way that you were just talking about DevRev and everything. Um, yeah. Should I join from my computer right now? Yeah, let me do that. I don't have to put you on screen, but I just think that you explaining it, like I see the vision for DevRev, and I've looked at the website and everything too. But I think that the way that you talk about it, especially when we met in person, and the way that you talk about it now, it like it's like motivating. I don't know how to describe it. It's like I feel like you communicate it very well. I feel like this could even be something where it's like I could just have an edited clip later from this you explaining it so you can kind of see how it would look. Um, yeah.
Recording in progress. You know what I mean? That, we can figure out, how, we both want to like, edit it out and again, figure all of the granularities out. But yeah, I literally, you got me thinking along those lines. And we've done a couple of proof of concepts with, some of the startups in our program. And I just thought that this could, fit in super, super nicely.
Yeah.
Yeah. But yeah, dude. And then in terms of the platform side of the equation. One, let me know when is ideal in terms of like your availability next week or even, the subsequent week. And again, I can, connect you with one of our product specialists and solutions engineers to take you through the platform. And the idea would be, and I outlined to you, the dynamics of like the program in terms of, the credits, Discounts obviously that we offer to folks, whether they sign up for a paid contract up front or, at a later time after leveraging the credits. And the whole, it's pro level access, full technical and business enablement support and all that good stuff. But the idea, here is one, and also to clarify if I didn't, we, have very large enterprise clients and mid-market clients and all of that, seven, figure, multi-year contract dynamics. However, we also, we've closed contracts that have been like 1 year deal, 2K,
Yeah.
5K, 10, you know what I mean? We literally have that granularity and flexibility. If you have any interest in converting after you end up, leveraging the platform under credits, there's absolutely no pressure. What I mostly want to get out of that is, your honest opinion in leveraging the platform, right? Especially, and I think it's timely too in terms of the CTO search, because one thing I've noticed with a couple of folks in our program that have brought on, either technical co-founders, CTOs, or, more of like VPs of engineering, to come in. When they've had DevRev implemented early, right? The CTOs come in and they're like, oh, wow, okay. Everything is already integrated with an AI native platform. We have our workflows across customer support, product development, and management, and sales and marketing unified, right? The single pane interface in terms of, being able to conversationally, access the insights of all of your data workings, through that single pane interface, right? Again, I think it would all marry super well together is what I'm getting at there. So again, dude, more than happy to, set that stuff up. And then we can definitely, it'll take probably a few meetings just in terms of like trying to triangulate it all and figure out, what the best cadence is. But yeah, dude, again, I very much enjoyed our conversation. I thought it'd be a, great test case, not only on the, streaming and, digital marketing side with what you're already doing with some things that we're playing around with. But again, I would love to obviously get you on the platform, and in the program, and get your honest take,
Yeah.
in terms of-
Yeah, absolutely. I think that your idea makes perfect sense. Let's get I think that we could do kind of both, and we could just see, okay, what are the KPIs that we're trying to hit here? What are the goals? I could plan the in-person and even just like create like an ad or something for like the
Yeah.
virtual. So we hit both like in-person events and the stream. And then, yeah, like at the end of the day, we'll just look at the numbers and see how it works. And then simultaneously, I would love to use your guys' platform and then also just provide that very close feedback on it.
Yeah, dude. Again, I think that all sounds like a game plan. And as I mentioned, one of the benefits of the startups program is there's no salespeople involved at all in any step of the process. It's truly, again, this is how we keep our ear, to the ground, right? From, a product-led growth standpoint, trying to understand everything from, hey, what, snapping integration should we be prioritizing, that, we may or may not already have. How should we optimize, our user interface to be more PLG friendly? Pricing, right? AI pricing is a shit show,
Yeah.
right now. And so any insights we can glean in terms of, how best to structure things, right? And get out of our own way in terms of friction points, right? Yeah, like I said, dude, I would be very curious of your honest opinion in terms of, leveraging the platform, and especially at this, junction, right? When you're going out looking for, a technical, CTO type. I think it makes a ton of sense across the board.
Awesome. So what do you think would be the best next steps? I mean, on my end, it's very, I guess, like very simple. I can execute on these like, right away. So I think it'll kind of come down to however you want to do it in terms of like how quickly you want to move on these different items.
Yeah, man. Well, I mean, one, let me pull up one of our specialists' calendar here. And I can at least throw out a hold. We can move it around. But we'll go from there. Let me see here. And then where is? Okay, there he is. Perfect. Okay, so next week, how does Wednesday through Friday look for you? Are there any good windows? Let's see, I'm looking at a couple of openings.
Yeah,
Would
Wednesday through Friday, and anytime between 1:30 to 4 would work.
Anytime between 1:30 to
from on Pacific time. Yeah. Are any of those open?
Let's see, 1:30 to 4.
I could also do 10 a.m. next Wednesday or Thursday. Pacific.
Let's see. Let's see. What does your availability Friday look like?
Friday.
If there is any earlier than 1:30.
Yeah, I could also do I could do 11:30 on Friday.
30 on Friday.
Technically, I could do 11:30. How long of a call is it?
I mean, 30 minutes, or if you wanted to go longer. The idea would be, and I would obviously, so the typical process for this, we try to take a lot of air out of those meetings. I would literally share, all of my notes, run it through, one of our internal prompts that helps, our solutions engineer and product specialist just, better prepare for the call. We can even, with like a little bit of time that we have now, I can kind of like ask some questions real quick that would, be helpful for them just in terms of, hey, what should we, showcase, or how should we guide the conversation around the various aspects of our value proposition? Because as I mentioned, there's a couple of different buckets, and it just depends on where you're currently feeling pain, right? In terms of, your workflow dynamics. But yeah, 30 minutes. I mean, honestly, yeah, 30 minutes.
Okay. Yeah, I'm free from 11:30 to 12:30, so maybe 12 if they're free at 12, or from after
And that's on
1:30.
Friday.
On Friday, yeah.
Yeah, okay. Here, let's do I'll send a hold for noon on Friday.
Okay. Sweet.
Cool. And then we'll and like I said, if I'll go back, their calendar's open on this one, but I'll go back, double check. Obviously, if there's, if we need to shift it around or do anything, on your end, don't hesitate to let me know. But just at least wanted to get a hold on the calendar. Okay, cool. All right, perfect. I will send that out shortly. And then yeah, in terms of, again, let's just, digital marketing bucket at a high level side.
Yeah.
What would you think in terms of, immediate next steps there? Is it helpful if like, should we hop back on prior to, the demo, let's say like, I don't know, early or mid next week, and just hash out, okay, timeline when we would want to, do something, what the sponsorship structure, could look like, and just go from there?
Yeah, I'm trying to think through. So I guess maybe it would help to see like what type of a goal or outcomes we're aiming at, and then I could kind of structure it, because I sent over some high level information.
Yeah, and here, I'll pull that up right now.
Over the email, but we could get very specific, and at the end of the day, I can be flexible in terms of like, hey, I got the ability to create the content, to clip the content, to create ads, to put it in, to do interviews. Later today, I'm going to be following up with some angel investors and founders to actually get a series built out. I'm going to bring on those types of guests. So of course we could bring on, your CEO or anyone else in the ecosystem as a perk, or anyone else you're trying to bring in. So yeah, I can be flexible with what might work for you guys.
Okay, cool. No, that all sounds good. And then I also just, okay, perfect. I just sent the hold. So that should come across soon.
Okay, perfect.
And then, okay, in terms of, yeah, I mean, if you, how are you looking on time, by the way? Do you have like an extra 5 or 10 to go over?
Yeah, yeah, for
Okay,
sure.
cool, same. Yeah, I'd say let's just, right now, we will do two things. One, in terms of like goals, right? So how do I put this cleanly and concisely? I have the benefit, in this instance to define, the KPIs and objectives however I see fit. Again, to put it plainly, the idea from the top down, in terms of wanting to do more of this kind of stuff, right? Kind of in line with the Spotlight series, that we've done some proof of concepts on, is brand awareness and thought leadership, right? Again, so whenever it's that, as opposed to like direct lead gen, it's just, hey, like, are we, catching eyeballs, right? Are we getting engagement? Is the engagement ramping up? And you're catching us at, the early innings, right, of spinning these things up, which again is even more beneficial in terms of the flexibility around KPIs and objectives. So it's not like, this is very much the like, let's get stuff out there and done phase, right?
Yeah.
So again, we can put out, some more, quantitative, like I guess goals and try to get an understanding of what makes the most sense, especially in terms of like what the sponsorship cost dynamic would look like. But just to, state up front, it's very much a, let's start doing this kind of stuff and drive brand awareness and thought leadership and monitor, you know what I mean? Some of the early you know, engagement levels. And obviously, if we do generate leads off of it, right, we'll obviously track that. But again, thankfully, this is not something where, hey, Will, like, I need like at least like 10 sales accepted leads out of this. It's
Yeah.
not like that. Yeah.
Okay, awesome. Well, in that case, just to kind of shape it up, I could leave you with to go through the email later on, but at a high level, the goals could be, you know, we want to get X number of total, impressions and this many meetings booked. Like, just, we don't have to define an exact number, but just to keep in mind, and we'll get you maybe like 10, 15 pieces of collateral. If you want, you can let us know, hey, we want one like about what is DevRev, we want one about this, we want one about that, and then we could easily just bring you or someone else onto the stream at a time where we just could have an interview and ask those questions, cover those, and we could edit it up nice so you get the assets that could be used on your channels or for general brand awareness. We can have you post it on different channels and try and drive that traffic back, and then we could have we can merge it with like an in-person event where you and like the other sponsor, the venture bank, could we can include certain questions in the fill out form to track certain types of customers, and then ideally have a certain number of leads, set up calls through that, and promote that as well. And so those could be the high level buckets, and it really just, I guess we could kind of just take it from there, and I could leave it with you to figure out which one would work best.
Right. That sounds like a game plan to me. That sounds
Okay.
like a game plan, man.
Sweet.
And then I think the only tangible thing, and I alluded to this earlier, that I would just love to, and again, whether this is leveraging what we do in this capacity to just turn it into one of our like startup spotlights, or doing that separately, either or, would love to like leverage, you and this as one of those startup spotlights. And
Yeah.
that's the only like tangible thing that I would love to make sure that we do, if you're open to that.
Yeah, that sounds good. I think that would be fun. I think it sounds like a cool series too. I'm excited to see, because so the first time I heard about DevRev was at that Pegasus event, but
Yeah.
The more I've spoken with you, it's gotten me more amped about what you guys are building. And I think that that type of energy is going to, like, you bring a great energy to DevRev. So I feel like the more
Appreciate
founders
that.
and people that see that, the more that those, those high level goals and brand awareness will really take off.
Yeah, man. No, again, I appreciate you there. I appreciate you there. And like I said, all sounds like a game plan, man. And then, okay, in terms of in here, I'm just grabbing, let's go through a couple of quick questions just to help, in terms of setting us up for success during the, discovery and demo call with the solutions engineer and product specialist. So one, and some of this may be a little bit redundant, but just to rehash for me. So right now, in terms of your tech stack, right? And across the board, everything from communications, what you're using for email, if you're using, Slack, same thing with, productivity and workflow apps, whether it's, Notion, you know, Airtable, what have you, right? Same thing with like, CRM. Um, if you're using anything in terms of product management, workflow dynamics, or you know, product, engineering workflow applications, the Jira Atlassians of the world, the Linears, the Pendos, things like that, right? I just want to get a sense of, from a tech stack standpoint, how you're currently organized.
Yeah, great question. So outside of the product, the way that the tech stack works is we've got, you mentioned a number of the tools. So we use Notion in order to track the product cycles, where things are at, if things are in dev or in prod. We have Slack for internal communications. We, I'm not sure if it matters too much, but we're on like Google Workspace, so G Suite.
Nice.
We have HubSpot as our CRM.
Nice.
And then in terms of the actual tech stack of the product, I might have mentioned it before, but we're built on Azure. We've got Python backend, React front end. We've got microservice architecture throughout. We're leveraging LangChain, where for different parts of the product, depending on what's being done within the product, we use one of OpenAI's GPT models, or we'll use one of the models from Anthropic. And then in terms of we're piping in data from a lot of different places. So from like purchasing data from Apollo or other data sources. We also have a master inbox where you have multiple inboxes in MyWorker. That's all piped in through into a master inbox that we're also leveraging. Yeah, third parties throughout, basically. I think that pretty much covers at a high level. I mean, there are quite a few different providers, but we don't have to go through all of the ones that are built in.
But no, dude, that's super helpful.
Yeah.
And
I mean, like, I could go through more if you want, like Smart Leads, Apollo, Exa AI, we take care of the warm up too for the email inboxes as well as the lead cleaning. So that's another, yeah. And we're also continuing to build in more as well.
Of course.
But yeah, that's kind of where we stand today with everything.
Cool, man. And unless there was something that I was missing specifically, we have snap-in integrations with everything that you mentioned.
Okay. Awesome.
I'll double check on Apollo, but I at least know if we don't have it, as like a featured snap-in on our integrations marketplace. For a little bit of context, also, we our snap-ins marketplace and our plug SDK, right? In terms of building out integrations that ultimately get featured on our snap-ins marketplace, that's kind of, one of the differentiators of our platform is, the ease with which we can, again, integrate and act as that integration layer and pull everything into our, robust, context-aware, permission-aware, and secure knowledge graph that then powers, the agentic workflows, the semantic search and the predictive analytics and our, applications, right, on the support and the build sides. And again, if there's anything, within that frame, we can definitely, explore with our product specialist and solutions engineer. But again, the overwhelming majority of what you mentioned should be straightforward and, featured snap-ins on our marketplace. So that's a good start. And then, okay, so in terms of how are you currently connecting your structured and unstructured data sources, right, across systems? Do you have any, again, single source of truth? And what are, I don't know, some of the pain points or silos or complexities of your environment that you wish were not complex, you know what I mean, or siloed or pain points at all?
Yeah, that's a good question. I might be hitting the range of my understanding with things. Are you getting at the heart of like, so for example, we use MongoDB.
Mhm. We use MongoDB as well.
Okay, cool. Is that what you're getting at, or is it more like
No, okay, so that is more how do I put it? So in terms of more so like, okay, let's say, you are speaking to, some of your customers, right? And you're trying to integrate, right, the feedback, from these customer conversations, whether it's notes in your HubSpot, right? Or some of the early, issue, like, resolution conversations that you have from more of like a support and customer experience standpoint. Do you find like any pain points or silo dynamics between, different sub-dynamics of your workflows? Like, do you, ever wish that you could more quickly and, more efficiently integrate insights from like one aspect of your tech stack to the other?
I
That's
see
more,
what you mean.
yeah.
Yeah. Uh, to be honest, I am not 100% sure how, if we're even making most use of that, like
Mhm.
of that different data in terms of the communication between different areas. That could be something that maybe we improve on. The way that we're currently approaching it is we do have consistent feedback from customers or people using the product. And I'm having a lot of those conversations, and I'll present that to the team. After those calls, I'll give like write-ups and share that
Mhm.
in the proper channels within Slack. And then they kind of run with that, and that goes into Notion. But in terms of like a very clean, automated type of process, uh, the extent of where we're at is, hey, we know that there are certain KPIs or things that we'll track internally, and we kind of just roll with the punches to try and get it there in the best
Yeah.
way.
No,
Yeah.
that makes sense. So it's more of like, you wish, that you could more quickly and efficiently, turn the data you have into actionable insights and automated actions. It's less that, um, you're feeling, I guess, pain in the traditional sense in terms of like data silos and complexity of the environment. It's not necessarily like preventing you from getting stuff done, but you see that there's so much more that you could do with the data that you have. Did I get that understanding right?
Yeah, it's actually something that we have been talking about as like a future, like what's going to make our product much better over time. And I think that it is going to be that data moat and how we
Mhm.
leverage that into building on top of the product that we already have. In terms of what I believe we're going to be able to build, it's far superior to what we have, which is pretty incredible considering how good the product is today. But
Mhm.
I think that everything that you mentioned there ties into that for sure.
Got you. Okay. No, again, that makes complete sense. It's more about, you'd love to um, uncover and drive more insights from some of the, gaps between the data you have and the outcomes that you could drive, right? If you just had, um, some sort of connectivity. Or, I mean, this is where, agentic AI shines, right? In terms of being able to kind of, take action on your behalf, right? In terms of uncovering these gaps and driving those outcomes. So that makes sense. Okay.
Yeah.
And then, so how do you currently like search for or access or reason over, business critical information? Is it more of just like, okay, like I'll give an example. Are you literally going into HubSpot and having to like fish out and find, little pieces of meetings and triangulate again those insights, over to what's going on, in some random Jira ticket? Do you have any sort of like, I don't know, single pane interface, or any connectivity between any of these apps that again helps you search for, access, and reason over all of this information?
Honestly, right now, I don't think we do. I think that the big way we kind of know how to access things from different areas, but I don't think that there's like a single pane interface. The one thing that I haven't had a chance to dive into around this that one of my buddies reached out to me about is mentioning how, like, for example, with MCP, uh, like Anthropic has the ability to access and tie into a lot of I know you can tie into HubSpot with OpenAI, but there seem to be a lot more connectors with Anthropic. So I've been meaning to try and play with that, but it sounds like you guys have a even more differentiated type of system.
Yeah, and I mean, obviously, I'm a little biased, but the idea, with DevRev, right, versus, some of these consumer grade folks, right, that are trying to come over, into the enterprise side of the equation. One, getting the permission awareness, dynamic, the security, the overall enterprise readiness aspects, of this, and executing it at scale and or, amidst rapid, growth and inflections in momentum, right? It's where we shine over, some of these, large language model providers that have, done a great job on the consumer side and are now, trying to, build out enterprise products. We can definitely dive into that more, but that's, just the high level dynamic of, why, a dev rev versus, some of these, again, consumer grade folks, or even, from mid-market or enterprise standpoint, folks that are like, well, why shouldn't we just build this ourselves?
Yeah,
Um,
that makes sense.
okay, cool. I think like, okay, so then let's see. One other thing that I want to make clear and, get a greater understanding of is in terms of, and I'm trying to figure out the cleanest way to phrase this. So with regards to like your processes and, some of the manual processes or repetitive tasks that you'd like to automate, and this could be any aspect of the business or your workflow dynamics. Does anything come to mind, specifically? Basically just like looking for like, what are some of the most high impact automation opportunities, within the frame of MyWorker.ai?
Yeah. Well, I guess there are two ways I could segment it. The thing that came to mind right as you were asking the question is actually just general business operations. There are certain aspects of things that I want to run that are repeatable and you can leverage AI with, but will make your life easier. So one is, for example, the podcast scheduling. I want to have someone that has access to my accounts and can kind of take care of that whole back and forth, make sure nothing falls through the cracks, and have it update in the CRM. And so I'm actively hiring for a role like that with like a VA at the moment. But that type of workflow is very similar to another one that I'm trying to build, which is certain people that are very influential on social media amongst certain groups. I want to build relationships with them by liking, following, engaging with their posts, and then getting, basically getting them to come onto the podcast or, maybe do some partnership type activities. So that's like another flow that's semi-manual that I'm going to need to have a, I guess, VA do or someone like that. In terms of internally with the product, I think that I think that we're actually doing a pretty good job of taking care of a lot of the manual work. The one piece that would make it better is if we involved self-learning with additional data, and that's something that we know we have to do, that we want to do, but we're just not able to fully do it the way we want to until we hit a couple of other milestones.
That makes sense. Okay. Super helpful. Super helpful. Okay, and then just a last couple here. In terms of let's go with okay, let's go with this. So in terms of what would an ideal end-to-end experience look like from for your users, right? From, the first time that, you have connectivity, right? From the first, meeting, first question they ask, all the way, up to, when you actually, resolve an issue for them relative to what the current experience looks like. So just to rephrase that, in terms of your vision, for what your customer experience looks like at scale relative to the current customer experience, what are, some of those gaps or some of the things that, maybe aren't current issues, but that given your vision, right, and in the direction of that vision and the extent of, the size of that, scalability potential, what, do you see yourself prioritizing in terms of, just maximizing the customer experience as you continue to, inflect from a traction standpoint and scale?
Yeah. So what we're selling against, and I don't think the tech is there in the ecosystem yet to make this possible, but we're building an AI sales team as a service, starting with founders. There are clear challenges that they face that this is a great product to solve. Right now, we're only focused on email, and that's because we want to master this one channel rather than trying to attach and go after all these other channels all at once. And right now, it really is focused on that top of funnel outbound. Now, what next steps look like to make this a lot better is, rather than just getting that initial outreach going, if it could end to end go to booking that call for you all the way through actually taking that call. Now, there are limitations in terms of what avatars can do, the cost of running like real-time avatars, and the limitations on data that make the current product very limited compared to what it could be. But imagine if anytime you were a founder or you were a solopreneur or you had $1 million in revenue and you had a lot of people in the world that could benefit from your service, but you're resource constrained, if you could just subscribe to a service and it was able to identify all of those people in your target market, and then the people who really wanted your product, allowed them to buy it and helped with that whole process. That's a completely game-changing product for founders or any business owner, because it allows you to bring whatever you're trying to bring to the people who need it. And right now, the current product's very limited compared to that.
Okay. Now, again, that's super helpful, man. Super helpful. All right. No, and again, dude, I appreciate you rolling with me on some of the punches of those questions. I know they're like very in depth and require like, thought, and I kind of put you on the spot, in terms of all of those, but it'd be super helpful, just in terms of getting the most out of the, discovery and demo call. And again, the whole idea with DevRev, right, is all starts again by connecting to those systems that you already use, right? Our bidirectional sync engine, we call it our air sync, organizes everything into, the AI native knowledge graph, and it serves as, just this, very differentiated memory, right? A living network of all the data, centered on what matters the most, right? Everything going on the dev sides of the organization, everything going on the rev sides of the organization, hence our name, about breaking down the silos between the two, right? And then we layer on those foundational services, the semantic search capabilities, the predictive analytics, and the automations, right, via our AI agents. And again, the whole concept is that wherever you are, whether, desktop, or on your phone, the idea is that our platform is proactive, right? Can bring you the right context when you need it, whether it's about a customer, a teammate, or a product, right? And then the benefit, of everything being connected, right? Across the data workings of your organization. It's a true companion concept, right? Most AI products focus, on only the unstructured data, as well, right? Like your documents or conversations. Our platform, to my knowledge, could be misspeaking on this, but especially to the extent and scale that we can as you grow, right, is the only product that, combines that, structured data, your CRM product backlog, support tickets, especially as, you scale customers, with the unstructured data, the docs and the chats, giving you that complete context and respecting your permissions as those grow, right? And, the dynamics, of your team, become more inherently siloed, right? We can help prevent, those silos, from hurting your ability to generate insights off of the data. And the key thing too, it's such a hard problem. I mean, it's why we raised 50 million built in stealth for 2.5 years, right? The way in which, our proprietary tech, does RAG, right? The way our vector databases, are organized, it is truly proprietary and differentiated, right? And is why everything that it powers is also truly differentiated. And so, dude, again, I'm excited, man. I think you'll get a lot out of the call, and especially since we did a thorough job having this discussion on this one. And you'll see, like, doesn't just like find and summarize information, right? Can truly take action. In terms of our agentic workflows and the full integration, right? Our agents can like create, read, update, delete, not just answer questions again or summarize data, as I mentioned. And then we'll get an understanding. I guess last couple of just quick things. So, one, in terms of number of like customers that you're working with right now, where I guess like how do you not only, currently, like what's that, scale look like, but how do you see things evolving over time? Obviously, feel free to put that in whatever frame that you want. It doesn't have to be like specific numbers or anything like that.
Yeah.
But you just want to get a sense of, in terms of like what they should show you, should it be a little bit more oriented towards, hey, this data, integration and conversational, search angle, while, hey, maybe we show you a little bit on the customer experience and support side, but that may come in handy a little later as you, kind of scale client momentum. Just want to get a sense of that. Yeah.
Yeah. And to make sure I answer it in the best way possible, like, is the outcome or like what your platform can do more so like, hey, this data that's coming from these customers can be used to like build something else, or how does that, I guess like what would be the best way for me to like answer the question for you?
Yeah. I mean, I'll give, let's see. I'll frame it in again. This is raw and off the top. I obviously, am not, intimately familiar, let alone as much as you, in terms of the MyWorker.ai like inner working. So all very raw and just like examples. But let's say, your customers, need help onboarding, customizing workflows and troubleshooting, their AI workers, right? A lot of early stage AI companies, often struggle with scaling support without ballooning headcount, right?
Yeah.
So that's one aspect from like the support and customer experience angle. If you adopt DevRev, right as you're, at your phase, right? You've got some funding and some solid early traction, and you really want to, not only scale your support without ballooning headcount, but more importantly, efficiently integrating all of the insights that you're generating, from these support, resolution dynamics into your product development process and your product roadmap planning, right?
Yeah.
Things like, our support agents can auto answer, frequently asked questions and triage issues. You have, unified ticketing plus like in-app, chat experience that can reduce the customer drop off. Or from a knowledge graph standpoint, right? That will help you ensure that every support interaction, like I said, is actually connected back to product usage and feature requests, right? They're actually speaking to one another, as opposed to these gaps potentially causing delays, right? Or just, a lack of optimization, in terms of where you're taking, the product, right, in the platform.
I see. Yeah.
Yeah, like that's one example, right?
Yeah.
Another,
Well, that actually, I'm glad I asked, because that gets to the heart of one of the things that like we're focused on right now, which is, we've got a lot of potential customers, inbound potential leads, like just so much where it, to be honest, feels kind of disorganized. I know that we're leaving a ton of money on the table at the moment just because we're not properly staying on top of like all of those funnels, which is one of the reasons why I'm trying to bring on someone to help kind of manage all that. Going off of that, the other big thing that we're also trying to focus on is how are we going to lay the foundation for scalable customer support with the understanding that you've got much like very exponentially improving infrastructure where you don't necessarily need to go out and hire like a 20-person customer support team or anything near that. Like what's the best infrastructure way to build that? And so that's another thing that I've begun looking into. There have been a couple of recommendations made in terms of how we could manage that in terms of infrastructure on the market. But like those two areas that you just mentioned are both areas that I'm actively trying to for. And I know that like committing to a direction takes time, and then it's going to do, yeah, there's a lot to it, but that's kind of where we're at right now, where it's like, it's almost like a dam where there's water been building up, and like we need to break that dam, but we've just got to make sure that we're breaking it at the right time.
Right. No, 100%, 100%. And I'd say, well, one, I mean, that is, we have all of, these use cases, right? The semantic search in that single pane interface, what we can do from a customer support and customer experience standpoint, what we can do from a product development and product management standpoint. But I would definitely say, that area, the CX and support and, helping folks scale there, that is our number one killer use case for sure.
Okay.
That's
good. Well, it seems like there's a lot of overlap. I'm glad that we connected at the Pegasus event.
Yeah, man. No, for sure. For sure.
It's actually really good timing. So I just want to make sure I got the calendar invite for next week. I'm going to check.
Oh, let me make sure. It should have sent. Let's see.
Oh, wait. Yeah, you did send it. Okay. Sweet.
Okay, perfect.
Yeah, so next Friday. So we got that. And then in the meantime, in terms of the sponsorship and the events, is there anything else that you think we need to discuss there? Or do you need to take a little bit of time to review the packages, or how do you want to move that conversation forward?
For whatever reason, I did not see the email that you sent across come up when I searched. I could have just been missing something, but let me.
I actually, let me see here. It might actually have been a problem on my end, to be honest.
Oh, no worries.
There's been a little bit of like an issue with my email inbox that I think that some of the email might have gone to your spam.
Oh, no worries, dude. Seriously, no worries at all. No worries at all. Yeah, send that over and I'll digest. And like I said, we can definitely hop back on some point, earlier mid next week before we, do the disco and demo with our SE and product specialist, and pin that down in terms of more tangible next steps and timing and solidifying that. We can also chat on any updates, just in terms of the event you were talking about in October.
Okay. Sweet. Yeah, I'll fire that off on WhatsApp after this, just in case. I actually hadn't thought of that. So that might have been like at that time I was having troubles with my email, so that might have just not gone through.
Yeah, no worries at all, man. No worries at all.
Yeah. And are you back in LA at the moment, or are you
Oh, no. I'm up in the Bay Area.
Ah, okay. Very cool. Well, I'll be there for Tech Week, so maybe we can meet
Nice,
up at
dude. I'll
some point there.
definitely do. We've got a few things going on. You'll obviously get the look and the invite to everything we have going on, man. Yeah, for sure.
Awesome. Sounds good, man.
Awesome.
Well, I'm
Dude,
sure that you've been keeping busy with the startup life as well.
yeah. Oh yeah. Oh yeah. It's always, yeah. Especially like, I'm obviously more on the like, partnerships, like product-led growth side of the equation, but I'm within the frame of our growth go-to-market org, and
Yeah.
so it's still like, month end, quarter end, you know what I mean, push and stuff like that, especially.
Everyone in early stage startups is just grinding. It's yeah, it's everyone. So whenever I talk to people who are at like, especially like anywhere like seed or pre-seed or anything like that, I'm like, all right, no one's sleeping too much on this team. They're all grinding.
Exactly, man. But no, dude, again, I appreciate you hopping on, being super generous with your time as well, man. Like I said, I'm excited. A lot of overlap, pumped to collaborate on all of these fronts. And yeah, dude, again, I'm trying to think on the calendar. Actually, you have my calendar link, correct?
I think
I can
so.
resend it also
Yeah.
as well.
Yeah, if
So
you
what
could
I'll do
resend it
is
just in case.
I'll send that over. If there's any times at work, early mid next week, grab them. If for whatever reason nothing works, I'm also happy to accommodate your schedule as well. It's like my almost full availability, but there are some like little spots that I could definitely make room for. But yeah, that'd probably be easiest, just in case one of those times do work to cut down some friction. But yeah, dude, no, I think we're, solidified in terms of next steps on all of the main fronts I had. Anything outstanding on your end, dude?
I think we covered it. Sounds like we've got a lot to rock and roll on, and I feel like every time we talk, I get more excited about Deborah. So I'm gonna
I
I'm gonna need
appreciate you
to
saying that. I wish I could, yeah, I would love for you to tell our global head of partnerships that.
yeah. I'm gonna
No,
have to
no,
clip that part up.
seriously,
Yeah,
no, seriously.
every time we talk again. Well, I mean, it's true. As you're asking those questions and as I was answering, I realized, it actually is a very big, I don't know what to call it, problem, because problem kind of frames it like in a negative way, but
Opportunity, I
yeah,
guess.
it's a big opportunity. It's
Yeah.
a big decision, especially as a start. And, getting in at the early stages, it's like once you commit to something, like at the early stages, like everything is like an investment. It's an investment of time. It's an investment of your limited resources. And this is a decision where you're kind of making a turn with the organization of saying, hey, we're going to choose this infrastructure partner. We're going to partner with them and believe that what advances happen in AI, they're going to be able to provide those, and we're making the right call on this. And so it's been something where I've been thinking about it a lot, but I haven't really, like, to go back to our conversation earlier, broken the dam and made that final call of like, hey, we're going this, we're doing intercom, we're doing this, we're doing that. And yeah, those decisions have not been made. So we're actually connecting at a really good time for all of this, which is great.
That's awesome, man. No, that's awesome. And like I said, I think regardless of, whatever ends up happening in terms of you leveraging the platform or whatever, it goes without saying nothing, is contingent on the other aspects. I frankly, again, at a high level, would just love to get you into the platform and get your take, right? And understanding of, how we could improve if that's, ultimately the feedback. Again, icing on the cake, cherry on top, if you see deep value from it and want to scale with the platform. But regardless, dude, hyped to collaborate on the digital marketing side as well. And again, dude, I appreciate you being super generous with your time.
Absolutely, man. Thanks again. I'll get some of those things on my end, fired up, sent off to you on WhatsApp. I'll get a call booked for us earlier next week. And then I see that we got the demo lined up. So I'm pumped. Thanks again.
Yeah. Appreciate you again too, man. Hope you keep feeling, a little bit better.
Yeah, I'm gonna try and
Try
get
to
some sleep
rest
tonight.
in. Yeah.
I'm on that zinc, vitamin D, vitamin C, and I mean, you understand it better than almost anyone, but I just can't wait to get back into the gym. Feel like I've
Literally.
been
I
letting that
literally am
go.
about to go force a workout after we get off. Because it's just been, yeah, it's been a bad stretch coming off
Yeah.
of.
Oh, I can see the whoop too, dude. I just
Oh
noticed
yeah,
that
dude,
you got the whoop
Apple
going.
Watch double.
Yeah. Yeah,
But
dude.
no,
I
good
remember
stuff,
when we
man.
met in person, I'm like, damn, this guy is shredded.
Dude, I am a shell of my former self, but I appreciate you.
Dude, you must have been like a pro athlete, man. Well, what did you play? You said you played was it
Yeah, I
cornerback
played
or
yeah, I played corner at Penn. So it was, Ivy League, like small Division 1 ball. But still
yeah.
D1. No, dude, when I was playing, I'm probably like 180 pounds, give or take 5 pounds here or there these days.
Yeah.
Lean, I'm good about,
Yeah.
consistent.
I mean, 180 at yours, because I mean, even if you were low body fat, like let's say that you still maintained a six pack, you would probably still have a six pack at like about 200 pounds because you're just
I
very
literally
lean.
played in college at like 200, 205.
Yeah.
Yeah, exactly. That was the extent to where like if I went past that, I'd get slower and a little sloppier.
Yeah.
Dude, you pinned that down perfectly. Yeah.
Yeah. Yeah, I'm like weirdly into so growing up I was always just very into fitness and then I got into like just not I never competed but like into like bodybuilding and working out and
Yeah.
just like nutrition and fitness and all this and I've tried like every just form of eating for energy and just all these different like things and so I just got very in tune with it. So I can tell like right off the bat when it's like all right, this person they might be this but they could probably like still be this different body. It's like kind of weird, but
No, not
yeah,
weird at all, dude. I mean, like you can tell like there are a lot of, as you said, like telltale signs. It's like, okay, they didn't just like wake up like that. Like they had
yeah,
to put some intention in it.
exactly,
Yeah.
exactly. Yeah. Well, I
Um,
also like it too, and maybe it's like a heuristic that some people might get mad about, but I think it is very true that if someone like is able to just like be disciplined enough to take care of themselves, their health, and I mean maintaining just even something like being in really good shape or being shredded, like that takes a certain level of discipline. So it's like
it
I guess like a
speaks to
good
like, their
sign.
capabilities in other areas. Yeah, yeah, exactly.
Yeah. I think that all ties into it. But yeah, man, I'm hyped about this. I think that this is going to be great.
Oh yeah, man. No, for sure, for sure. And yeah, dude, no, I'll let you go. And yeah, dude, again, excited about, everything in the works across the board. I'll keep an eye and I'll follow up with my link as well, just in case it's not like at the top of your WhatsApp or inbox. But yeah, man, no, I appreciate you again, dude. We'll
All
chat
right.
soon.
Sounds good, man. I'll catch you later.
See you, dude.
Peace. All right. I started getting like more sick over the term of that call, unfortunately. I think I need to get some sleep, but yeah, let me see if I plugged in the camera. So wait, hold on 1 second. See what we got here. NVIDIA broadcast. The battery is looks like the battery's still low. All right, we're back. All right, guys. In case you couldn't tell, Chris is a beast, absolute beast. Super super cool guy. So I'm excited to get some work going with him. So just so I don't forget all the stuff that we got to do, I'm gonna make some notes to myself real quick. We're gonna make a to-do list for all the stuff we got to get done. And honestly, I might just have to hop on a stream later to do it because I am feeling kind of sleepy. Okay. So right now it is 4:30. Let's see how we are tracking to the initial game plan. All right. Here's what we got going on. All right. So we had the calls. we got the news off to our team about the new customer. All right. Game plan for the rest of the day. We are going to keep going through the Pegasus videos. We got to get through that. And then after we finish that up, we're going to make some notes for the stuff we have to do. So we didn't get to finish the data room or the LinkedIn follow-ups. And now we got to add a couple more to-dos, but we're going to try our best to just get this all done. All right. So let's make a to-do list for a couple more hours on stream. Okay. So we're going to plan out the timing from 5 p.m. through, however long these next steps take. I want to plan time in for LinkedIn follow-ups to people for the podcast. We're also going to have to plan out a little bit of time, or just keep, I don't know if it'll take like 30 minutes, but planning out how exactly we want to structure the podcast and have guests come on, and just what that whole process looks like. Are we sending them stuff ahead of time? Are we how are we positioning things to the guests? So that whole process we got to get wrapped up before we begin following up with the potential podcast guests on LinkedIn. Then we need to follow up with Chris in terms of booking a meeting, the guy that we just spoke about, as well as getting him the information on the sponsorship packages. Then we need to figure out, we need to finish the rest of the data room and homework for Pegasus. So we got to watch all those videos, finish filling that out. And then I want to put in, after we go through all those videos, I think that's going to take an hour, maybe hour and a half for just going through the videos. And then I want to put in a good hour of work in filling out the data room ourselves, like for us. So that is the extent of the stuff that we are going to be doing right now, starting at 5. So with that in mind, let's build out the rest of the schedule for the stream. All right, guys, look at this commitment that we have for you guys. I mean, we've been streaming for 6.5 hours and we're still going. We don't quit. We are not a bunch of quitters. All right. So now let's see. 5 to 5:30, podcast planning. 5:30 to 6, LinkedIn follow-ups. 6 to 6:20, follow-up. All right, sponsorship follow-up. All right, here's the homework. 6:40 to 7:40. Apply those insights. All right. So we'll see if we can wrap up by 9 p.m. From a timing perspective, that gives us 5.5 hours. We've also not had food yet today. We've had protein shakes. We're going to have to, maybe we just do protein shakes today. Have a nice protein shake day. That could be the move. I should get out of the house, though. I have not left the house in like 36 hours. Actually, how long has it been since I've... Oh my God. Yeah, it's been like over 36 hours. Okay, anyway. Let's see. All right, maybe we just do the podcast planning. And then the Pegasus data room. Okay. I will be right back. Gonna hit the bathroom. But while we wait, you know that I won't leave you guys hanging. We're gonna play a little video. Keep you guys entertained. Let's see if we can get a good one. Be right back.
Venture studios are a different take on the way that startups are created. Whether they're successful or not, we have really yet to see, because they're, again, at their very, very early stages of the ecosystem. Venture capital, in all honesty, is at the infancy of what it actually will end up being, and is still very, very much the wild, wild west. The idea behind a venture studio is that instead of the venture capitalist bringing in and funding a founder for, call it 10 or 20% of their equity for the actual company, what ends up happening is that the venture studio will come up with an idea, build out that initial idea, and then they will bring in team members into the actual venture studio's company and basically build a startup that way. There are positives in it in that the venture studio has been through a lot of this stuff before. They know a lot of the early stage mistakes that they do. They might have access to significantly better resources for getting that kind of initial idea off the ground. Downside is that a lot of the time the venture studio ends up owning too much equity of the startup, and it can lead to problems down the road. If the CEO only has 10% at the, call it pre-seed, seed stage round, that becomes concerning whether they're going to stay bought in for those kind of next stages as their equity gets kind of smashed down. So there are pros and cons with the venture studio model, but still very new within the actual ecosystem.
All right. We are going to keep watching these videos up until the top of the hour.
All right, let's talk about information rights. This is a very simple principle within the actual deal terms, where you're asking the company to give you updates about everything as they kind of move forward. It can get more detailed into being able to require audits and other things at certain points, but really it's just a clause in there to make sure that the company is actually sending you reports. Because what can happen is that founders get into this kind of tunnel vision and they forget, like, oh, I have a bunch of investors that I should probably give quarterly updates to, but they're so focused on what they're doing that they don't end up sending stuff out. And so it's just a clause to be able to be in there to be like, hey, send this information, whether it's good or bad, so that we can have a better understanding of where you are, especially if you've raised the next round, et cetera, et cetera.
All right. We are going to keep running through this. I need to watch this. Even though it might seem like I'm not watching, I'm watching, I'm listening.
Another important contract you're going to want to have in your toolkit as an early stage startup founder is a non-disclosure agreement or a confidentiality agreement. By the way, those two terms are interchangeable and mean the same thing. An NDA, a confidentiality agreement, they're one and the same. NDAs can be one way or two ways. So what that means is you can have one party that's disclosing information to the other party, your company to an investor, for instance, your company to a potential commercial partner, for instance, and not receiving confidential information coming the other direction. A mutual NDA means that the two parties are exchanging confidential information with each other. There are a couple of important aspects of an NDA that you need to know about and need to carefully define in a good template that you can use repeatedly with your commercial parties. One is the scope of the NDA. So this is where you define what is and is not considered confidential. It could include things like your business plan, your finances, your product designs, marketing strategies, customer lists, etc. It should be a very long list, and you should be able to get a really good template from your attorney. It's very important to be clear and specific and detailed here and not to have the scope be too vague, because if somebody runs off improperly with your confidential information, you'll be glad you took the time to define it carefully in this document so you can enforce it. The next piece of an NDA you need to know about is the duration of the confidentiality obligation. So this is how long the person is required under the contract to keep your information confidential. The duration of an NDA is typically anywhere from 2 to 5 years. But there's no hard requirement as to how long or short it should be. And it's possible that an NDA could be indefinite and perpetual if you're sharing something that's super sensitive. You need to make an appropriate judgment as to the risk and reward of the length of the obligation for the other party that's being asked to sign up to the NDA. The other important piece of an NDA you need to think about is termination rights. Under what circumstances can you terminate the confidentiality obligation? In most cases, the agreement ends when the business relationship ends, although the obligation to keep the information confidential that was disclosed during the agreement continues onward from there until the end of whatever the duration is under the duration provision. The last piece that you need to think about is the termination provision. Under what circumstances does the agreement end? And it's important to understand that when the agreement ends, the other party is still required to keep your information confidential that was disclosed during the time the agreement was effective until the end of whatever duration has been negotiated. Ending the agreement just means you are ending disclosing confidential information. You are turning off the faucet and no more water is going to pour into the glass. But the water that's already in there, your confidential information, is going to still be there until the duration expires. Overall, an NDA is something that should be very simple for your attorney to provide to you in a template form that you can use over and over again with various commercial parties, and should not be something that you have to spend a lot of time or money to prepare. It's very important, though, to be judicious about when you do and don't ask somebody to sign an NDA, and particularly when you're interacting with investors. Many professional investors and venture capital funds will refuse to sign NDAs on principle because they say they are in the business of doing diligence on venture capital investments, and they have to have flexibility to think about and talk about what they're hearing in the marketplace. And they are essentially asking you to trust them because their reputation is on the line. And if they develop a reputation for having loose lips about people's confidential information, they're going to be out of business. It's your judgment call whether to interact with investors who have an attitude like that, but make sure that you are not surprised when you get that kind of response if you do ask an investor to sign an NDA, because most of them won't. When you raise money, you're going to want to raise money from what are called accredited investors. These are people who are sophisticated enough to understand what they are investing in, and therefore people who you are less likely to be criticized by the SEC, the Securities and Exchange Commission, for having taken money from. Now, it is possible to take money from somebody who is not accredited, but it's generally not a good idea because it increases your risk of a problem with the SEC in the future, particularly if you take money from a large number of non-accredited investors. So what is an accredited investor? To be an accredited investor, you have to have at least $1 million in assets, not including the value of your primary residence. And if you don't meet that requirement, the other way to be accredited is to have earned at least $200,000 or more in annual income in each of the last 2 years, or $300,000 if you're married and want to combine your income with your spouse. There are other ways that you can be an accredited investor that are a little bit less common. For instance, if you're a sophisticated person who works for a private equity fund or another institution like that, you have the ability to be considered an accredited investor just by virtue of your employment. But these are all things you should be talking about with a sophisticated securities lawyer who can provide you a questionnaire to put in front of your investors so that they will tell you on what basis they're accredited and won't leave you guessing, and will give you recourse in the event that it turns out that they were not accredited and they misrepresented their status to you. But overall, as the startup founder, what you want to do is you want to put a questionnaire in front of your investors, which your lawyer can provide and should provide as part of your note and safe financing process, that requires the investor to check the box to tell you exactly how they qualify as an accredited investor. But again, it's not the end of the world if you want to raise from somebody who's not accredited. It just can complicate things if you do it too often. So make sure to consult with a securities lawyer to understand those requirements and the risks and rewards of proceeding with that investment.
Amigo.
Bill, I'm on stream, but I realized I never called you back.
Yeah, what the heck's that all about?
Well, what do you mean? What's that all about?
This is what I'm trying to do. Tomorrow I'm gonna give you a call. You can be on stream or whatever. I'm gonna book you for lunch. Me and my AE, we're gonna take you out for a nice meal. It's gonna be nice. And we're gonna talk some shop.
You're gonna take me out for a nice meal and talk some shop?
Yeah. That sound good?
What time are you thinking?
Not even this week. We're doing it next week.
Okay. Next week would be better.
Yeah, I can't do Friday. I got too much shit going on. I'm out of work today. My manager was just like, "You're good. You don't have to come in," because I came in at like 8. Two the other SDRs and like both AEs also called out. Everyone was so hungover after our partners kept dinner. And they tell everyone to come in at 12, but I came in at 8 a.m. and saw my manager, and he was just like, "Dude, you look rough. You can just come in tomorrow." And I was like, "Okay, sick."
Okay. Well, dude, there you go. How's the job? You
very
slinging
good.
a lot of policies?
Services, managed services.
Hmm.
I actually have to run, but I'm gonna call you soon. Okay? You're my boy. I love you, and we'll talk soon.
All right. Peace.
Peace. Sorry.
All right. I guess his company wants to wine and dine me. I should have asked where they're taking us. Hmm. All right. We're going to keep going through these. I got to watch these.
How do you know what advice that you should take from people that you pitch to? What I try to tell founders, and even the information that I give them on a daily or weekly basis, is that my view is from the outside. I can be a mentor, advisor, right, investor, but I am sitting on the outside of your venture. I can have potentially interesting insights into that, but you do not need to listen to what I'm telling you like the gospel. That's not how this works. What you as a founder should end up doing is that you should take in a bunch of information from everyone, hear it, listen to it, and then decide if it is relevant for your actual venture. If it is not, that is totally fine, get rid of it. I've gotten terrible advice from investors before, from qualified people in my city that have been doing investing for a while. I've also gotten some of the best advice that I've ever gotten. The best advice that I can give is to listen to everything, and then you have to be able to make the decision whether it is relevant for you or not.
Alrighty.
So we've talked about the founding team. We've talked about service providers. We've talked about vendors and customers a little bit. Now we're going to talk about what you've all been waiting for, investment transactions and M&A. There is no way that we can capture everything that you need to know about these topics in the format of these videos. So please take this as an overview and something that should prompt questions for you to discuss with an attorney that's specific to your situation. Having said that, let's dive right into talking about the most common financing structures for an early stage venture, the very first money that you're going to raise. Typically, that's going to take the form of a safe or a convertible note. So first, let's talk about what safes and notes are and how they work. Very simply, a convertible note is a debt instrument. It's a loan. Someone gives money to your company as an investment and receives a document called a convertible promissory note that creates a debt obligation. Your company owes them the money back. It accrues interest just like any ordinary loan that you might get from a bank. It has a maturity date just like a regular loan. But what's not like a regular loan is that a convertible note is, as the name implies, convertible. You can convert the debt obligation, take that money that the person gave you at the outset, and later convert that money into shares of stock in your company. And that is what convertible note investors want. They want to receive equity in your company in the future after you have gotten to the point where you're able to raise more money from a venture capital fund or some other large investor that's helping you scale and grow more than this early stage investor really can do for you. A convertible note, however, is structured as a debt instrument as a protection for the investor. If your company is not successful, the convertible note will most typically require that you be the first person to be paid out if the company folds and has any assets left to distribute to anyone. So in other words, if you hold a convertible note and it never converts and the company fails, but there are assets to distribute, you're going to be first in line to get those assets before the founders, before any of the stockholders. A safe has a lot of features in common with a note. It still converts into equity, just like I described, when you raise more money from a larger investor. However, a safe is not a debt instrument, so it doesn't have the same degree of protection on the downside for the investor, and therefore safes are generally considered to be more favorable to the company, more favorable to the founders than convertible notes. You want to be flexible when you're negotiating with early stage investors, and don't be too committed to one structure or the other. Focus more on getting the money that you need and making sure that the negotiated conversion terms are fair and appropriate for your situation. So let's talk about what those terms are.
right? We got a convertible note here. All right. Pretty standard. Okay. Okay. Promissory note. Okay, so they actually give us some of the documentation here. Could use this if we need to.
The most basic economic terms of either a convertible note or a safe is going to be whether there is a valuation cap or whether there's a discount rate involved. So what does that really mean? What we're talking about here is the ratio, the price at which the person's investment in your company is going to convert into shares of stock in a later financing event. The trigger for that conversion, by the way, is called the qualified financing threshold. It's an amount of money that you have to be raising in order to force the note holders or the safe holders to convert their instruments into shares of stock as part of that financing transaction. It's usually a seven-figure amount of money for an early stage venture, the qualified financing threshold. But once you meet that threshold, at what ratio does the person's money that they advance to you convert into shares of stock? So there are a couple of ways that you can determine that. One is by setting a valuation cap. Now, a valuation cap is...
Guys, if this is rudimentary or boring, or you already know this, let me know. It's obviously very important if you're trying to build a company to understand valuation caps and just understanding how all this stuff works. Discount rates. These are the vehicles, the ways that you're actually going to raise money in the early days. So super important stuff. But of course, almost any startup CEO, startup founder is going to know this stuff. But he explains it pretty well. So if I seem distracted, maybe I am a little distracted, but this is very important stuff to know. So we're going to keep it playing. I want to just make sure I go through all this. I have a refresher on everything. And then what's going to be the juicy part of what we're diving into is the diligence and data room. On our schedule, I know that we've got a couple of stuff happening before. We're going to get back to our podcast planning, our LinkedIn follow-ups, and then the follow-up from our call with Chris. And then we're going to dive into the data room. But for the time being, let's go through the rest of these videos. I don't think that the podcast planning is going to take over 30 minutes. So we're going to let these videos play. We're probably going to knock out the podcast planning in like 10 minutes. And then we're going to go into the LinkedIn follow-ups. That's the game plan. It's going to be sweet. And actually, you know what? Just because I know that this camera is going to die, as we go through these different, I'm going to play these videos. I'm going to take my camera off just because, I want us to be able to have my camera on when I'm working later. So I'm going to unplug this camera. I'm going to turn it off, and we are going to, actually, you know what I could do? I just had an idea. I just had a very good idea. Okay. We're going to put the schedule on another screen. All right. Is it screen 1? Nope. Screen 2. Screen 3. Whoops. What the heck is this? Heck. Do I really not have this? I guess I could put it here. All right, let's do that. Let's do that. Okay. Put screen 2 there. Turn off the camera. All right.
It very basically says that when you get to that financing event, you're going to have a valuation for that financing. You're going to raise that Series A at, 10, 15, $20 million valuation or more. But this investor, as a reward for getting in earlier than your Series A investor, is going to receive a valuation that's lower than the valuation that's being paid by your new money investors in the big financing event. If the valuation is lower, that means they're going to get more shares per dollar invested when their note or their safe converts. And so you have to be very careful when you give out valuation caps not to set the cap too low, because if you do, and you later raise your financing, your Series A, at a much higher valuation, you're going to end up giving away a lot more equity to your early stage investors than you really want to. To put a finer point on it, just to keep the math easy, let's say your Series A is at a $10 million valuation and you issued notes or safes at a valuation cap of $2 million. What that means is that your note or safe investors are going to get 5 times the number of shares per dollar invested that your new money investor is going to receive. Unless your early stage investors offer extraordinary value to your venture, that kind of multiple is egregious and something that's going to be very upsetting to you as a founder with a significant percentage of the cap table that's being diluted by all of these notes and safes converting. The other way that you can determine the ratio, the conversion price at which a note or safe converts into equity is by using a discount rate. So this is simpler and better for you than the valuation cap, because the discount rate simply says the note holder, the safe holder, is going to get a discount off of whatever the Series A price is. So back to that example, if the Series A is at $10 million and your note contains a 20% discount provision, then your note investor is going to convert their note at a ratio that's based on an $8 million valuation. That's a heck of a lot better than setting a valuation cap, which is probably gonna be lower at $2, $3, $4, $5 million, and thereby give the investor more shares per dollar invested than they would receive through the discount. And putting it together, most commonly, notes and safes will include both of these concepts and allow the investor to receive whichever is more beneficial to them. So a cap and a discount can coexist within the same document. And that, although you have to be very careful with the cap amount, is the most typical deal that we see with early stage ventures that are raising from angels or maybe early stage venture funds or even accelerator programs. And so if you see both concepts combined in an agreement, that is very typical and customary.
All right, guys. We're ripping through this homework. It's also just good to know. All right, how to maintain a cap table. How do you decide on the right number of investors? All right. Series A financing. So you're hitting the big boys.
What happens in a Series A financing? What's the process? We'll talk about what the documents say and what preferred stock is in a minute. But I want to outline the overall process of a financing for you very briefly. The process is going to start with you taking meetings with various venture capital investors that you've connected with through your networking efforts. And eventually, if you're fortunate enough, one or maybe even more than one of those investors is going to present you with something called a term sheet. A term sheet for a preferred stock financing is going to be a document of about 5 to 10 pages in length that is going to outline all of the key terms of the financing to make it easy and efficient for your lawyer and for the investor's lawyer to quickly draft and negotiate and close the transaction based on the high-level terms that you've negotiated. So the term sheet is going to outline things like the amount of capital that's being raised, the type of security that's being issued, generally preferred stock, how the notes and safes are going to be treated when they convert into preferred stock, if there are any. But it's also going to cover topics like how the investor is going to be represented on your board and what types of actions you can and cannot take without the investor's consent, among many other issues. A term sheet is usually a non-binding agreement. So that sounds like a misnomer, but what it basically means is you're signing up to confidentiality obligation, you're signing up to a commitment that you're not going to shop the investment opportunity around to other potential lead investors in your financing round, but everything else that is set forth in the term sheet is negotiable. And the point of the term sheet is just to give a roadmap for that negotiation. Once the term sheet has been signed, the investor is going to kick off their legal due diligence on your company. And what that means is their lawyer is going to present you with a request list, a long list of questions and requests for documents from the company's history. And if you've done things in a responsible way, you're going to have a lot of these materials basically ready to go. And it'll be a matter of organizing them into folders in a cloud storage environment and sharing that, what's called data room, which just means a tree of folders that contain all these documents they want to review, with the investor and their counsel. The more you can get ahead of the diligence process by having your documents well organized and properly drafted, the less painful the diligence process is going to be. But once you open the data room to the investor, they're going to read through everything that's in it, and they're going to ask you follow-up questions. And these questions are going to affect certain aspects of the financing documents that are going to be negotiated based on the term sheet. Once you get past that, you're going to be working with your lawyer on the definitive documents for the financing, the documents that are drafted based on the term sheet. And in a typical venture capital financing, there are 5 documents that govern the transaction. There is the certificate of incorporation, there is the voting agreement, there is the investor's rights agreement, there's a right of first refusal agreement, and there's a stock purchase agreement. We're going to talk about all of those in the next few videos.
Honestly, this was a pretty important one.
Sheet for a preferred stock financing is going to be a document of about 5 to 10 pages in length that is going to outline all of the key terms of the financing to make it easy and efficient for your lawyer and for the investor's lawyer to quickly draft and negotiate and close the transaction based on the high-level terms that you've negotiated. So the term sheet is going to outline things like the amount of capital that's being raised, the type of security that's being issued, generally preferred stock, how the notes and safes are going to be treated when they convert into preferred stock, if there are any. But it's also going to cover topics like how the investor is going to be represented on your board and what types of actions you can and cannot take without the investor's consent, among many other issues. A term sheet is usually a non-binding agreement. So that sounds like a misnomer, but what it basically means is you're signing up to confidentiality obligation, you're signing up to a commitment that you're not going to shop the investment opportunity around to other potential lead investors in your financing round, but everything else that is set forth in the term sheet is negotiable. And the point of the term sheet is just to give a roadmap for that negotiation. Once the term sheet has been signed, the investor is going to kick off their legal due diligence on your company. And what that means is their lawyer is going to present you with a request list, a long list of questions and requests for documents from the company's history. And if you've done things in a responsible way, you're going to have a lot of these materials basically ready to go. And it'll be a matter of organizing them into folders in a cloud storage environment and sharing that what's called data room, which just means a tree of folders that contain all these documents they want to review, with the investor and their counsel. The more you can get ahead of the diligence process by having your documents well organized and properly drafted, the less painful the diligence process is going to be. But once you open the data room to the investor, they're going to read through everything that's in it, and they're going to ask you follow-up questions. And these questions are going to affect certain aspects of the financing documents that are going to be negotiated based on the term sheet. Once you get past that, you're going to be working with your lawyer on the definitive documents for the financing, the documents that are drafted based on the term sheet. And in a typical venture capital financing, there are 5 documents that govern the transaction. There is the certificate of incorporation, there is the voting agreement, there is the investor's rights agreement, there's a right of first refusal agreement, and there's a stock purchase agreement. We're going to talk about all of those in the next few videos. There are a few things that come up over and over again that you should know about. One is that an investor might negotiate for what's called a participation right. This is something that allows them a right of first offer to join in a future financing, to invest money in a future financing, and in an amount that is at least proportionate to their stake in the company as it exists before the financing. This could be a good thing for your venture, because it offers you the opportunity to receive more money from somebody you've already decided to take money from. But it can also limit your options when you get to a Series A financing, so it's something that you're going to want to carefully talk about with a lawyer. Another provision that we commonly see are called information rights. These are rights that investors want to receive financial reporting and other information about how things are going so they can monitor their investment. If the provisions are relatively restrained, like if they require you to report to them once a year, or maybe once a quarter, but what they're asking you to provide is not too burdensome, it can be acceptable, but be careful of people overreaching or trying to exercise too much control of your business. An angel investor, somebody who's coming in and in an early stage investment for a relatively small amount, should not be able to control your decision making over anything. But it is reasonable for them to want information from you about how the company is performing so they can understand where their investment stands. Some sophisticated investors will also ask for the right to have what's called a board observer. So this would be a person who attends meetings of your board but doesn't have the right to vote. They can comment on issues, but they don't vote. That's kind of unusual for an early stage company because typically the founders are the board members and the board doesn't have formal official meetings until after an investor has joined the board as a voting member, which doesn't usually happen until a Series A financing, when these notes and safes will have converted. But if you do see an investor request an observer right, it's not a crazy ask, but only something that you should grant to someone who's writing a relatively large check, I would think for a 6-figure amount of money. Lastly, many notes and safes have what's called a most favored nation MFN provision, which simply means that if after you issue the note or the safe to the investor, you later go and issue other notes and safes to other investors that are on more favorable terms than you gave to investor number one, then you're committing that you're going to amend investor number one's document to match those more favorable terms. It's not something that we always see, but again, it is a reasonable thing to ask if the investor is sophisticated, provides you meaningful strategic or other value, and is writing a large enough check. So don't walk away from a deal just because you're being asked to give an MFN. So we've talked about the typical early stage financing instruments, which are safes and convertible notes. Now let's get to the main event. You've raised your money, you've raised safes and notes, it got you started, you've gone to market, you've developed some traction, you have some recurring revenue, and now you're looking to raise a significant amount of money from venture capital funds or other institutions. This is most often referred to as a Series A financing or a Series Seed financing if the valuation is lower. But whenever you hear a financing described like that, Series blank, what it's referring to is a situation where the company is going to take in money and issue to the investors what is called preferred stock. At the same time, if the company has notes and safes outstanding, those notes and safes are also going to convert into preferred stock. That's that conversion we were just talking about in the previous videos. What that term means, preferred stock, is a type of stock that comes with a bundle of rights, a bundle of protections and advantages for investors by comparison to what are called the common stockholders. The common holders being the founders and the service providers who are working on the venture every day. That's right, I'll repeat it. Your investors get better treatment than you do under the documents that govern their stock. And the reason for that is so that they have protection and motivation to take the risk in investing in a startup in an environment where more than 90% of startups fail. Remember, venture capital funds have their own investors. There are pension plans. There are large institutions that break off some of their assets under management to invest in venture capital. And so your venture capital investors are accountable to those people from whom they raised their money. They need to be able to indicate to those people that their investment is appropriately protected. And that is what preferred stock is all about. It's about downside protection, it's about economics and control. And that's what we're going to talk about in the rest of these videos about financing.
All right, preferred stock. I think we're just going to cover this in the video. This is, yeah, this looks like a long document to read, so we're not going to read all that. Anti-dilution. I think we understand the concept of anti-dilution. Maybe complete and continue. We'll scroll to the bottom here. Full ratchet weighted average. All right, pro rata rights. Maintain a percentage of their equity, even with the issuance of new shares. Okay. Okay, board members oversee the operations. All right. We're cranking through this.
The second document that you need to understand for a preferred stock financing is called the voting agreement. The voting agreement is all about control and includes two very important concepts. The first, very simply, is the board of directors. In the voting agreement, typically, the lead investor in your preferred stock financing will be given a contractual right to appoint one or maybe more than one person to your board. And it's at that point, if you haven't already up to that point, that you're going to begin to conduct formal board meetings in order to keep your investor apprised of how their investment is doing. The other thing that's covered by the voting agreement is called the drag-along provision. And the drag-along provision is a right of your lead investor, most likely, and also you, the founders, will have a say in this, but it's a right of certain stockholders to force other stockholders, smaller stockholders, to agree to sell the company. And the reason why you want to have this drag along provision in place and why every investor will expect to see it is that if you get into an M&A transaction in the future, you are not going to want to have to chase down every single one of your small holders to get them to agree to the transaction. You're also not going to want to have to argue with investors who, although important to you, are not the lead investor in your financing and thus shouldn't really have the right to block the transaction from going through. With a drag along provision, usually if you have the lead investor on board with the transaction and you, the founders, are on board, it's probably going to go through. But of course, the group that can trigger this drag along right, this ability to drag other stockholders into the M&A deal, is something to be negotiated. The third document that's worth understanding in a preferred stock financing is called the Investor's Rights Agreement. And this is a particularly long agreement that starts off with pages and pages of legalese about what's going to happen in an IPO. That's beyond the scope of these videos. If you go public, congratulations, we'll do another set of videos on that. The rest of the document, after you get through the IPO provisions, which are called registration rights, contains a few concepts that we mentioned in regard to notes and safes a little bit earlier. These are information rights and pro rata rights. I said earlier that these are optional or something that only a sophisticated investor will negotiate for in a note or a safe round, but you're going to see them every single time in a preferred stock financing. So again, information rights are provisions that require you to provide to your investors quarterly financial reporting, allow them to have access to your books and records whenever they want in order to check on the status of their investment. If you have a physical office, it'll even give them a right to come to your office and inspect your premises and your business if they want to. Although I've been doing this for 10 years and I've done probably 150 of these deals and I've never seen the inspection right used, I'm sure someone is using it out there somewhere. The pro rata rights function similar to what we described earlier with respect to notes and safes. They give your investors a right to participate in future transactions. This can also be called a preemptive right or a participation right. They mean the same thing. What a pro rata right essentially means is that if you raise a Series A financing and then later on you go to raise a Series B, your Series A investors are going to have the right, they don't have to use it, but they have the opportunity to purchase shares in the Series B in an amount that will keep them roughly at the percentage they were at after the Series A, so that they are not diluted by the Series B financing. And again, this is all very customary, but it's not customary for your investors to ask for a pro rata right that is more than 1x what they're investing. I've seen it occasionally, but it's very unusual. They should only have the ability to maintain their current ownership percentage. And it would be reasonable, by the way, to restrict access to this right only to people who are investing very large checks, say $1 million or more. This would simplify the process of doing that Series B financing because there aren't so many people that you have to go out and check with, are they going to exercise their pro rata right or not?
Let's talk about liquidation preference. So this has not been a topic that you typically have seen from, call it 2010 to 2021. Liquidation preference basically means that the investor that invests in this round will get 2x, 3x, depending on what the actual preference is, of their money before anyone else gets really anything. What ends up happening and why liquidation preferences are very, very dangerous is that if I, as a pre-seed investor, say that I want a 2x liquidation preference and I put that on the cap table and the founders agree to it, that means every subsequent investor that comes into the round is going to ask for the same thing, which can lead to absolute disasters, not just for the early stage investors, but for the founders as well. They might not get any money back. It can lead to a lot of chaos. I've seen companies fail because of having a liquidation preference in there and not being able to actually exit. So the thing with liquidation preference is be careful if you see it in the cap table, because it can lead to a lot of future problems as the company progresses.
Yeah, we're not doing liquidation preferences here, guys. No way, Jose.
The idea behind power law is that if I make 50 investments, that call it one will generate the majority of my returns within my portfolio. And so when we look at diversification from an investor standpoint, and this typically happens a lot of time with angels, is that they'll walk in, they'll invest in 2 or 3 deals, they'll get burned, and they won't make any money, and they won't ever come back to the space. Now, that is not the right way to end up going about looking at the VC space. You kind of need to be in at least 30 deals to start generating power law. And so the idea is that out of those 30, call it 50% of them will end up failing, 20% will give me a 1 or 2x return, 10% might give me 5 to 10, and then 1 would end up giving me that kind of 50 to 100x that I'm looking for to make the mathematics of an actual fund work. There's a reason why investors are so focused on market size when looking at early stage startup deals, is because without a large market to be able to grow into, I can't get the company to a high enough valuation for it to make sense for me to invest into this company. So if you can't generate a 50 or 100x return, then there's no point in me investing into you, because you're not following the math that I need for my actual fund. There are a lot of challenges with it when looking at this stuff, but it's one of the reasons why market size is so important and why we need such high diversification, is because honestly, we just need a lot of at-bats. Like, I have a 90% failure rate, right? Like, I need to be able to go have a bunch of swings so that I can try to hit that home run for my actual portfolio. But it is a topic that absolutely needs to be dove into, because it is the entire mechanics of how a fund works, not just for a venture capitalist, but from an angel as well, from their individual perspective. They need to understand how this works and not drop a bunch of money into 2 or 3 companies expecting the return. Is that they need to spread that capital out and have an actual portfolio theory.
All right, guys. I hope that this is educational. You're learning a lot. The power law. So this is pretty much what he just said.
The fourth document that you need to understand for preferred stock financing is called the right of first refusal and co-sale agreement. That's a mouthful, but it's actually pretty straightforward. What this agreement is all about is the founders and their shares, and what happens if one of the founders wants to transfer their shares. If that sounds familiar, it's because we mentioned it toward the very beginning of these videos when we were talking about the founders' restricted stock purchase agreements. Similar to those agreements, your investors are going to want a right of first refusal agreement to be put in place that essentially says the following. If you as a founder propose to transfer your shares, not for estate planning or purposes or to some other entity you control, but to a bona fide independent third party, then the first thing that's going to happen is the company is going to have the right to jump in and buy the shares from you at the price that was negotiated with that third party. That's similar to the founder restricted stock purchase agreement. What's not in the founder agreement, and that is in the preferred stock financing agreement, is a secondary right in favor of the investors. So if you propose to transfer to a third party, the company first gets the chance to jump in and take over the transaction and buy your shares back from you. If the company, for whatever reason, the board, decides that it does not want to do that, then what happens next is the investors get an opportunity on a pro rata basis, proportionate with what they own in the company going into the transaction, to jump in and buy the shares from you instead of allowing the transfer to go through. And it is only after both the company first and then the investors have passed on the opportunity that you are allowed to go ahead and transfer your shares. Now, if that sounds unfair to you, think about the proposition that your investors thought they were getting into. They are investing just as much in your IP as they are investing in you as a founder and in your core team of co-founders, if you have one. They are not generally going to want to see you giving away equity or transferring your equity away to others, because your primary incentive to continue working on the venture is to get it to an M&A transaction where you're going to hopefully make a ton of money off of your equity, as will the investor off of their equity. So the right of first refusal is there to prevent you from transferring your equity and losing your incentive to continue working on the business. But it's also there to prevent the investors from having some unknown person, this third party that you want to transfer your shares to, come onto the cap table and be a stockholder in the company. It gives the company and the investors control over who is going to come onto the cap table, what new parties are going to be stakeholders in this business, who can make trouble if there's ever a dispute over an M&A transaction. So this is all very fair and customary and something your investors will expect to see. The other major component of that agreement, though, is called the co-sale provision, also known as a tag-along right. Those two terms mean the same thing. And what that means is if you, the founder, are proposing to transfer some of your shares, hopefully not all, but maybe all of your shares, whatever you're proposing to transfer, the investors have the ability to jump in and cut back what you're transferring to the third party in order to sell some of their shares to that third party. They get to participate and tag along with your proposed transaction. And again, this is all done on a proportionate basis. The purpose of the co-sale part of the agreement is just to lay out the mechanics for how that's going to work. This right of first refusal and co-sale agreement overall is frequently the least negotiated document in the financing and should be the easiest one to align on with your investor.
That is an important term, for sure.
The fifth and final agreement that's part of the core document set for a preferred stock financing is called the stock purchase agreement. Very simply, the stock purchase agreement is there to transact the closing of the investment, at which time the new money is going to come into your bank account through a wire transfer, and the shares that the investor is buying are going to be issued to that investor. At the same time, any notes or safes that are converting into stock in the transaction are going to be canceled and replaced by stock that's being issued to the note holders and the safe holders. So the first part of the purchase agreement is going to outline all of that and those mechanics. After you address that, the next part of the purchase agreement is going to cover what are called your representations and warranties. What these are factual statements that you're making about the business as of the time that the person is investing in your company. So these statements go on and on for 10 or 15 pages of the agreement, and they cover all sorts of topics, like that your company has complied with all laws that are applicable to it, that your intellectual property is on a sound footing, that you don't have any pending litigation, that you have X number of employees and Y number of independent contractors on staff, that you've complied with various regulations that are specific to your business. Like, for instance, if you're in biotech, that you've complied with regulations of the FDA or other regulatory authorities that are applicable to your industry. There could be provisions around privacy compliance. Have you complied with all those complicated privacy schemes we talked about in an earlier video? These are all issues that are going to be addressed in the course of due diligence. And it's possible that some of the statements that you're making in the purchase agreement are not factually true. Yeah, I'll repeat that. You might be signing up to statements in the purchase agreement that are not actually true. And what happens when that occurs? Well, you're either in breach of contract or you're not. And the question of whether you're in breach of that contract and whether your investors have recourse against you has to do with a document that goes with the purchase agreement that's attached to it called the disclosure schedules. The disclosure schedules basically are a list of all of the exceptions all of the things that are not true about the statements that you made in the purchase agreement. So the representation and warranty is a statement that you make, and to the extent it's not 100% true, you have to disclose that it's not true in this disclosure schedule. And if you do that and you do it correctly, you're not in breach of contract for the statement being untrue. But it's important that you not blow past the process of preparing these disclosure schedules, because the schedules really are your insurance policy against a claim of breach by your stockholders, a claim that you didn't represent everything fully and factually at the time that they made the investment. It's always to your advantage to over-disclose in the schedules, to try to list as many exceptions as you can to prevent any possibility of anybody bringing a claim against the company. That's the basic concept of the purchase agreement. It's also important to understand that the purchase agreement is different from the other 4 agreements in the sense that it really just exists to transact the financing and the representations and warranties. And it's not something that is a living document that you're going to come back to over and over on an ongoing basis. It exists for a moment in time and does the deal, and then it's gone. So it's something that is not really a governing document of your company, but rather a transaction document to give the investors comfort and certainty that they can go ahead with the investment.
So the option pool is important, especially at the early stage, making sure that the founders actually have an option pool. Typically, if you're working with a couple founders, depending on, again, what stage that you're looking at, if you're looking at pre-seed and it's all founders within the company, maybe they have 3 and they're about to hire their first employee or they haven't yet, they probably have not set up an option pool of about 15% of the actual equity to be able to dole out to employees as they start those kind of next growth phases. Now, the challenge with not having an option pool is that if I, as an investor, invest in this round, and then later down the line, in a year, they put on an option pool, and they didn't have one before, it means my equity percentage is going to get crushed down for something that was very avoidable. And so looking at option pools is a very important thing to make sure that they're there and ready for as they start that kind of hyper growth employee expansion.
All right.
In these videos, you've heard about most of the tasks that are really critical to setting up a company and a brief overview of the process of obtaining financing. Hopefully, that financing is enough to power your business to success over a life cycle that follows a typical path of, let's say, 5, 7, 10 years to get to an exit transaction. Eventually, though, you are going to want to exit this venture in one way or another. If you're fortunate enough to do so in a profitable M&A transaction, then there are numerous additional issues that we could talk about that you would want to know about in order to be prepared for that M&A scenario. When you're considering whether an M&A transaction makes sense, there are numerous variables that you're going to want to consider and think about. It's impossible for me to list all of them in a video like this, but very basically, you want to think about, is the value of the transaction enough to generate a return for your investors and for yourself that justifies walking away from having the level of control of the business that you have today? In the context of the financing documents that we just talked about, you need to think about the investor's liquidation preference and whether they're going to suck up all the money that your buyer is going to provide to you, or whether they're likely to convert their shares from preferred stock to common stock and participate alongside you. Of course, we all hope that you get to a scenario like that because it will mean that you're returning a profit to them and not simply giving them back their investment. You need a lawyer to help you analyze whether that will be the case based on the COI as it exists at the time of the deal. Of course, you're also going to want to think about the drag-along provision in the voting agreement and what's going to be required in order to approve the deal so that you can think about the dynamic with your investors and with your board to understand whether you're going to have a good chance of getting the deal over the line and therefore closed. But putting all that aside, you're also going to want to think about the diligence process and the path to closing the deal with the buyer once you've identified one that you believe is the right fit and who's offered you a letter of intent or similar document indicating that they're ready to go forward with a transaction. They're going to do extensive due diligence on your company, much greater than the diligence that's done in a venture capital financing. They want to understand the true value of your business. In some cases, they want to look for opportunities to retrade on the economics of the sale that they've negotiated with you. They're going to want to understand what the risks are, what liabilities may be lurking under the hood that they're going to have to deal with after they buy the business, or that might even cause them to walk away from the transaction if they're uncomfortable with the risk. They might also look for opportunities to shift the burden of that risk to you, the stockholder, and your investors by causing you to indemnify them if the risks that they're concerned about result in liabilities for them after the deal is done that are really your responsibility because they arose while you were running the business. There are numerous other issues that could come up depending on the industry in which you're involved. So if there are significant areas in which you've not complied with applicable regulations, your buyer is going to want to be covered for that, again, most likely through an indemnification concept. They also want to understand what contracts you have in place with your vendors and your clients and what the risks and benefits of those contracts are for them. What contracts are going to come over to their company in the deal versus being canceled at the time of closing. They're going to want to understand litigation and any disputes that have arisen over the course of the company's life cycle and whether they're inheriting those disputes or whether they've been settled in an efficient and appropriate way. If these concepts and ideas are sounding like things we've talked about, that's because they are. Most of them have been covered in these videos as a way of encouraging you, the founder, to try to get out ahead of as many risks and liabilities as you can along the way to raising money so that you don't have to deal with them when you get to the stage that you're ready to exit. By doing so, you are setting yourself up for success through an efficient closing process and reducing the risk that your buyer is going to walk away from the deal. Of course, you also have to think about your personal goals. Not really something you can look to a lawyer for advice, but where is your career heading? Does the buyer represent an opportunity for you to continue your career as an executive at the buyer company? Or does it offer you an opportunity to totally walk away and move on to something else? And how do you feel about that? Important to discuss with not just your lawyer, but all of your advisors, investors, and people who have helped you get to the point of even being able to consider a profitable exit. And of course, finally, you must consider the impact on your team. You need to consider an efficient, responsible transfer of the business from its current state to being a unit of the buyer company and the impact that that's going to have on your team. If it's going to result in workforce reductions, you have to be prepared for that, and an approach not only to communicating and minimizing disruption, but also compensating employees in exchange for a release of claims that will give the buyer certainty that they're not going to have to deal with disputes with these employees on an ongoing basis. And I would be remiss if I didn't mention that M&A transactions are heavily driven by tax implications, and you're going to need to have sophisticated tax counsel on your side before you get into negotiating the definitive documents for the financing. As early as the letter of intent stage, you should have tax counsel involved, and your corporate law firm should have tax counsel available to help you in partnership with the corporate attorneys who are driving the deal forward. Overall, if you get to the point of being able to even consider a profitable M&A transaction, you should do so with confidence and pride, because you've built your venture the right way, the responsible way, and you've raised money, you've scaled and grown a team, and you've identified a buyer that makes sense for what your offering is to the marketplace. I wish you good luck, and may the odds ever be in your favor.
All right, guys, how are we feeling? I know that my video is off during it, but now we're charged and we're ready to go. All right, we are ready to go. So right now, 5:45. These videos took a little longer than expected, so we're running a little behind schedule here. I think we'll be able to make some of that time up, though. Why markets matter, power laws. Okay. All right, guys. Here we go. We are on to the data room. I've been waiting for this module. Oh, and then we can go on to this. All right, guys. I'm pumped to go through this. We definitely have some work that we got to get done right now, though. So the big question, you know what? Before we move on, I'm going to grab a protein shake. I'm going to grab a protein shake. I didn't grab one protein shake. I grabbed two. Double the gains. All right. Man. All right. All right, so we're going to have to fill out this data room here. I mean, this is quite a bit here. All right. All right, guys, we're about to get focused. We're a little behind schedule, but that's okay. We also had a call pop up for 7 p.m. It's with a guy that we just got introduced to over text today. by the CEO of Startup Village. Apparently, this guy's startup just went under, and I think he's interested in MyWorker. Okay. So the big question is, do we try and take a nap and work, or just power through it now? All right, let's try and power through it now, and if we can't, we'll take a break. Okay. So search our chat. Here's what we're gonna do. So we got to plan out how we're going to run our investor outreach. I actually got a little bit of a plan for this. So I'm going to say we want to plan out how we're going to manage our scheduling with our guests using your superhuman intelligence and all relevant domains. Could you figure out the best way for us to go about doing this? Are there any templates or things that we should have ready? Any scheduling links that we should have ready? And then maybe just like a package talking about the podcast and the stream and everything else. And I know that if you look through the other chats, we've got some high level stats on the podcast and everything else, and follower metrics. Particularly, this stuff was put together when we were putting together the sponsorship documents. But all that to say, yeah, could you please figure out the best way for us to run this this situation with guests? And as a heads up, we're communicating with them directly on LinkedIn. We're running an outreach segment on LinkedIn. Some of the angels or founders who are interested are responding, and some are asking for more information. Some of them are saying, yep, let's do it, and giving contact info. And so we got to figure out how we're going to run this entire process. All right, guys. We got to keep the momentum going. I think we need another protein shake. The protein shakes keep the momentum up, I'll tell you that. Guys, we're setting records here. The stream has been 7 hours and 42 minutes. I think our longest ever stream was, how long was our, I think our longest stream ever was about 9 hours. So I think we're going to break that record today. Yeah, maybe we should use Riverside for the podcast. Calendar invite template. Paste this every time. All right, this is pretty solid. I like this approach. All right, this is a little bit of a process to manage, but honestly, it'd be good for us to go through it just to make sure that we got it covered. Okay. So step number one, we always just try and make it better. So I'm going to say this is a great start. Let's try and figure out what we can do to make this 10,000 times better. I think it's good right now, but let's figure out what we can do to make the final version and make sure that we're approaching this in the best way possible. We want the guests to feel very taken care of, you know, like make it seem like we're on top of our stuff. And we also need to use it in a way where we can build the relationship because ideally the investors end up coming on as investors in us later on. And then ideally the founders end up coming on as customers later on. So anything that we can do to really run the process in the best way to build the relationship would be ideal. And then also having an idea of how we put them through the funnel after the recording to ideally get them on as an investor, as a customer. So yeah, let's make the approach 10,000 times better. All right, guys. So we're reviewing this this approach here. Promise the kit include one use. All right, guys, as I'm reading through this, I'll tell you my thoughts. It seems like this is going to take a little bit longer than I expected on getting this flow right, which is fine. But I do think that there is an opportunity for us to do this well. And it'd be better to do it well rather than going like 80% and then leaving a lot of potential deals on the table. So I'm going to read through this in a little bit more depth. But the goal here is for them to feel like a VIP every stage. Okay. I think that this approach is much better. I really like this approach. I think that we should just treat everyone like an A tier, it seems like, um, and just have a simple, repeatable, maybe not simple is the wrong word, but a repeatable process and funnel an approach that we can run every single guest through. Of course, it's going to be slightly different in terms of the prep that we offer for the investor podcast versus the founder podcast. But with that in mind, could you come up with and create the very final approach and make sure that we have everything we need to execute it properly? Yeah. And then I'll just say, leverage your superhuman intelligence in all relevant domains to do this in the best way possible. All right. Oh, I forgot. I got to call my buddy back. Maybe that'll give me some energy. I'm going to go to pro mode, and then I'm just going to say, like, this is amazing. Could you lay out the details as well as all the links for everything that we need to do, as well as a instruction sheet that we can give to a virtual assistant so they know exactly how to run it and make sure that they're doing everything perfectly. This is actually really good. All right. This is very good. It's very, very good. Holy crap. Very, very good. All right, so I'm gonna say, see if there's any holes in this. So this looks like, all right, confirmation. All right, we need that first email. All right, so this is great. This is really good. So I'm going to recap it out loud and then we'll see if we're missing anything. But I think that this is good. So T7 to T3, T-7 to T-3. Okay, confirmed. So this is starting after they're confirmed. Send a concierge brief, 90-second loom, reminder, and then, okay, plus quick tech check line. I don't think we need that. Recap email, what we heard, plus offer one helpful intro. Give them the quotes, highlights, posts, and then value escalator, investor, founder, branch, soft conversation. Okay, booking link. Give them the booking link. Okay. No prep required. Give them a brief. All right, header. Start there. The pattern you saw. Okay. They're going to get different clips. We draft a post for them. Okay, Riverside high quality link. Guest prep, Chrome. All right. Opening, close. Okay. All right, offer an intro. All right, I don't think we need a consent form. All right, KPIs, reminders. Okay, so I think this looks great. I think we've got a good approach here. The one thing that it looks like this doesn't have is just this flow starts from once they've already said yes. I think that we also need to figure out how we approach things for when people respond and say, interesting, can you tell me more information? Do you have any more details? What would be the very best way to just, get them to that first step that you laid out here, where they're already bought in, wanting to do something? We can take them through this flow in the best way possible. But basically, just think through the very best approach that we can take here. Please include the entire approach. We already are doing the outreach. So once someone comes in and has expressed some form of interest or asked a question in terms of how things work, we need to get the best final approach. So please lay it out, the final version, in the best way possible for everything. And it's got to be laid out well enough that we could just kind of give it to a virtual assistant if needed, and they can take care of everything. So yep, let's use your infinite intelligence in all relevant domains to take care of this. We're going to call our friend.
to and on these networks and bring their defensible IP. It is really exciting. And we talk about speed of light at NVIDIA. Sometimes we're going at the speed of light and it feels like we're accelerating. The we is the royal we, the we are the people, all of us um, in this space right now, and can't wait to see the developments that come from not one or two verticals, but all the verticals are going to get improved by those who understand how to use Gen AI with a purpose and a mission.
Yeah, I mean, absolutely. I feel like back in like 5 years ago, a lot of people they were building Web3, and then all of a sudden, them just switch their names to something AI, whatever.
Not AI, yeah.
So, but I think so, Howard. I think the future that you're painting is more on. It's going to be like the internet, like in 1990s to early 2000s. If you were an internet company, you went a lot like you got traction a little bit, right? You got the visibility. But now everybody uses the internet. So is it in a way that the future is everybody will have to use AI to have a process that it's more efficient and be able to get to the final outcome faster and cheaper?
We believe so. We certainly do. It's inevitable for all of us, but it's more opportunistic for those who, brave this new world and get in front of Pegasus, get in front of Howard Co., get in front of other folks who have the tools and the APIs and the SDKs to enable these companies to run faster into their destiny. And that's what we like to do at Inception. It's our NVIDIA for Startups program, codename Inception. We like to work with companies and startups wherever they are, meet them at their level of expertise. And now you don't have to have a PhD in CS in order to prompt and interact with Gen AI. And it feels like it's leveling the playing field a little bit. And so lay persons like myself that I just don't happen to have a PhD. I was thinking about getting one this weekend, but I don't have one yet.
Wow.
This makes it much more real for all of us.
Wow, you're really thinking about getting a PhD.
No, I was absolutely lying to you. I was going to say I was going to go online class from
the OpenAI PhD, right?
Because like we're seeing that engineers now out of college, they're not being able to get jobs that they were before.
Yeah.
Right. So now things are changing. So, I actually, Howard, I have one more question for you. I'm so sorry that I'm now picking on you, but have you been seeing a lot of startups they are truly driving the foundational progress in AI, or they're just building more on the top of it as existing platforms?
Just like Lucas said, they're frontier models, they're wrapper models, all of the layers, the middle layer, and all of them have a space, all of them have a place, all of them represent probably a different valuation to investors and folks typically on Sand Hill Road, but all are part of the ecosystem that is needed to fulfill and build out this Gen AI infrastructure.
Got it. Yeah. Howard Co. Is there, just based of what Howard Wright just mentioned, is there a specific real innovation that you get most attracted to being a C to Series A investor?
You're seeing more of a broadening of kind of what's an AI investment these days, right? I think earlier on there was a lot of I think more hype and or discussions about kind of foundational LLMs, right? Or even the application layer. I think the transition that AI has made, they almost skipped over the SaaS piece, went into vertical SaaS, like literally in like a split second, right? With agentic AI and whatever the case may be. Part of it is because it is the data set, right? It's it goes back to before AI there was machine learning. Before machine learning there was big data, whatever the case may be. Ultimately it comes down to the data, it feels like, right? And once the foundational models kind of were there, it really opened up kind of the additional data layer that
All
was
right, we're
required,
gonna get some work
right? Which
done.
is the focus, whether it's Harvard and legal or open evidence and health and whatever the case may be. You have everyone down, every vertical on down the line. You're starting to see you saw a lot of push in that area, but now you're actually starting to see the infrastructure layer kind of behind, right? Whether that is on the network side or guys like Exa, right, who is trying to basically be almost the B2B search engine kind of structured data set kind of for the future of search. So you're starting to see, I think, a broadening out of the different layers that is needed to support kind of this transition to broader AI, right? Type of thing. And so I think it's still an evolving process, right? And we're trying to be, I think selective and judicious about kind of how we view things. And ultimately, I think we try to look for things that have moats, right? Even if you are a wrapper on top, is there a reason why your wrapper is distinctive, unique? By the way, vertical SaaS, even from before, it's not like nobody can build what you built.
Yeah.
Right? Like there's no such thing as like proprietary software that nobody can replicate, right? From before. So all of a sudden, it's just that the speed at which somebody can replicate kind of what you do is much faster, right?
Yeah.
And so it's really about that go to market. But the funny thing is, go to market now has also accelerated, right? And so like you could harken it just like on a relative ratio basis. I'm not sure it's very that much different from vertical SaaS from before, right? Whether you want to call it vertical SaaS with AI kind of juiced up, kind of or not, right? And so we're looking at that with that lens, right? Look, if you have critical mass, if you have adoption, that is your ultimate moat, right? You have customers going to stick to you unless you screw up, right? If you're providing value, demonstrating value, incumbency is incumbency. The one thing that we have seen is this AI revolution has really charged the adoption rate, right? Because people are much more willing to at least look at adopting new technologies. From before, legacy industries would take years to adopt. SaaS took forever, right? Even SaaS today on legacy industries has still been so slow to adoption. But AI has forced a lot of people to really take a earlier look at kind of at these new technologies. Earlier they probably traditionally would have, which is probably why it's accelerating. You see here companies go from 0 to 100 and 150 million ARR in like 24 months, which would have been unheard of, super outlier type outcomes before. But it feels like every other quarter you'll hear about one or two of them, right? That did just that, right? So I think for us, or I think we're taking a much more opportunistic kind of approach to it because the landscape is just so dynamic kind of currently, and it's really a bet on founders more so than just specific ideas or thematics kind of that we're looking at.
Absolutely. So I agree with everything that you said, but that puts like a big question mark in my head because they once were the outliers, but it seems like there's more opportunity for more people to become outliers. So how can you recognize that? You mentioned founders, but is there anything specific that you look for to be able to determine this is going to be a successful team? Or,
Look, I think it's hard. I think this is what makes, frankly, in my opinion, seed and Series A investment right now actually one of the most challenging from a stage perspective. Oftentimes at the B and beyond kind of stage, you already can see the breakouts, right? And now, commensurately, the valuations are also relatively high, but you're also seeing kind of guys with demonstrable traction at scale, right? And so there's risk, kind of risk adjusted there, kind of on that front. But from a C to A, it's actually really hard to know kind of what's going to gain traction or not, just based on product, right? Everybody can evaluate the product as best they can, but ultimately your customers are the ultimate judge, right? And so really it's about the traction. And a lot of times it's really kind of, is there a founder with an interesting insight on how they're going to break through that noise? Because the noise floor is quite significant kind of these days. And so we're always thinking of kind of seeing what the founders are talking about go to market, more so than the product itself, believe it or not, right? Because to I think what Howard had mentioned before and what Lucas had mentioned before, you can build products so quick. You don't need a PhD, a team of 100 CS guys to build something that's viable today, right? In the next 2 weeks, 30 days, 60 days, 90 days, right? And so go to markets even is probably even more critical component of business and startups these days than ever before, right? Because the technical moat or the technical edge has been reduced so significantly, at least on the application layer. Infrastructure is a little different, right? Type of thing. So we'll put that in a separate bucket. But that's kind of what we're seeing right now.
You're a man after my own heart, Howard. I just
All right, guys.
I did not pay him to say that.
As a heads up,
GTM.
we got
I was literally going
very
to say that. Thank you for
interesting
the shout, because that's exactly the mission
get
that we
together
have
here.
at Pegasus.
We
So,
got the
Lucas,
partners from Pegasus
so
at the
that's
top.
one of the
some other
reasons why
investors
we've been
down
able
here.
to get some
There's going to be a
phenomenal
pitch
AI companies,
competition.
right, to join, to be part of our portfolio. So how have you been driving the go-to-market strategy in this phase that is all about traction? I feel like a lot of the founders within our ecosystem, they hate me for saying every day, what do they need to do to succeed? Traction. And it's not only traction in terms of the numbers,
Gotta
but
get
in
traction,
terms of
baby.
velocity. How fast can you get there and how big that number can be? So it's those two components. So Lucas, how have you been working on this go-to-market strategy? What do you think?
Just in general for startups, or how are we evaluating it?
Yeah, like what is a couple of pieces of advice, like that for founders? Because I 100% agree with Howard, and we have this as well. There's one thing for the application, another thing for the infrastructure, the deep tech layer. So for the one that it's just an application layer, that their go-to-market becomes key, right? How those companies should be positioning themselves, and how can you actually spot that the strategy and the team might be the right one to succeed?
For GTM, the things that we care about are creativity, right? Like if you're using the same methodology that other people did 10 years ago, it's not going to work. Like most of these things, you sit on the edge of you're trying to break other people's systems a lot of the time. And if you can figure out something that ends up working, that will generally be the thing that propels you into that next level. You can look at, I like to give the example of Bumble doing guerrilla marketing, right? They sent, one of their better ones was that they had models walk into classrooms 15 or 20 minutes late, disrupt the entire class, wearing a Bumble shirt. And all of a sudden they would get 300 or 400 signups because they didn't know who that was. Brex had a really great campaign where they spent 15 grand, sent really nice bottles of champagne to their top 300 target customers, and ended up picking up 181 accounts out of it, which was a couple 100,000 in ARR. And so it's with GTM a lot of time, and it just comes down to creativity. Like, what can you do to think outside of the box and kind of push those boundaries on what you think is normal to get out there? I mean, Cluey has probably done the really nice job recently. There was the one around AI where they said AI was going to like stop hiring humans, right? Like that was a brilliant campaign that got insane amount of attention. And so if you can push the boundaries on kind of what is potentially acceptable, you will get views and eventually conversions very quickly on that. So creativity is probably my best advice.
Yeah. So you're basically saying no paid ads.
Paid ads are so lazy that I hate paid ads so much, especially at this stage. Like it's fine later on when you can evaluate, but even if you're doing a paid ad now, like what is the ad? You don't even know what's working. You don't know the customer pain points. You don't know what resonates with them. And you do that a lot of the time organically in the beginning to understand, hey, this is their main specific pain point. This is what I'll be able to drive if I ever do use advertising, because that is how you can accelerate it. And so I can't stand when people put paid ads like, oh, we're going to buy marketing. It's like, that's not the way to do this at the beginning. You have limited resources. Like you need to be very creative with what you do.
Absolutely.
Sorry, I was on a little bit of a soapbox there.
But this is it's a great conversation, and it's one that with a lot of the founders, either the technical ones or not, we go for this almost every day. especially, like a lot of the technical founders, the go-to-market strategy is a piece that they do not have or they miss, and they go to the traditional ways that it could be used like 10 years ago, which in my opinion, it's lazy nowadays, but it worked back then, right? So they're using a playbook that it's outdated. So then, like on this sense, everyone else, like if you can just give me a thought on for technical founders that they are building something that it could be truly amazing. It could be the next frontier tech. Should they position the combination of the hard science that they have so they can deviate of being like an academic project to then becoming a true business, right? Because for the first time, we're actually seeing AI having applications on the real world versus just like the academic environment. So how should they position themselves as a company, as a business?
The individual scientist, the individual PhD, or as they become a company themselves?
As they become a company themselves. So a technical founder comes up with an idea that, they think it's cool to build, and now they need to build a business around it, not just like the cool tech.
Sure. So Howard Koh talked a little bit about coming further down in the stack and talking to folks earlier in their life cycle, maybe before they have a MVP, maybe before they found product market fit. We work with hundreds of world-class universities around the world with those research departments, with those professors that are tenured, that have written the white papers, that have contributed to open source, that are really moving the needle. These are the rock stars of all rock stars in the research world. Make sure they have access to all of our tools. And quite often, some of them say, you know what? I'm going to leave tenure for a little bit and go start this thing. And I need to find a team of proven C-suite executives around me. Can you help me, NVIDIA? Can you help me, Mr. VC? Can you help me, even sometimes from the university itself? The resources are there. Someone with the spark of an idea that is wildly disruptive. And we work with, again, hundreds of them all the time to see what's coming, the next thing with relationship to quantum and everything else is fascinating. So we like to, I say, meet the founders where they are. And sometimes we meet the founders before they realize that they want to be founders. And we encourage them, and other CSPs do as well. This is, again, back to this space and time that we're into. The smartest minds, the most access to compute ever, and a chance to put your fingerprints in this, in this book that is going to be considered Gen AI. And when you study this at business schools years from now or decades from now, we hope that we've done the right thing by the ecosystem to make those tools and gifts highly accessible to folks. Not just if you're in Palo Alto, but also if you're in Sri Lanka.
Yeah, absolutely. Amen to that. I think that's exactly the core of what we all are trying to build here. So is there any areas that you think it could be like the big myths of AI maybe today that they're falling short, or like big promises that AI cannot yet do?
Yeah, anything that, so if you have a deterministic set of like, if the problems have a hierarchy where there is an actual solution, like that's gonna be fine. So like engineering, math oriented questions, right, are dialed in because you can get to a right answer. When you're, and this is the challenge with the report that MIT came out with, the 95%, right, that failed, is that a lot of the stuff that went through was going towards sales and marketing, which you don't necessarily have a right answer for, and so it's very subjective. And so we're not at the point yet where the models are good enough at reasoning to be able to do those. And so that's where I would say that they're not as efficient. They're not necessarily getting disrupted, but a lot of the back office tasks that are out there can absolutely be automated. I know that we've done it here at Pegasus, like just as an example. And so to me, that's the main one.
Yeah, I feel like we're a VC tech company, which is a big
So, Lucas, you mentioned the study that it was done. I believe 95% of enterprise AI pilots, they do not reach production. What is, in your opinion, the way that enterprises need to deal with AI to actually be able to deliver real value? You mentioned back office operations, which is
Yeah, I mean that's a tough question because turning an enterprise like culturally is like trying to turn a cruise ship. Like that's a tough spot to be in. So I don't honestly know because the amount of champions that you need is tough. To Howard's point earlier, the stickiness I think is a big challenge, right? Because a lot of people have budget right now for being able to try this stuff out because the CEOs going to the board and they're like, "What is your AI solution?" And they're like, "I don't know." Like, so they end up giving budget for it, but they're not necessarily adopting it in the right way. But that is really leaving the door open for a lot of startups to come in and really eat their lunch, which is a challenge. I mean, the Fortune 1000, I mean, 90% of them could be replaced in the next 10 years if they're not adopting some of these tools on what they're looking at. And so, yeah, I mean, it's yeah.
We're seeing that. I'm sorry, T. We're seeing that as well. A day in the life is I'm the luckiest guy on the planet, I believe. And this morning, super early call with a major player in the UK. Into the office with another call with a major player in Hollywood. Lunch with one of the most important banking and fintech companies in the world. In between those, 3 or 4 different calls with startups that are looking to get on our platform and then want introductions to those enterprises. To Lucas's points, the enterprises aren't going to disintermediate themselves. They're going to need help, and the ones that are the most aggressive and most surgical almost, as opposed to saying, okay, I have a CTO, I have a CISO, and I have a budget of umpteen billion dollars to do Gen AI. There's some kind of, you have to be sequential about it. It has to be right, because security and maturity for these products is paramount. These are all Fortune 100 companies that we all depend on every single day. I think as they lean on Gen AI and they lean on Gen AI through some of the startups that we take to their office, or we have the startups come to our office and bring in some of the enterprises. That's where a well-funded startup with the right product at the right time and with just a little bit of an introduction, they go from a number, eventually they go to a verb. They're just startup number 1,429 versus, they were able to get into the system with one of the biggest healthcare providers. They were able to do the drug discovery or device recognition. These are the little particles that get accelerated all day long. And we are just so happy that we get to witness some of them, and then we get to orchestrate some of the, some of the collisions in the good sense of the word.
Absolutely. Absolutely. And I saw Howard Code like shaking his head. What are your thoughts there?
Yeah, look, I think to Lucas's point, part of the problem is that the value, I think a lot of look, there's a lot of false starts in this kind of automating. Like, I remember when chatbots like was supposed to revolutionize like everything, right? Like everybody will no longer need to speak to anybody, right? And the chatbot itself will take over the world, right? Part of it is just the accuracy of the information set, and it's still. Look, some of the Gen AI is great for waxing poetic, right? Because there is no absoluteness to the answer that's required, right? It just needs to be like 80% there and you're good to go. And then 20%, whether it's like hallucinogenic or just wrong, it doesn't really matter, right? Type of thing. But in enterprise, even being 5% off is 5% off, right? And for something that needs to be, back in the day, 5.9 carrier grade, right? When when you can't be wrong, right? One out of every 100,000, you need to be like at 1 out of 100,000 times, but like, can you be at 98, 99% for a lot of the enterprise application sets, right? Like if you're being a doctor, being wrong 5% of the time is a problem,
Yeah.
right? Type of thing in terms of diagnosis, right? And so things like that is going to still take some time. So I think I think AI is great for certain applications today. It's not quite there for all applications, and every application set is going to go through its paces, right? In terms of kind of the efficacy, the data sets that's required to actually really be able to kind of pull out all the knowledge sets and the true utility values kind of out of them. But it's going to come, right? I think it's not a matter of if, but more of a matter of when, right? I think the challenge is going to be whether or not we get into this trough of disillusionment along the way, and everybody's like, well, I've tried this before. I got burned 3 times, 5 times, 7 times. So now the next sales cycle is going to be that much longer, right? I've already spent my budget. I got burned. Now you got to prove to me why this time it works, right? I think that's going to be the more interesting kind of question if we get into that kind of cycle, if we do get into it. But inevitably, it always ends up going into that type of cycle anyways, right? That happened multiple times, whether it's the internet, whether it's SaaS, whether it's cloud, whatever the case may be. All of them went through that, like kind of those waves and cycles. It's just you're hoping that it's not as prolonged, right? People iterate hopefully faster because they're forced to, right? Like, these to your point about these Fortune 1000 companies, if they don't do anything, they're no longer to be Fortune 1000 companies. So it's a hopefully the existential risk of it, right, propels people to keep trying and keep going at it versus going, all right, once burned, twice shy. Hopefully it's maybe once burned, I'll try it again before I become twice shy, right? Type of thing. But that's sort of how we're seeing the landscape. But look, it's really providing a lot of value already in certain application sets, right? People are reducing workforces already, kind of because of it. Because for certain applications, it's great, right? But still got a ways to go. I think if people expect this is going to be AI is going to know everything about everything, and it's going to be 100% accurate for anything that you ask it today. It's just not there, right? It's not quite there yet, but you shouldn't expect that to be there, right? Except for the hype makes you sometimes think that's already there.
Exactly. It reminds me of a few years, probably over a decade ago. I used to work for a large bank, and there was a big discussion if we should adopt cloud for customer sensitive information. And we were one of the latest banks to do so. But right now with AI, we already have large banks like JP Morgan hiring a lot of engineers to build their AI infrastructure to them. So even on this other study that we were referencing before, there was a discussion about building house or outsource. And I think we all believe here that the startup outsourcing component of it is going to be
You're excited?
Key for the development of this ecosystem, right?
Yeah.
I see some heads shaking. Good. Okay.
I feel like I should go to the gym
Is
today.
there any, just another question on that. Is there any other opportunities that you think AI is going to create, maybe open doors for new industries?
What have you been up to?
Back in the day with SaaS, for example, we were able to increase the pie of the total market. Now, do you think that we can expand that market as well with AI?
Crazy.
Expand, yes. Create, I think some of these things were going to be created organically with or without Gen AI. But I go back to the word to accelerate, the speed of light, and improve the efficacy across these. We're often asked, which vertical do we think is going to move the quickest? So I have no idea, but we have a front row seat and the popcorn is ready. And look what's going on with robotics.
What are you saying?
Look what's going on with autonomous vehicles. Look what's going on with fintech, healthcare. I'm probably most excited about some of the early signs that, Lucas was talking about this, with some early signs in healthcare life science. Just imagine if we could eradicate some of these childhood diseases that have plagued every country of every city, of every part of the world. And that gives us the chance to be, think inspirationally and not just transactionally. Yes, folks are going to make plenty of money in the process, but if we're able to significantly improve these verticals and do it quicker than any other technology inflection point in the
Why do you
history
say
of
that?
humankind, well, I think we
I look
consider
sad.
ourselves all very fortunate. And then the ones that are going to win, guess what, team?
Maybe it's because I've got a headache and I've been working all
Never
day.
loses ever. Howard Coe is going to pick some. You're going to pick some.
If I look sad now, I must have looked depressed on
We're going to invest
stream
in some,
because I definitely feel like I've been
the
looking
cream
sadder on
eventually
stream all day.
always rises to the top.
Yeah, absolutely. I think now then, like
I
the
just had a
conversation
headache
shifts
this
to
entire
actually
stream for the
using
past 8.5
AI to the
hours.
better
I've
good
had
of
just
society as well, and for
a
the
headache.
existence of human beings. I keep saying this, like
And I've
AI is
gone
going to
through
change the
so many
way that we
tissues.
live. It's going to change the way that we interact with each other. It's going to change the way that we communicate. But then, like that's kind of a reflection of where the stock market is today.
Yeah.
I was literally just watching the stock market, and I mean,
I can talk
I
now.
used to be in the capital markets before, and all the top companies, they are like this large enterprises, big techs, biopharmas, but there's no
Yeah, I'm down. What do you want to watch?
vertical SaaS for legal. There's no, like there's
I
not
can
that
push
different
this
specialized. There's
data
no
room
companies
stuff
like
that I got to
Lovable
do
there.
till tomorrow.
So is that one of the
I
routes?
do have
Do you
to.
think that there's going to be this
I
shift?
do have like
on
another
the
2 hours
largest
of work that I
companies
need to get
in
done today.
in the US, for example, to replace legacy companies, or do you think those companies will remain private for longer?
I think I've gone through like 9 protein shakes.
Will they need to go public with like billions of dollars in revenue?
No, I defer to the
I
VCs
know, 'cause I'm
on
not hungry.
the
I don't think I could
on the
eat
dais
solid
here.
food right now.
Go for it, Howard.
But I need my protein.
Look, investors need to exit at some point. Yes, secondaries markets are a lot more available now. Like, I think SpaceX has effectively made that
I had
like
2
a
before
thing.
getting on
Like every
stream.
year, like
Then I had.
there is certainty around being
I
liquid
honestly think
on
I've
private
had
stock.
like
But maybe
7
they
on
might be
stream.
kind of a bit more of an exception because Elon doesn't have to sell, or Elon doesn't have to have a full exit for himself
Including this one.
to be extremely kind of well off. But look, I think there's going to be, I think, an interesting shift. I think to your point about the pie, I think this goes into that
Yeah,
pie
I don't want to
question,
lose
which
my
is,
muscle. I also didn't really
it's
lift
probably
while I
more
was
of
on the
a
ranch.
shift of kind of where the market cap, right, kind of is going to be, right? And it's funny, in COVID,
Yeah, we did
all of a sudden
yoga.
technology
Didn't
became
lift weights.
a much bigger piece of the overall.
I did yoga with her twice,
kind of market
actually.
cap of the
I feel like she was so
overall
happy that we
S&P
were all
500 or
there.
the Nasdaq or New York Stock Exchange. I think that shift will continue to expand much more so, right? I think in terms of kind of how much revenue is being effectively impacted by the technology side versus call it the human
looks
labor
delicious.
side kind of things. And I think Howard had touched upon whether it's robotics, automation, or whatever the case may be. You have lines there from AI, right? Kind of from autonomous kind of processing.
Have you hung out with anyone else
and
since you've been
whatnot.
back?
So I think the
Seattle?
technology kind of piece of it, from a total value standpoint, is probably going to expand from that pie perspective, where technology, 30 years ago was probably paled in comparison to oil and gas, right? Type of thing, right? Now, what I think the 3 or 4 largest companies in the world are all technology companies, right? The only companies that are worth $1 trillion plus is all technology companies, and it's overweight. So that overweight will probably, I think, expand even more so as we get into this AI kind of cycle, right? So there's probably from a tech investment side, I think that'll expand the market, but it's going to be interesting to see how that impacts kind of the traditional industries. Because look, we still need to generate electricity, right, to power all of AI, right? There still needs to be physical infrastructure in place to be able to do that. You still need to like either lay fiber for fiber optics or send satellite stuff for the fiberless optics or kind of microwave to actually communicate, right? So there is still foundational layers that
You talk to that dog like it's like a
happen.
little
Now the
top, like
question
a
is
little
really
like
where the value
kindergartner.
extraction kind of
You
piece
talk
of it kind of
to
comes
you
into
legitimately
play. And I
talk.
think that is
If someone had overheard
part
what
for
you just
like
said,
us as
they would
technology investors
legitimately think that you were
I'm sure the
talking to a
founders
kindergartner.
from a technology kind of startup founder standpoint. That's probably the more interesting kind of aspect to it.
Yeah, you legitimately
great
talk to
answer.
that dog as if
Seriously,
it's a little child.
do you think there's any end
And it makes it even more
opportunities
so
for
because its
this
name's
AI
Henry.
revolution?
So you're like, Henry, I don't appreciate how you're doing this right
Tapped.
now. You're going to have to go outside if you keep barking.
Untapped.
Untapped.
Uncapped, right? Uncapped or uncapped?
Untapped. Like, is there any area that AI hasn't touched yet that it could be an opportunity? And I apologize for my Brazilian accent.
Yeah. I mean,
I
don't even think a kid would
we're in the
understand
first
some
inning.
of the things
Like
you're saying.
it just about everywhere. We don't know a lot of time what's going to end up shaking out. We've seen a couple of huge wins already out of some of the areas, but I mean, we're at the starting line right now. In kind of my view, there's a lot that's going to end up coming out of this, especially as whether the models get better or the FSC gets better in smaller stuff that they're doing. Yeah, I mean, we're at step one right now, and that's why this is so exciting, right? Because we don't necessarily know where it's going to end up going.
Yeah.
Yeah. No, there could not be a better time to look at tech right now.
By the way, I agree with that. I think part of this is also the infrastructure. This next wave of infrastructure build from a ubiquitous connectivity piece of it, and from the semiconductor side, right? We haven't had any innovation on the semiconductor side or the networking communication side for almost 20 years, right? And you're starting to see that because we are pushing the limits and the boundaries of what
Also,
current
as a heads up, you're in
from
my
a physical
AirPods, so
infrastructure
no one can even
perspective.
hear you. But
And whether like
this is,
and
I'm in
the
a
satellite
meeting right now,
constellation
and this is like
an
a
example of
private
just
meeting.
the
So Lucas is in it,
revolution and
then
evolution of
T, she's another
telecommunication
partner, and
connectivity,
then someone
right?
from NVIDIA
All of
and
that
this other
still is
fund.
still fairly nascent if you think about it. So as I think
No,
the infrastructure
one can hear
improves
you.
alongside kind of the models, right?
Yeah, no one can
the
hear you.
application layer on the software side. It reminds me back in the day
because
when
I'm streaming.
Intel and
I'm streaming
Microsoft,
right now,
Intel
but you're in my
makes
AirPod.
ever increasing powerful chips. Microsoft delivers ever increasing powerful OS software.
I don't
right?
know.
It almost feels like we're back in that where infrastructure is now like doing a kind of tit for tat. Like as infrastructure capability increases, you can do more.
A private Zoom link.
Kind of on the software layer and the application layer, right? It's almost back.
But it's like a pitch competition, and Hans is actually going to be pitching.
And so, like, I think there's a lot of room to kind of grow, and probably because of that, because we are still very early in the innings, right? And Howard over there, NVIDIA is obviously like kind of leading the charge on a lot of that stuff, right? And I'm sure there's a product roadmap that's probably a decade, 2 decades in the making.
There are 24
that's
people.
Going to revolutionize everything, right? Like from nanobots to God knows what else with NVIDIA GPUs, right? Type of thing. So I still think we're a long way.
And they can't hear me. I'm not a panelist.
For this kind of evolution.
The only people who can hear me are the 24 people watching, but they can't hear you because you're my AirPod.
I'm really looking forward
and they're also listening to this presentation.
Public companies 10Ks and 10Qs to see their expenditure in CapEx because it's going to be an amazing infrastructure, data centers that they have to build. So this is going to be like a good indication that they're preparing themselves for AI. Let me switch things over. We're almost at time, so I really appreciate. There's one question over here that we got from the audience. So looking forward to hearing about AI-enabled value pricing, add-in bundling to SaaS models.
Kind of different.
And the challenges to compute cost, outcomes, and margins. Example, Salesforce repriced 3x in 2025 to date.
I'm not necessarily sure what the question is. I don't know how you guys feel. I feel like a lot of the industry from a business model perspective has settled on the typical SaaS fee and with usage. Is typically what we're seeing from a business model perspective, at least right now. And that it just goes up with more different tiers with more usage. I think that's, I hope that's some of the question. If not, feel free to either of you to jump in and save me.
Yeah. But the cost of computing, I think it's one of the biggest things for a lot of the companies, right? So how should they be addressing that? Because, or that eating their margins, and how do they get to that?
Does this guy look like The Rock?
That it actually makes sense for scalability.
Sure. So I'll take that one. In terms of,
did you hear about how The Rock lost a lot of weight?
there are lots of programs like ours at NVIDIA.
I just think
I
he's
used to
coming
work
off
at
steroids
AWS and ran that program as well.
because he was
There's
having all these
discounts,
cardiac problems from all the
there's
steroids.
grants. There's a number of ways to unburden your cap table or your burn rate.
Well, he looks more like him
deals that are
now. If
struck
you look
sometimes
at,
with the VCs
I'm
directly,
going to pull up a
with
picture of The Rock so you can see what he looks like now.
clusters to allow
What?
research. There's compute on campus a lot.
No,
There's
I'm
lots of
not.
ways
You got to
as
see the new Rock.
opposed to paying full retail price out of the gate.
Yes.
And I think you just have to
All right,
tap
here's a recent
into the
picture of The Rock.
networks, plural.
Oh, wait, whoops.
It's yours with Pegasus. It's Howard's. It's mine.
Are you
It's
ready?
CSPs. It's the NCPs that are coming online. There are plenty of folks that want you to sip
right.
the champagne of
Do
their
you see 'em?
compute and see if you were going to be a
All
long-term
right,
customer.
3, 2, 1.
It is expensive, but it is not a barrier to entry at all. And I think folks should take advantage of the programs that already
3.
exist and the accelerators that already exist
What?
from the CSPs and tech companies like ourselves.
Yeah, so this is The Rock.
Absolutely. So take
this is
advantage
him.
of this ecosystem that we're building over here,
I think they look alike.
right? Howard, Lucas, any thoughts on that as well from the perspective of the investor side? How can not only invest in companies but guide companies to go for that?
Look, unit economics is going to be, I think, something that people are going to have to deal with. I think a lot of times, frankly, even early on, Howard, you probably know this because you're at AWS, right?
Maybe I will.
Compute like AWS was doling out very cheaply, right? Got people basically hooked on it, right? And then basically shifted to it. Now, the problem is that, AWS, Azure, or GCP is no longer free anymore or heavily subsidized anymore. So I think people have gotten smarter about how to use and when to use to minimize kind of impact on cost. Because, we were looking at some startups where AWS cost or the cloud cost was nearly 30%.
That looks so delicious.
Of their cost of the cost of goods sold, right? And that's quite a lot, and that was just it. Forget everything else, right? And so you had to be much smarter about how you were going to kind of utilize that, right?
I just realized I've got
this is not free. AI is not going to be free, right? Funnily enough, AI from the front has actually charged people to actually do the compute. Right now, on the consumer side, you're not seeing that kind of as much. But from the business side, you're actually starting to pay upfront. Even the consumer side, like complexity, you're paying a monthly, whatever, a ChatGPT, you're paying a monthly for
I think he's more
a more
interested
premium
in being
service.
my CTO, but I don't.
But that was unheard of before, right? Like now, the question then becomes, is that going to go away after a while, or will people kind of keep paying for it? Right, type of thing.
I'm just taking the meeting.
And if you need always the newest, best, most robust models, you'll probably end up having to pay a premium. The question then becomes like, hey, maybe I don't need GPT-5, right? Maybe all I need was kind of the older generation or the smaller models because they're just as good now for my purpose, right? And so there's going to be cost optimization that's going to kind of need to happen, and most likely that's going to shake out over the next, hopefully, months to years, right? Type of thing. I remember when storage costs were going to be the biggest issue that people had, right? And then storage costs basically became like nothing, right? Like, storing,
this has been such a long
data
stream.
No longer was a massive challenge where you're paying millions of dollars kind of for it, right? It became literally pennies, right? On a per day basis, right? Type of stuff. So hopefully that is going to get equalized out as everybody's building data centers and compute, and hopefully actually that actually kind of spurs that race to the bottom, which actually helps the users of it. I'm not sure it helps the guys who's building the data centers of it, kind of all that much, at least from a business economic standpoint, if they're just predicated on selling the GPU clusters or cycles, right? But if they have their own underlying models like Gemini and Facebook's Llama, they have other uses for, like Amazon had other uses for AWS, right? Kind of internally. So it's going to be really interesting to see, but it's going to be an issue. I think people are going to have to really think about when to actually use kind of the foundational models, because it actually is a cost, right? And how often do they need to actually kind of ping it do you
What do
have
you
to be
mean?
more
Yesterday?
optimized or more efficient, efficiently use those models when you need it?
I called
That's
you
where
right
like
before I
the
went to
small
bed.
language model becomes more interesting. The localized compute becomes more interesting, right? Edge compute becomes more interesting, right? And all of that is going to be much more of a holistic system, kind of system approach to it versus just I'm going to query every damn thing to GPT. That's going to be hard, right? You know, from a unit economics standpoint, I think if that's going to be your like overriding model.
Yeah,
that
those
you work with.
reserved instances are going to be much more important over time. And you don't turn the faucet on for several months at a time. You just turn it on for 15 minutes or 15 seconds or 15 days. That flexibility and those business models are becoming much more popular than the traditional sign up for a multi-year commitment of tens of millions or hundreds of millions of dollars.
That's great answers. Just because of time, and we have a little bit more
you just
questions
asked to do
around
7 times.
valuation skyrocketing and how we
Should I just
see
cancel
that,
the call?
data centers versus outsourcing, how AI could affect the size pricing model. There's a lot of questions, but I actually want to address one because giving back a little bit, right? Kaden over here asked, as a recent graduate student, what should we focus on building or upskilling on to prepare for the future?
Critical thinking. I mean, that's good. That's how do you use these applications, right? The technology that is out there. How are you thinking about something that or approaching a problem differently than the way that it has been done before, the way that that's been agreed upon. So to me, critical thinking is going to be the most useful skill.
I've seen Hans's pitch
trying
like
to
3
upskill
times.
in general.
Jensen often says,
Actually, maybe
Gen
4
AI is not
times
going to take your job, but somebody who is fluent and understands how to operate, leverage, and empower Gen AI, that person will probably take your job. So the fluency, the proximity, the understanding.
Well, you know the backstory,
from the
right?
surface level. Again, not talking about the
Daughter.
PhDs to go behind and up under the metal, but the language of it all and how to orchestrate that through prompts and through the combination of agentic AI and the world around us. That's really important for young students to do and old guys like me to do as well.
Bumble CEO says they're
That's why
planning
you're
an
not going to go
AI-powered
get that
matchmaking
PhD. With that, I want to give a huge thank you for the 3 of you. This was an amazing discussion. So I really appreciate all the candor and the sharp insights that you guys brought to this. I mean, we know that AI is moving fast. So dialogues like this, it's not only important for us investors and for big tech companies, but also for the founders, right? So they can navigate what is noise, spot opportunities, and really build, hopefully, with intention. So thank you. I appreciate you guys. Now we are going to transition to the second part of this of tonight, which is going to be the finalists pitching. So yes, look at the excitement. All right, so the first pitch, and I've been looking for Tom, but I cannot find Tom here, so I do not know. And I already emailed him.
There he
so
is. He said his
it's
under Thomas.
Thomas. Thank you, Thomas. I was looking for Tom. I'm going to promote you as a panelist right now. You just got promoted. So while Tom joins us, just a reminder for everyone that it's a 5-minute pitch with 5-minute Q&A from the judges. And just to give a background, Zentos Energy is the company that Tom is going to be presenting, and he will show how advanced aluminum batteries are powering the future of AI-driven energy grids and data centers. So look how timely this presentation is based of all the conversation that we just had. So Tom, give me 1 second. I know that you're ready to go, but I just want to make sure that I remove everyone's pin.
See how his
and
pitch
you become the spotlight for the presentation. All right, you should be good to go, Tom.
The one problem is you
My
can't
name
hear
is
him.
Tom Chepikavich. I'm the co-founder and CEO of Xanthos Energy. We are creating a safe, sustainable, and cost-efficient alternative to lithium batteries.
Wait, I can't even see him.
The energy storage challenge today is complex supply chains,
Oh, well, he's
high cost
talking.
of critical
He's pitching.
minerals, and flammability. You're all probably familiar with the Moss Landing fire.
Oh, there he is.
We've developed an aluminum battery that's not flammable, very low cost, and 100% domestically sourced. We're targeting long duration energy storage, 8 to 10 hour plus. And we also have interest from aerospace and drone markets. So our battery is an industry first in rechargeability, over 97% voltage efficiency. Aluminum is inert, very safe, and it performs from -40 to 125 degrees Celsius. And we actually got a report today verifying.
Maybe it's nitpicky, but I feel like it makes such a difference when you have like a nice background in photo, you know?
Battery, long duration battery is a metal gas battery, a CO2.
I guess his setup's
so
okay.
it's in a cylinder that's modular. That
it's not pro. It's not pro like ours.
Gigawatt plus.
Look at this.
And so we believe it'll go up to 10,000 cycles. We're in the range of 5,000, and it actually utilizes carbon and eventually could be a carbon capture device. We have a memorandum of understanding with Rocket Lab, and they are interested in our second battery, the aluminum ion battery. It's not a gas battery. It's somewhat similar to a capacitor, very high power, very lightweight, very safe, and radiation resistant and very durable.
Yeah.
The third product is aluminum air batteries. We believe we're the first in the market to be able to recharge an aluminum air battery. It has theoretical limits in the range of diesel fuel for energy. So we've been cycling at 500 to 700 watt hours per kilogram, and we topped out at 900. A Tesla runs at 260 watt hours per kilogram for reference. So we believe we can 4x the flight time of a drone. We have a partnership with a drone company right now. So to the competitors, in particular in the long duration energy storage, we have a very high energy round trip efficiency. We're at about 97%. Form Energy is one of our key competitors. They're at about 50% round trip efficiency. And that means how much energy you can get back out of a battery from what you put in.
They've got a better battery.
And so we're very competitive on the temperature ranges, very safe.
That's what they do.
We believe we can get to 12 cents a kilowatt hour levelized cost with our high round trip efficiency and low cost of materials. Market right now around 30 billion for long duration storage. McKinsey thinks it's going to hit 1 to 3 trillion.
Big market.
40.
A lot of batteries
are more and more used in warfare, and the demand will be there, as will space. We have letters of intent with one of the largest EPCs engineering firms.
He does have some good contracts.
We have a partnership with Drone Sentinel, an MOU with Rocket Lab, and we're underway planning an edge data center with the Department of Defense. We've got 10 patents filed with 1 granted.
It looks like they've got
team's
some
very
patents.
strong. Gunjan Agarwal came on board recently. She was at Tesla and Rivian, and then recently built a 50 megawatt hour plant for International Battery in Korea. She's got a PhD in mechanical engineering.
Yeah, he's got a pretty solid.
Sim's got turnaround experience. Dr. Fetro wrote the patents, and I have battery supply chain experience. We are within 6 months of closing our seed. We'll be delivering our first modular batteries. And we hope to finish the edge data center and our other pilots within the next year or two. So, beyond that, we'll be developing the markets and really focusing on
honestly
the most profitable sectors. We
seems
also
like a solid business.
licensing agreements and maintenance and service.
Seems like they're
revenue.
making.
And if we get to the carbon capture, the battery will actually pay for itself, and we can trade on the carbon markets. And we actually have a partner that can turn this concentrated CO2 into graphite. And so with that, we are raising a $4 million seed. That'll get us to deliver our LOIs with GridWorks, New Mexico State University, the Edge Data Center for the military, and we'll build from there. We're going to build a little pilot line. And with that, I will stop for questions.
That was right on the dot. Well done. Thank you, Thomas.
That was great, Thomas. We want you to be a part of our Inception program. I'm going to send you a note after this. The question I had was, it seems like you're going smaller and bigger, how much smaller and how much bigger could you get
What does
in
Dwayne
terms
The
of,
Rock Johnson think?
supplying these AI factories, and then on the other side of the coin, which is drones and really small devices that have interoperability and need this type of battery?
Yeah, so there is some overlap with our aluminum air and our aluminum CO2, the metal gas. So the aluminum CO2 is the large stationary storage, and the aluminum air is small for drones, but it can scale to power planes. We believe it's the ideal battery for aviation. So there is a lot of overlap between the two metal gas.
I feel like I'm giving this dude free marketing
Excellent.
over here.
Thank you.
Quick question. I've seen God knows how many battery technologies kind of over the years.
Yeah.
One of the biggest challenges for any battery technology is the manufacturability kind of it. How to get it from basically bench to mass, right? Mass production, right? How much work have you guys done on the manufacturability kind of your battery, right? What type of processes does it require? Are you standing up your own facility, or is there an existing kind of partner you might be able to work with on?
I'm considering hitting the gym just because it's
Yeah, so we've done quite a bit. We've worked with the Battery Innovation Center in Indiana, refining our manufacturing processes. Dr. Agarwal came on 4 months ago and has filed patents around sonication manufacturing process through NYSERDA in New York. We've worked with Kodak on their coating, and actually the cylinders can be manufactured by any CNC shop. So it's actually a much simpler battery than lithium to manufacture. We've got patents filed on the process. We will pursue as much automation as we can, and we've got Kodak, BIC, and a couple others as partners.
How large have you, like, what size, what types of, I guess what size of battery have you guys kind of already made, or you just tested different components of it so far?
Yeah, so we're just under an amp hour that we delivered to Sandia National Lab. And we believe, we could scale it up pretty quickly by adding stacks. We've got some new catalysts and looking at perfidic foam to increase the capacity. So the biggest one we've made so far is just under an amp hour that went to Sandia.
Okay. Any restriction on voltage?
Voltage is around, it's lower than lithium, but we've solved it with the battery management system. It's we're at 1. We believe we can definitely get it to 2 and eventually to 3 volts. So it is lower than lithium.
Okay. Thank you.
I guess the final question for me is, why go after all 3 markets? Is there a risk in going after the different product sets and not starting with one as kind of a beachhead to prove out specifically what you're looking for and then expand into the others? Or what is your thought process for trying to execute on the different
Henry tired you out? You don't want a dog in
Yes,
there?
so we've had, over 6 years of research, including at the University of New Mexico, where the research started on the CO2, the aluminum CO2 battery. So we've developed quite a few relationships in stationary storage, EPCs in the data centers. However, one of our advisors introduced us to Rocket Lab.
Get mentally prepared.
So they started taking heavy interest, and we weren't going to turn them away. Right now, they're not really diverting a lot of time. CO2, we will deliver that to the military data center and the pilots as a priority. And then the drone work, we've been approached by so many on that, and our postdoc just made the breakthrough on the round trip efficiency. And so it is quite similar, the aluminum air to aluminum CO2, the electrolyte and everything about it. But we have put the bulk of our focus into the stationary storage, depending on the checks Rocket Lab likes to do, and they actually like to vertically integrate and acquire small companies. That's why we're giving them attention, as well as the drone companies.
Awesome. Thanks so much, and congrats on the progress so far.
Awesome. Thank you, Tom. That was an amazing presentation. Really well done. Great questions as well.
Later.
I will gonna move forward now to the next one. But while Igor sets up, judges, you have a couple of minutes to go over the scoring.
But
All right. If you don't have the scoring, I will be DMing you right here. All right. There we go. 1 score sent. 2.
Thank you.
Of course.
I saw the email.
It was in the email. So
I know.
there's a couple of things on top of the fifth one. The scoring is the most important.
Hey, how's it going?
So while
Can you hear me? Is this Scott?
Igor to present a party.
All right, awesome. I wasn't sure it said
Actually,
Hunter,
a solution
but I was
that
just
I
guessing
wish
that it
existed
was.
back in, I'm going to say, oh my God, almost 10 years ago when I was going through my own divorce. So I appreciate what you're building.
Hi, everyone. Can you see my screen?
Yeah.
Yes. Before we start, judges, are we ready? Okay, good. The floor is yours.
Hi, everyone. My name is Igor. I am CEO and co-founder of Aparty. I have more than 15 years of entrepreneurship and international business development experience. I built venture-backed startups before, have one exit. And today I want to share with you something that we at Aparty know personally. Divorce sucks. It's painful when you start this process. You need to figure out who's getting assets, who's getting cats, dogs, all this kind of stuff. And going through this process ourselves, we'll learn every detail and every aspect of it. And we know how it is frustrating for us, but what we learned that it is extremely frustrating for lawyers as well. They're just refiling same documents again and again. They need to engage and do a lot of admin work with their clients that they cannot charge all the time for. And when there are multiple lawyers involved in the process, they just use different fragmented tools that are very hard to merge together to manage the process. And so when I faced it myself, and it felt like a pain on top of pain for me, my lawyer, and everyone involved, I immediately reached out to my fantastic co-founder, Anna, who has more than 15 years of experience building and leading products in Fortune 500 companies like Thomson Reuters, YC-backed unicorns. And she actually told me about this idea around 2 years ago when our third co-founder, amazing Ingrid, who was one of first engineers at Uber building their infrastructure, worked at Netflix and Chime, started going through her divorce process. She already spent over $300,000 on her divorce herself. And we got together and we decided that we're going to build a platform that's going to replace old fragmented tools for family lawyers. We're going to build an operational system for family law firms, Aparty. And our product includes a conversational empathetic AI bot that collects case data in approximately like around an hour rather than 10 hours that's spread on going back and forth with the client. And it's usually like around a month. And with our design partners, we calculated that just this part unlocks over $140,000 in potential annual revenue for lawyers. But what's our real differentiator is the asset division engine, helping to collect assets and information. And our model that we're building on top of it was 140,000 California divorce cases. Plus, we're enriching it with proprietary data from our design partners, family lawyers, to give a better extra layers of accuracy and security to it. It lets family law firms to bring revenue that they're usually outsourcing to accountants back to their practice, help to save money for their clients, and also to have a different scenarios of the outcomes of the divorce. We're targeting a $50 billion family law market with our wedge and the first step as divorce is $15 billion. We charge $500 per 5 cases managed through our system. Every extra case is an extra $100. There are over 200,000 family law professionals in the United States, and with classic 10% penetration, we can get over $120 million within the next 3 to 5 years. We have competitors. There are companies like Marble or Hello Divorce or Divorce.com, which are more like slightly tech-enabled law firms right now, and more horizontal solution that trying to cover all parts of law, like case management system like Clio or MyCase. In Aparty, we're laser focused on a very specific vertical niche family law and asset division. We already have design partners who are members of San Francisco Bar Association. We're hosting events together. we're being selected by CEF Tech Week to host the legal tech event, where we're bringing together legal tech professionals and family lawyers. We already have 9 design partners who are board members of different bar associations across the country, and they're not only help us to shape the product and test it with us, they also became investors in our company as well. We're backed by Antler. We have Altair, SBC. We have fantastic ML engineers from Cursor and Snapchat backing us. And we also part of NVIDIA Inception program, Howard. And we raising $1 million. We're already closed half of this, already signed, wired. And we also now being selected for startup Battlefield by TechCrunch. And we're going to pitch in October. And at a party, we believe that divorce, it's not the end. It's a fresh start for a fulfilling new chapter. I'm happy to answer your questions.
That's great, Igor. Good to see you. I'm glad that you recognize that you've joined Inception and you joined Microsoft for Startups, and there's other programs that could be additive. It's not one or the other. It's always better together. I always think of this as, if you could give me the analogy of, what Harvey has done, what would some of the lessons that you would learn from Harvey that you would do, and maybe some that you would not do? I know that you're carving off a different niche of the space, but still going into the legal market. They seem to have done some really important things. Any thoughts on that?
Yeah, absolutely. I think the major lesson that I think we all heard about Harvey is I think we need to be more mindful about guardrails and when we go in the legal space. And I think Howard, you mentioned about the healthcare space, that we cannot allow like mistakes. And in legal space, we also cannot have this like, you remember Harvey's case that they created fake cases, right? That was like a whole huge backlash from that. So the way we're building our tech is that we're fine-tuning the models the way we're doing this, and we're locking the model with our guardrails and enriching it with very specific data from our design partners. Okay. So yeah, I think that's the main thing in legal space, I believe, and for us. Yeah.
Igor, just a quick question. Kind of, is there any unique data set that you have access to be able to kind of do the asset kind of allocation, and or how do you actually ingest, and what type of data set? How can you make the ingestion of that maybe that data set much easier? Because it can be pretty messy, right? Whether people have a lot of assets, not a lot of assets. Part of the problem is actually identifying what assets there are, right? To actually kind of divvy up appropriately. Not that I've been through a process before, but so I hear. Type of thing. So people who have more experience than me can correct me if I'm wrong. But yeah, I think the data sets, I'm curious, kind of just kind of where are you getting it from a training perspective, and then as well as kind of for the ingestion kind of piece of it, is there opportunities to automate or make that more, less friction?
Yeah, just a little thing. That's the first company that I'm building that I'm saying that I wish nobody ever needed it, But when I went through it, like, so it's just crazy. Going back to what we're doing, we use 140,000 court cases from California as was what we're starting, right? It's public, but we uniquely structure it, cleaning it and the way we annotate it. Then I mentioned that we use the data from proprietary data from our design partners, the intake patterns, like the anonymized filings, settlement outcomes, negotiation notes, this kind of things, because there are multiple assets, and it's not in different scenario. Different divorce cases have different assets, right? Everybody has different things. So that's the way we're getting the data from our partners. I think eventually when we'll be able to digitalize more data from them, it's going to be easier to automate it. But family law is kind of on the edge of technology, and that actually gives us ability to have a very good network effects. When our one lawyer who's joining us immediately introducing us to 3 to 8, that's our record is eight other law firms, because they're kind of on the edge. But we have ability also because of my fantastic co-founders who have experience building infrastructure and API integrations. We have access to courts across the country, which allows us to get information from there through APIs, and including to be able to be multi-state compliant pretty fast.
Thank you.
Nice. We're at time. Thank you so much, Igor. That was a phenomenal presentation. So well done on what you're building. Congratulations on the progress.
Thank you.
Absolutely. All right. While we bring on the next speaker, Rez, we'll give a couple of minutes for the judges to do the scoring. And Igor, don't be offended, but I am going to bring you back to the audience.
No. Thank you, everyone. Fantastic.
Thanks, Igor.
Thanks.
Good.
Right. We have Raz here. Raz, thank you so much for joining us. Raz is from Phase Shift, and he's going to be introducing, this is going to be a mouthful for me, a meta-surface optics, making quantum and photonic AI systems more compact, faster, and energy efficient. Amazing. I so much look forward to your presentation, Raz. Let me pin you, and judges, are we ready? Awesome.
Thank you. So, hi everyone. My name is Resland, or most call me Rez, and I'm the co-founder and CEO of Phase Shift, where we are using meta-surface design and fabrication to really help scale the photonics and quantum sectors. So the real problem is that pretty much everyone thinks or says that quantum computing or the quantum industry is right around the corner and is going to change the world forever as we know it. But reality is a little bit further away from that. And what I mean by that is today's quantum systems look a lot like the image to the left. And that image to the left, if it looks very messy for everyone, that's because it is. And what it is a bunch of optics, lenses, mirrors, polarizers, you name it, everything that lasers go through, that all work in tandem to make current commercial quantum computers. That sounds great, but today's quantum computers have, say, 20 to 30 qubits that are actually useful. However, we need them to not be 20 qubits, but 20 million qubits. And we can't have that with systems like the picture on the left, because suddenly when these 1-inch optics get scaled to millions and millions of them, then our quantum computer will be the size of a skyscraper. So it's really not a scalable way, the way we're doing it now. What we do at Phase Shift is we use our expertise in meta surfaces, which is really just miniaturized versions, foundry manufacturable versions of lenses, polarizers, and filters. So they're nanophotonic elements that do the same things as the image on the left, except they're wafer manufacturable. So you could, in fact, have millions of these tiny elements or tiny components on a single wafer. So this is the problem we're trying to solve. And just as a note, if you hear lenses and filters and polarizers, you might think, what's so special about quantum? We acknowledge that very much so. Our current focus is quantum because that's our expertise. However, we know that there are future markets such as AR, VR, defense, data centers, etc., where this technology would be very, very impactful. But we're focusing on quantum because that's our expertise. And speaking of expertise, I'll speak a little bit about our team. So I have a PhD in photonics and metasurfaces from the City University of New York. And then I worked at Quantinuum at a quantum computing company. now I co-founded with my co-founder, Dr. Amit Agrawal, who's really one of the pioneers in metasurface and photonics technology as it pertains to quantum. And what I mean by one of the pioneers is that he's currently a professor at the University of Cambridge who is pushing forward this field, and he has almost 2 decades of experience in really starting this field fresh as a professor and scientist. And just a note, we have a couple of advisors, namely Rohit Shawarikar, who is more on the business side with almost 2 decades of experience in strategy, development, etc. And on the design side, we have Dr. Z Wang, who really pushes our AI
good.
design forward.
I don't think he's a fit for the CTO role,
we'll talk about
but
a little bit. And in this field, we have hundreds of publications, dozens of patents, etc., within the metasurface field as it pertains to quantum and beyond. And our partnership, we're in the East Coast. Our partnerships are really centered around the University of Maryland ecosystem. So we closely work at National Institute of Science and Technology, also at the UMD, University of Maryland Quantum Startup Foundry, and of course, as we're licensing patents from UMD and also University of Cambridge, we work closely with University of Cambridge as well as the Mid-Atlantic Quantum Alliance. Quickly, our IP really stems from two components. One is on the way we design these elements is really AI-powered design, which helps improve the performance of these elements. And what that means is you need less components for future systems. On top of that, the way we process these materials from a manufacturing standpoint is really enables us to push forward a quantum industry. And of course, as I mentioned, we have patents from UMD as well as Wisconsin and Cambridge, for which we're co-inventors of, that help with both the material side and the AI side. And we're really a brand new company, a couple of months, and so far we've had really about 70K of traction of projects. With ending this year, we expect end of year about 200K. And really, all of this is organic acquisition from people that know us from the industry, that trust our R&D capabilities to solve their problems. And the metasurface market opportunity, we have to keep in mind this is a very nascent field. It's very large, or semi-large, I guess. Its total addressable market is 33 billion, but really it's the growth rate that matters. So for both metasurface and quantum, it's really the growth that we're looking at. Currently, we're raising a 1.5 million round, 50% of which is secured through Unshackled Ventures. And the reason we're raising this round, this seed round, is simply for team expansion, and more importantly, step 2, which is the nano imprint tool, which really allows us to stamp and increase manufacturability and of these devices. Of course, product development and ground applications, patents, etc., being part of that. So thank you, and I welcome any questions regarding phase-shift metasurfaces.
Thank you, Rez. By the way, you had a couple of stuff on your slides covered, so we were not able. I think that was common. Yeah, and your voice went away a little bit at the end. But
okay. Oh my God. Okay.
Oh, you're back now. You're back now.
It happened again. Okay.
I'll go, Rez. This is wildly interesting, and I remember from my days at Intel, inverse lithography and all the specificity of the wafer and the whole thing. This is a huge problem to try to solve. And then you would eventually license this to Global Foundries or TSMC or to Intel or somebody, or tell me, I guess we're kind of talking about go to market. How do you get paid for all these years and all this work when you get it to the point where it's GA?
So there's really 2 approaches, as you one which you mentioned, of course, is go to Global Foundries, TSMC, etc. And we've had conversations with some foundries in both abroad and in the States, in Taiwan. The tricky part about go to market for these types of devices is that the material platforms that we are using, and that's kind of where our patent lies, those are unique. So TSMC or Global Foundries will have trouble, or will have to have, I guess, a big enough appetite to modify the current systems to do this.
Got it. Thank you.
And so, yeah.
Excellent.
So, quick question. So, I'm trying to better understand kind of who your customer is. Is it going to be like a PsiQuantum, right? Who's doing a photonics approach to quantum, right? There's a couple of companies, startups, early stage companies doing kind of a photonics based chip, right? Kind of on a processor side, not necessarily quantum, right? But a photonics based kind of effectively GPU, right? So would they effectively be customers and using kind of your effectively, this is kind of a replacement for optics or optic systems, right? Or module sets, right? It collapsed down into effectively a flat surface type of thing.
So there's a couple of comments. That's a great question. Yes, so companies like PsiQuantum, and there's plenty of photonic quantum companies. However, I'll make a note that there's plenty of quantum companies in general that aren't classified as photonics, but they use a bunch of lasers everywhere.
Yeah.
So they would automatically fall in this category. And on the other side, in terms of just replacing classical optics with flat optics, one thing that I haven't talked about pretty much at all here is that one of the things we're currently pushing is integrated metasurfaces. So they will be part of the integrated photonics stack on the same chip, on a different layer, on a different lithography layer. So these would be really part of the integrated photonics stack, helping with polarization, filtering, etc. Beyond just
so you would be like the classic, 20 years ago, you'd be considered an optical component, right?
Yes.
Type of thing, right? And whether I buy that, there's a bunch of optical component companies kind of back in the days, type of thing. But like this, you would be effectively the new age kind of supplier potentially of that. Because to your point, I think manufacturability side, I don't think anybody is doing metasurfaces kind of materials like, the Kymeta guys that you mentioned, right, was trying to do a bunch of that on phased array antenna, type of thing, right? And there's a couple of companies now doing phased array antennas, right? Kind of for it. But like, yeah, it's still a relatively new thing. So production volume isn't quite there. Do you have to do your own production, or is there anybody that you would partner up with that, partner for that?
So there's sort of a give and take for each side. If we partner up with someone, as I was mentioning to the other Howard, if we partner up with someone, there will be R&D involved. If we do it ourselves, there will be R&D involved
recording this
as well,
anyway.
even though it's far less because we kind of already know the process. But there will be R&D on the manufacturability side. So right now we're actually leaning towards doing it ourselves,
Looks like this meeting
simply because
goes
we can kind of control our own destiny and
next
control our
30
IP
minutes?
mode far better in that way.
Okay, thank
you. A lot
you.
of details there, as I'm sure you would figure.
Yeah, totally.
Nice. All right, we are at time. Great job. I mean, what are you building? It blows my mind. So thank you. I really appreciate it. That was a great presentation. So I will, again, don't take it personally. I will bring you back to the audience, and we are going to bring the next presenter, Hans. But while
Hans is going up.
judges, you have a couple of minutes to
Hans is about to go
fill
up.
out the survey.
Hans. I wish you could hear this. Hans.
Good. All right. Hans, I see that you're here, but I don't see your camera or mic. I will give. There we go. I'll just give a short intro. So Hans is building Avocado Health, and he will show how his AI and phenotype data engine delivers deeply personalized parenting support. Forget about Dr. Google. No more. Hans, the floor is yours.
All right, thank you. I'm Hans Kohlberg, CEO and co-founder of Avocado Health.
Hans.
Parent coach in your pocket. In this modern world, high-skilled industries from law to consulting, marketing, software engineering are swiftly being displaced by AI.
Look at that branding.
More efficient at routine tasks and pattern recognition. But what about parenting? Arguably the toughest job in the world. And no, I'm not suggesting throwing our babies to robots, and parenting is anything but routine. But there's no user manual. Pediatricians are busy.
Thank you for the sub.
Parents are stressed and burned out looking for answers. As a father of 5, I should know this firsthand. Before I continue, I'd like to introduce you to my daughter, Aviva. Aviva was born full term, fully healthy, and as third-time parents, we were overjoyed. But 2 weeks old, she woke up from a nap, lethargic, cold to the touch, and having trouble nursing. We brought her to the hospital where they spent 7 days doing a battery of tests, and we left without having the answers to her underlying diagnosis. Over the next 10 months, we were in and out of the hospital 6 different times, each time with dozens of doctors confounded, not understanding what was going on, leaving us frustrated and terrified. So where do parents actually go for these answers? Right now, they're going down the Dr. Google rabbit hole, ChatGPT, and Instagram influencers, all accessible, but with lots of misinformation. Ideally, they love to talk to their pediatrician, but it takes days and not weeks to just get in front of them, leaving a big gap between validated, evidence-based information and accessible information. Is there a reason? And that's where Avocado Health comes in, with expert vetted, clinically validated information with the right place, right time, but more importantly, in the right format via text messaging. The number one form of communication on the planet. It's like having a conversation with your best friend, who's also the most knowledgeable pediatrician, therapist, and parent coach that you know, able to answer those questions like, how do I get my kids
this hypothetical is gone too far.
Put my child to sleep at 2 a.m? Or does my child have autism, and what do I do about it? No question is too big or small for Avo. That also gives proactive parenting guidance along the life cycle of the hypotheticals. And we're a team of pediatric experts that not only have scaled and exited multiple companies, but more importantly, we've all been personally impacted by not having the right information at the right time for our own children. And we're deeply passionate about making sure that we're successful in solving this mission. And we're built to scale. We've curated a knowledge base of clinically validated data from centers of excellence.
All right, I think I need to hit the gym.
Minor medical
I think I got to close up the stream here.
Developmental, and everyday
give a little
issues.
Outro.
But we don't stop there. We actually reach out and guide that parent and practically help them understand what to expect next. But more importantly, we're building a proprietary database, such as what Ancestry.com did with genotype data and revolutionized the way that they collected that. We're revolutionizing the way that we're collecting phenotype data, specifically
I can't bail out on
of a child's development, leaving no more guessing and all facts.
But what's the cost Hans finish up his presentation?
From preventable ER visits to unaddressed developmental delays to loss in workplace productivity and societal challenges. This is a $1 trillion problem that's affecting just the US alone. And who's paying for that? Well, parents are paying $4 billion looking for the answers, but moreover, health plans, employers, states, locals, city governments are all spending roughly $200 billion every year searching for answers to solve this problem. And while parent coaching right now is $200 per hour, unaffordable for the masses, we're democratizing parent coaching at just $20 a month, pursuing a B to C to B strategy with initial validation focused around that, providing value to those parents while simultaneously winning contracts with employers who bear the burden of the cost of lost productivity, as well as mission-aligned parent advocacy orgs. And we're following a roadmap, the playbook from many successful digital health companies such as Headspace and Noom, providing values to consumers first, changing mindset and addressing behaviors, and then finally proving out business outcomes. And we've just incorporated this year, and we're already working with our first major client, Healthy Mothers, Healthy Babies of Hawaii, and their 5,000 families. We have a strong pipeline in the future. We've also just secured our first employer contract last month, and we're launching our B2C side next month with a target of 3,000 paid users by the end of the year. We're operating with a go-to-market flywheel approach where we're having a very cost-effective consumer acquisition, as well as growth hacking techniques with partnerships with micro-influencers and product-led growth. On the B2B side, we're pursuing scalable channels and partnerships with mission-aligned organizations. And our competitive advantage is clear. We're building a highly engaged, high impactful proprietary database to understand a child and their family's needs. And we're addressing the mental health care crisis, not at age 13, but from day zero, where we can help proactively predict challenges for the future, providing lifetime value for the family. And there are a number of companies out there competing in this space, but we stand out with having text messaging, anticipatory guidance, combined with human level support. We've already secured funding for the next 2 years. We're not currently raising, and we're operating on a very lean budget to really look at developing our market. We're having selective conversations with investors as we look ahead to the future. Returning to Aviva's story, unfortunately and tragically, Aviva passed away at the age of 10 months old in the hospital. To this day, we still don't have the answers to her diagnosis. And as I held my daughter for the very last time, I told her, Daddy doesn't know what happened, but I'm going to do everything I can to make sure no other parent has to feel that way. And that starts with getting them the answers they need. And that's my promise to my daughter. And our vision is to build the most trusted parenting platform on the planet, positively impacting 1 billion lives around the world. Thank you.
Wow. Thank you, Hans. I truly appreciate your story. It's beautiful, very well done presentation. And a man and a father on a mission, right, cannot be stopped. So very well done. Any questions?
I feel uniquely disqualified to ask you a couple silly questions, Hans, but I'm going to try. Just trying to catch my breath. That was inspirational. Is this in partnership eventually, or in competition with the United Health and the Kaiser and the Sharp, and I have UC Health? Is this app go up into my experience with my provider, or is this a completely separate than experience? What do you think?
Yeah. So with regards to the healthcare system and particularly carriers, there's lots of conflated alignments, I would say, in terms of what they want to see. One of the biggest catastrophic claims that they claim is really premature labor and premature births, which can cost millions of dollars, depending on how early that is. Proactive guidance, anticipatory guidance goes a long way, from preventative measures such as diet, exercise, also adherence to clinical visits. Who has a bigger stake and much more direct stake is really self-funded employers who are at the end of the day, they are paying the bills. Sure, United and the Cignas and Bucas of the world, but self-funded employers and most Fortune 500 companies probably before that.
Copy. Thank you.
Look, you always look for founders with, kind of founder market company fit, right? And you certainly, I think, nailed that on target there. One of the things I always look at from when we look at healthcare kind of oriented kind of companies is effectively kind of who pays for this, right? Because to some extent we have one of the most interesting, or you can argue broken, or certainly not well aligned system of health, right? Where we have a tri-party system where the guy who's getting care is not exactly, notionally the guy paying for care, or at least directly, right? And so everybody has been trying to kind of get to that self-funded guy with a new PMPM, right? A lot of these companies are inundated with new models that quote unquote save them X amount of money, and whatever the case may be. And ultimately they are bottom line oriented, right? This is an additional kind of benefit that they would have to offer as part of their, God knows, 30, 40, 50 different benefits that they're getting pitched kind of to every day. How do you separate how do you rise above the noise here? Like why this versus orthopedic? Why this versus, because at some point they have to choose, right? Because they can only stack so much offerings at some point that they're effectively either paying for or just making available, right? Type of thing. So how do you go about kind of clearing that noise floor for you guys?
Yeah, it's an excellent question, Howard. And to productivity in the workplace, from absenteeism, presenteeism, and retention, attrition, it is one of the biggest hidden costs that they don't understand and they don't realize. Why is that? Because it's very hard to measure. What is the impact? There's certainly a very long-term impact versus short-term, CFO level KPIs. But what we're talking about here in the proprietary data set, if you have kids, if you're a parent, you probably know roughly where your child stands percentile wise on physical height and weight. But you probably don't know where they stand. Maybe a 3-year-old stands on social, emotional, cognitive, language, movement. That's the percentile based kind of scoring measurement, what we're doing. All these milestones are super important because it gets in front of a lot of developmental delays. So if a speech delay isn't caught at 2 years old, that could actually cause anxiety, depression, and mental health issues later on. That falls on the government's dime. Normally city, state.
All right, guys, I am about to sign off here,
to reach their
but I'm glad that you guys had the opportunity to get the inside scoop here. I mean, this is unbelievable. You got to hear directly from Hans.
It really is the government.
Hans is a legend
as well.
Part of the Pegasus Accelerator with us.
But again,
this meeting actually is about to end.
Long run.
So I'm going to let Hans finish up, but after Hans finishes up, this is getting shut down.
And building that out, self-funded employers in the employer space, the government contracts, we have a way of actually identifying where there's actually, which governments are actually spending a lot of money at that very early day, because that has such a big.
I know that Hans is still going
in the long term, but whether governments focus on the long term or short term.
Where else do you get this level of commitment?
But
we have almost a 10-hour stream here. I've been sniffling all day.
Great. Thank you,
and
Hans.
we got you almost a 10-hour stream.
Really
of just
beautiful
pure
story.
value. Probably the most valuable content on the entire internet. I would dare say that.
We are at time, so Lucas, once again, I'm sorry, but I'm going to have to hold your questions.
I think Hans was actually the last one.
I know that we asked a bunch of questions. Hans, I will put you back on as an attendee, and we're going to bring up the last.
What do you think I should hit today, babe?
Founder to present, the last founder to pitch. While he joins, I'll just give a brief description, and while judges, you guys complete the scoring.
Back buys.
So where did it go? There we go. Daniel, I see you.
Back
perfect.
biceps.
All right. So Daniel from Niebla AI. He is building
this is
something
self-driving
that is kind of very interesting for me.
Business. Well,
Level
I would definitely
5
not like that.
autonomous driving powered by unsupervised AI that adapts to real-world edge
Wait, let me sign off the
in
stream.
real time.
All right, guys, this was
As a
amazing.
Tesla driver,
I hope you guys had a great time.
in many
We're
situations
going to end
where
this
I wish I
stream here.
wasn't.
Adios.
Judges, if we're ready,